the paper pattern that could be, sir. So there's a question number 2. Usually it's being asked as 14 marks question. Question number 3A and then question number 3B in direct taxation. Question number 4A and then question number 4B. And then there is like question number 5A and then question number 5B. And then question number 6A, question number 6B, question number 7A and then question number 7B. And at last we have even 8th question also, 8A, and even we have 8B. Sir, understand, okay, question number 2 till now from the past 5 attempts it's been a 14 marks question which is being asked majorly focused on PGBP. From a company perspective they are asking, so it's like assessment of companies related. Companies related. Okay. Yes, I too have seen the recent MTP questions. Okay, there was a slight change in the paper pattern, question number 2. But still, I believe like it's gonna happen like PGBP and assessment of companies only. But anyhow, trust related, there may be a question being asked. I mean, we have seen it in the mock test papers regarding the trust. Yes, the trust chapter also will cover towards the end. Okay, just to have to be on the safe side. Question number 2. Then 3A and 3B. So what is being asked under the question number 3 and 3AB, sir? Both these questions are related to tax planning, usually. Tax planning. 4A and 4B. 4A and 4B. So 4A is asked from advanced tax many a times, and whereas 4B is from appeals chapter. And then 5A is about business restructuring and 5B is about NR taxation, and 6A, 6B, 7A, 7B, all these together it could be DTAA or transfer pricing, and 8A could be any chapter, whereas 8B again will be what? Transfer pricing. Will be again transfer pricing. So now, sir, will the question which is being asked by many students is like, will it be the same paper pattern? Could we strongly believe like this paper pattern? Sir, what I think is like, if you prepare these chapters, okay, if you prepare these chapters, in worst case also, 4 questions you are gonna answer. 4 14 marks questions in worst case also. In worst case. Yes, there may be change. See, even in mock test paper also, this part they didn't touch. It was not even changed. Okay. That also in the mock test paper too. And here also the tax planning question remains same. Here the transfer pricing question again remains same. So even though there are here and there changes in the mock test paper too, but my strong prediction is like, because I have seen these kind of things in the IDT paper also previously, what I observed there is like, even though there are like mock test paper, they have been asking from a different questions, but in exam paper they are following the same kind of trend only. Okay, so usually, okay, they don't happen much kind of twists and turns. Okay, this is my strong feeling, because I have been doing this or seeing this from, because I studied CMA Inter in the 2012 syllabus. From there, 2012 syllabus I have seen, final 16 syllabus I have seen, even in 16 syllabus I have taken classes also. Then the 22 syllabus also I have seen. So every time, okay, once the paper pattern is set, okay, the examiner is not changing it frequently. I have not seen those kind of cases in the CMA level. Okay, but for a surprise, we can't see because these days many YouTube videos are coming, everybody is analyzing. If at all institute wants to make tough, maybe that 10%, 15% chance will always be there. Even in that first case also, all these chapters which we are discussing here are like having a compulsory 7 marks question. Okay, so you blindly you could follow this process. Okay, and then for the safe side also, I'm covering capital gains in the revision series, and additionally I said like I'll even discuss you trust chapter also in the revision series. So you need not to worry anything if you could follow the revision series. Okay, have faith towards BCCA, towards me. Okay, you trust us blindly. So what are the chapters we are going to discuss? Yes, the question may shuffle here and there. Okay, but ultimately our ultimate objective is to what, to clear. Okay, so that we can do. In any case we'll be getting like 70 to 80 marks easily. Okay, and I am starting this revision series with a name that every student who is watching these lectures, who is watching this revision series, should get a minimum of 55 marks. Okay, should get a minimum of 55 marks. Okay, so like that only we are going to cover certain areas. I'll go deep and discuss also. Okay, so what I am expecting from you, okay, what I'm expecting from you is like share this video with how much ever friends it's possible. Okay, all the your friends you can share this video because it will reach so many people, and then many students will get benefited from this. Okay, sir. So the first and foremost, sir, many times, and then one more point, sir, before going into the subject. If you have any doubts or if you want to contact me or if you want to get any clarification regarding direct taxes, you could join my Telegram group, sir. In Telegram, if you search for Tax Guru, if you search for Tax Guru, BCCA Tax Guru, then you'll find my Telegram group. Join in that. I'll give link also. Okay, you can join in that so that if at all if you post any query, I'll be replying. Okay, so from this month onwards, we'll always be active only. We'll be active only in the Telegram group. So we'll be responding to your messages and all. And not only for the DT, for SFM, there is a separate group. Law, Bhavya Madam, there is a separate Telegram group, and for SCM, Rajesh sir, there is a separate Telegram group. For me, for both DT and IDT together, there is only one Telegram group. You can post any of your queries. I'll be replying there. Okay. So first, many of us take it light, the basics chapter. But understand, sir, the basics chapters along with the tax rates and even deductions are key to any question. We don't know, sir, these two chapters will be linked at what point. They could be linked to an MCQ, they could be linked to any of the questions. But let me tell you where it is important also. Sir, if at all they ask about like assessment of company, 14 marks question under question number 2, there sometimes they are asking you to calculate tax, and there may be some deductions which are applicable to companies. Okay, this point. Then 3A and 3B, tax planning. There again, this basics tax rates and deductions are playing crucial role. Then 4A, there will be advanced tax. Again, advanced tax also, first we should calculate what tax. There again, these tax rates deductions plays a crucial role. Then 4B, okay, it's about appeals, not much relevant to the basics and deductions. Then 5A and 5B is about business restructuring. There also basics may not be much thing. NR taxation also, sir. Okay, to an extent. Okay, 5B, NR taxation, to a little extent, again these tax rates are relevant. And then 6A, they'll ask a question regarding DTA. There again, tax rates and deductions are placing crucial role. So you need to remember basics and tax rates and deductions. Understand, sir? Then one big problem, sir, I've seen, because if you are following the BCCA marathon, I mean BCCA YouTube channels and all, I've attended a Hyderabad face-to-face marathon session also recently. There many people came and contacted me. They showed their suggested, certified copies also. The mistake is like, it's not about you not knowing the concept at all. It's like you cannot remember certain points at the exam time. The problem is like, the problem is what? You cannot remember the points at the exam time. So what is the solution for it? The solution is like, I'll be linking these questions in a different ways now. Okay, I mean, if I whether you could recall those points or not, you need to understand. First one. Second thing, there is no other thing, sir, which can make sure like there's no capsule with me, there's no injection with me. Straight away, if you take it, you will remember everything. Okay, we don't have that things. So only thing is like, now if you have, or if you have any doubt about your conceptual clarity, listen to this once. Then most of the DT chapters requires more number of revisions. Okay, usually what is happening, sir? Everybody, okay, to the all the students, like final students, most of them I am seeing like they are writing both groups, sir. Writing both groups, and they are giving each subject 4 days or 5 days. Okay, so now each subject 5 days. Now let's say DT started first. They took 5 days and revised the whole concept. But then after all the 7 subjects they finish, and again they'll be coming back to DT once again. So with this approach, what is the problem happening here, sir? In this 40 days, they are forgetting again all the provisions. And again it's becoming a new start. Sir, I teach IDT as well as DT. But IDT you could remember. DT you cannot remember. Why not? IDT is more of, most of the concepts are like concept based. Okay, you listen to them, you'll understand, and then you can remember. Okay, it's not about minute number limits, monetary limits and all. But here in DT, those are like our mobile numbers only. Okay, you need to remember so many numbers here. So this subject requires so much of revision. Okay, what I suggest is like, whether you do DT or other subject also, every day minimum 1.5 hour you allocate for DT. Minimum 1.5 hour. Okay, if you could allocate more also, it's fine. Then what happens? Then you could revise every day. Okay, every day. So let's say, sir, first 5 days you complete the revision whole DT. Then every day 1.5 hour. Okay, first day maybe you'll be covering basics, tax rates, deductions. Then again next day some other chapter. Okay, so that the subject will be constantly in touch with you. Understanding my point, sir? So that you will get more marks. So okay, that's my point. Okay, now I am going to the subject, sir. I don't want to waste your time much. Basics. These constitutional provisions and all, I don't want to discuss much because you already know all these points. To frame a, Article 265 says like, except authority of law, nobody else has the power to levy taxes. So only authority of law, nothing but government can levy the taxes. Then Article 246. What is Article 246? Okay, government can levy tax. Which government can levy tax? On what they can frame laws? Okay, see, Article 246 consists of 3 lists: union list, state list, concurrent list. Okay, if something is mentioned in union list, the power to make a law on those matters is with the central government. If something is mentioned in the state list, the power to frame a law, it's not just about taxing. The power to frame a law is with the state government. If something is mentioned in the concurrent list, then the power to frame law is with both central government and state government. Let's say, sir, with respect to traffic related, central government proposed a model traffic law. That power is there to the central government also. If states are okay with such kind of act, I mean, they feel like all those provisions or all those uh, conditions they can also follow, then they can adopt as it is by the state government also. Else, they can deviate and can form a separate law also. So, if matters mentioned in concurrent list, na, both can separately frame law. If matters framed in state list, na, then on those matters, state can only frame law. If a matter mentioned in union list, na, only central can frame law. Then components of income tax law. What will be there in the income tax law, sir? Income tax law is not just about, okay, income tax law means it's not just about the Income Tax Act 1961. Along with that, we need to study the Annual Finance Act also. The current Finance Act which we are studying is like what? Finance Act 2 2024. Okay, why Finance Act, sir? Every year to the Income Tax Act, the tax rates amendments will be brought through Finance Act. And along with this, we need to read income tax rules also. Why rules? Act gives the overall procedure, sorry, the overall section, whereas the rules give the step-by-step guidelines. Let's say for filing return, you need a PAN card. I mean, you should have a PAN card, or else like when your turnover exceeds, or there are conditions, right? So let's say you have the need to apply for PAN. Only that you should have PAN is mentioned in the act. But the problem is like how to apply PAN, where to apply PAN, which form has to be applied, how much fees has to be paid. All these are not given in the act. They were given in the rules. So rules also part of income tax act. Then notifications and circulars. If any amendment is made through Finance Act, but in that section which was newly brought has to be introduced or has to be given effect only by notifying everybody. Okay, such notifications will be given by what? If at all those amendments are related to rules, will be given by CBDT. If they are related to act, then those are given by central government. Understand, sir? Amendments are usually brought through Annual Finance Act only. But in the middle of the year, to make them effective, it should be communicated to everyone, right? For us, that's called notifying. So they'll notify us by publishing it in the official gazette. Who will do that? If it is related to rules, CBDT will do. If it is related to act, central government will do. Then circulars. Sir, most at many places, the lawmaker will frame the tax provision with an intention, with a certain intention. But the reader may understand it in a different way. So there is an ambiguity. There is a confusion between the one who prepared the law and the one who is reading the law. So in those cases, to clarify this, circulars will be issued. Who will issue circulars? Will be issued by CBDT to clarify doubts along with case law. All these are components of income tax law. Then section 1. Okay, Income Tax Act section 1. Sir, not only income tax, any act. The section 1 is about what? Okay, title, and then it gives about applicability. Here Income Tax Act 1961 is the section, and it came into force when? 1st April 1962. Definitions. Definitions, we are not discussing everything here, sir. Whichever is needed, that will be discussing. Then previous year. Section 3 is about what? Previous year. What is previous year? The year in which we earn income is called as what? Previous year. The year in which we earn income is called as what? Previous year. Previous year usually means a period of 12 months starting from 1st April. Hi Rajesh sir. Okay, the year in which income is earned is called what? Previous year. Previous year is usually period of 12 months. Okay. For our applicable exams, what is the previous year, sir? Sir, I will tell you one hack. Sir, in exam, they'll give a P&L. Sometimes, if it is a business related question, they'll give P&L, or they'll give a particular time period. Okay. And then you need to calculate tax for that. Sir, first of all, the hack is like how to remember assessment year. Okay, it's a basic level one, sir. For inter-level students, I'll tell this kind of things to remember easily. The year in which we are writing exam is the assessment year. Let's say you are writing in December 25. December 25 na which year? 25, 26. This is what? Assessment year. Then what is the relevant previous year? The relevant previous year is always 24, 25. Understand, sir? Assessment year is 25, 26. Previous year is what? 24, 25. Okay. So usually previous year is also a period of 12 months. But where there is a new source of income, you are having income for the first time, or you are having business for the first time, then in that case the previous year starts only from the day, that you are having that income or source of business for the first time. Let's say you started a business only on 1st June 2024. Then for you, till 1st June you don't have any other income. 1st June only you are having income for the first time. Then your previous year starts on 1st June. Okay, this is the example. Assessment year, it is also always a period of 12 months, sir, immediately succeeding the previous year. Correct it, sir, if you are having materials. Always a period of 12 months. It's not 12 p.m. Always a period of 12 months. Then charging section. Sir, what is the role of charging section, sir? For every act, charging section gives the power to levy, impose tax. Okay, to impose tax, to ask you to pay tax. Such power is given by what? Section 4. Okay, and not only that one, it says, it gives an outline like on what tax will be collected, on whom tax will be collected, when it will be collected. That outline will be given in the charging section itself. See, income tax shall be charged for every assessment year as per provisions of this act, as per rates given in what? Annual Finance Act. As per the rates given in Annual Finance Act. On what it will be levied, sir? On the total income of every person. So on every person, income tax can be levied. Okay, on every person. Person on his height, on his weight, what basis? Total income basis. Third one. Okay, sir. On total income you levy tax. Okay, what percentage you will apply? What rate you will apply? The rates mentioned in Annual Finance Act. Understand? Then person. This definition you already know, sir. From childhood you might have learned this one. Person includes individual, HUF, firm, company, AOP, BOI, local authority, artificial judicial person. Then this format, sir, many students still even now are doing mistakes with the format. Sir, for clearing CMA final DT, you need not to be a great scholar in DT. First, correct your basics. When you are strong with your basics, when you can avoid the small, simple mistakes, then easily you will get good marks. Trust me. Okay, basics level correction only we should do. First thing. Okay, you will be focusing on advanced level topics, like someone will be like you will be reading advanced ruling chapter, you will be reading the complete penalties chapter, black money chapter, GAR chapter, everything you will have knowledge. But the basics level you have confusion, you are doing mistakes now, nobody can save it. So basics you should be stronger. Advanced level concepts, whether you are like confident there or whether you have some average level of understanding also, it's fine. But basics you should be 100% clear. Okay, sir, there are 5 heads we already know: salaries, house property, PGBP, capital gains, IFOS. What is the order, sir? First we should take what? Income from salaries, then income from house property, then profits and gains from business or profession, then capital gains, then income from other sources. Salaries, house property, PGBP, capital gains, IFOS. Okay, 5. All these 5 are there. Then what we should do, sir? Clubbing provisions. Let's say, for example, sir, father is having salary 10 lakhs. If father, okay, he is the SSC, having salary of how much, sir? 10 lakhs. So this is like after all the deductions, direct income from at the salary net. Okay, after all the standard deductions and all, then he is having Income from house property also to an extent of 3 lakhs. Salary 10 lakhs, house property 3 lakhs. This is his income. And then he is having a minor son also. This minor son also having house property income of another 1.5 lakhs. Another 1.5 lakhs. Now, how do we calculate, sir? It's not like we calculate the total income of father, like let's say 13 lakhs, and then we add this 1.5 lakhs of minor and it will be 14.5 lakhs. No, no, no. You should not do like this. When clubbing is applicable, the clubbing has to be made at the head level. That means income from house property of father. Then income from house property of minor son, you include here only. If we include here only, then 1.5 lakhs. Overall, it is how much, sir? 14.5 lakhs. 14.5 lakhs. Understand, sir? So, the same only. But how do you write is important. Okay? Clubbing has to be done at head level, headwise. Then, once clubbing is made, then intra-head set off, then inter-head set off. First intra-head set off, post intra-head set off, if still loss is there, then you can go for inter-head set off. Then still if loss is there, then you can what? Carry forward. Okay, set off and carry forward. Then you will get what? Gross total income. Gross total income. Then you should subtract chapter 6A deductions along with 10AA exemption. Here only write down, sir, what? 10AA exemption. Why 10AA exemption also here only has to be included, sir? Sir, understand. The name of exemptions, the other name of exemptions is like incomes which do not form part of total income. Incomes which do not form part of total income. So that means usually the exemptions either in inter-level salaries you lent or any any exemption which we have discussed outrightly will exclude from the total income. Let's say, sir, if any salary is exempted, let's say 10 lakhs, out of the 2 lakhs is exempted, then straight away you will take 8 lakhs only. And then house property, any exemption is there, outrightly you will exclude that exemption. PGBP exemption is there, outrightly exclude that one. But 10AA is an exemption, but you will not exclude such exemption part outrightly. First, in the business or profession, you will include that one. Okay, what is 10AA exemption, sir? 10AA means if a person is in SEZ, if a unit or undertaking is in SEZ, and from SEZ if they have any export profit, from SEZ if they have any export profit, 100% of such profit is exempted for first 5 years. So since it is exempted now, what do you think? You wanted to exclude this straight away under the head PGBP. No, 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 that is wrong. What you should do? First you include that income also. Find out gross total income also. Then again separately you should subtract what? Chapter 6A deductions and then 10AA exemptions. Chapter 6A deductions and then what? 10AA exemptions. Okay. What are chapter 6A deductions, sir? The 80 series deductions. Then you will get what? Net total income. Okay. Then what we should do? Compute tax on total income. Okay. Tax also there are like special rates and normal rates. First you compute on normal rate, then special rates. Then we'll get the total tax. On total tax, either surcharge or rebate. Sometimes both may not be there. If surcharge rebate is there, adjust them. Then HEC, health and education says at a rate of 4%, then we'll get the total tax payable. You are able to follow? If you are following, please respond something so that I'll go into the tax rates. And if you have any questions also, post your questions. Okay? Be active, sir. If you are active and if you are actively participating, then based on your doubts and all, I can go much more deeper and I can tell you much more clearly also. When we are coming for the live sessions, what is the need or purpose of coming for live sessions, sir? If you have any doubts, you should ask. Then I'll be covering those points also. Then tax rates. What are the tax rates, sir? Sir, first we are discussing tax rates for default regime. Default regime. What is the default regime currently? 115 BAC. 115 BAC. This is nothing but the new regime. 115 BAC, new regime. What are the tax rates? Tax rates we are discussing about individual, HUF, AOP, BOI, and then AJP. For all of them, it's the same kind. Individual, HUF, AOP, BOI, AJP, and the new regime. Irrespective of resident or non-resident, individual or senior citizen. Current the old regime, for senior citizen and normal individuals, there is like difference. But under the default regime, new regime, there is no difference. What are the tax rates, sir? Up to 3 lakhs nil, 3 to 7 lakhs 5%, 7 to 10 lakhs 10%, 10 to 12 lakhs 15%, 12 to 15 lakhs 20%, above 15 lakhs it is like 30%. Again, sir, 0 to 3 nil, 3 lakhs to 7 lakhs 5%, 7 lakhs to 10 lakhs 10%, 10 lakhs to 12 lakhs 15%, 12 lakhs to 15 lakhs 20, above 15 lakhs 30%. Okay, so now everybody, okay, calculate and tell me quickly what is the tax on 11 lakhs. What is the tax on 11 lakhs under the new regime? What is the tax on 11 lakhs? On 11 lakhs, what is the tax? $65,000. 65,000, right? Okay, see. How it is calculated on first 3 lakhs nil, 3 lakhs to 7 lakhs, 4 lakhs into 5%, 20, 7 lakhs to 10 lakhs, 3 lakhs into 10%, 30, 10 to 12 lakhs, 1 lakh into 15, 15, total is how much? 65,000. Then, now tell me quickly, sir, what is the tax when the total income is 15 lakhs? Total income is 15 lakhs, how much? Total income is 15 lakhs, then how much? Total income is 15 lakhs. See, up to 10 lakhs, it is 50. 1 lakh 40. Sir, what I wanted now is like, at 15 lakhs, you should remember the tax amount so that it would be easy for us. Okay, why 15 lakhs I want you to remember? Because from 15 lakhs above, the total income, the tax rate is common 30% only. Let's say how it helps you now. If someone asks you to calculate tax on 50 lakhs, you can do it really quickly. How? First 15 lakhs, 1 lakh 40,000. First 15 lakhs, 1 lakh 40,000. Because we already remember this. 1 lakh 40,000. Whereas on balance 35 lakhs, how we will do? 30%. Balance 35 lakhs, how we will do? 30%. So 35 lakhs into 30% plus 1 lakh 40. Simply you can do 51 lakhs, 70 lakhs, 1 crore. How much ever the amount they ask, you can do it quickly when you remember that tax at 10 lakhs. Okay, 10 lakhs, what is the tax payable, sir? 1 lakh 40,000. Balance into 30%. Add it together, you will find out the tax payable really quickly. Okay, so this is the total income. Then surcharge rates. What are the surcharge rates, sir? Surcharge rates where the total income is less than or equal to 50 lakhs. Where the total income is less than or equal to 15 lakhs, then the surcharge rate is nil. Where the total income is greater than 50 lakhs but less than or equal to 1 crore, then the surcharge rate is like 10% of income tax. Where the total income is more than 1 crore but less than or equal to 2 crores, then the surcharge rate is 15%. Where the total income is more than 2 crores, then the surcharge rate is 25%. Sir, okay? Sir, this restricted point will discuss towards the end of the chapter, sir. As of now, remember this only. Up to 50 lakhs, individual, HUF, AOP, BOI, AJP, surcharge rate nil. 50 lakhs to 1 crore, surcharge rate is like 10%. 1 crore to 2 crores, surcharge rate is 15%. Above 2 crores, surcharge rate is how much? 25%. Clear, sir? Now we'll go for marginal relief. Marginal relief concept. Sir, when the concept of marginal relief will come? The concept of marginal relief will come only when the given total income in the question or the total income which we got in the question is nearer to that of surcharge limits. What are the surcharge limits, sir? 50 lakhs. Because from 50 lakhs only surcharge is applicable, above 50 lakhs. Then 1 crore. Why 1 crore? From 1 crore, the surcharge rate is again changing. Then 2 crores. Again, from 2 crores also surcharge rate is changing. If at all you go to old regime, then there is another slab of surcharge also 5 crores. So why these limits we are taking? 50, 1 crore, 2 crore, 5 crores. At these points, there is a change in surcharge rates. That's why these limits are important. These are called as what? Surcharge limits. Surcharge slabs. Okay. Now, when marginal relief has to be checked, if the given total income in the question is nearer to these surcharge limits. What is the given total income? Let's say 49 lakhs. Yes, sir. 49 lakhs is also nearer to surcharge limit only. But this time we'll take marginal relief. No. The total income should be nearer to the surcharge limits, and that also upward side, not downward side, upward side. I mean, if it is like 51 lakhs, then you should check for what? Marginal relief. Okay. Little conceptual clarity. Why we should check marginal relief? Sir, why we will be checking marginal relief now? Simple, sir. Okay. The marginal relief concept is like, if you are having additional income, if you are having some extra income, sir, let's say, if I am having some extra income over and above 50 lakhs, sir, let's say I am having 51 lakhs as total income. If at all it is only 50 lakhs, then there is no surcharge now. But if total income is 15 lakhs, then what is the surcharge is also there. Now the concept is like, because of having additional 1 lakh income, I am having surcharge plus tax on this 1 lakh. Now my marginal tax over 50 lakhs shall not exceed my marginal revenue. Compared to 50 lakhs, how much is the income higher, sir? 1 lakh. Whereas compared to 50 lakhs, tax on 50 lakhs and tax on 51 lakhs, that difference tax is there, na? That shouldn't be more than 1 lakh. If it is more than 1 lakh, then we are giving marginal relief. That is conceptually, sir. But, okay, let us remember the steps first. Okay, here. On what we are computing the total income, sir? We are computing total income of individual on 1 crore, 1 lakh. Okay, sir, everybody, with your calculators, quickly solve and tell. First step what I need is like, what is the tax on 1 crore 1 lakh? 1 crore 1 lakh. How to calculate? 15 lakhs and then balance 86 lakhs into 30%. On 15 lakhs, how much, sir? It is like 1 lakh 40,000 plus 86 lakhs into 30%. Calculate and tell the tax. Okay, you will get tax. Plus, if total income is above 1 crore, what is the surcharge limit, sir? The surcharge is like 15%. Plus apply 15% surcharge also, and tell me tax plus surcharge together. Don't add cess, only tax and surcharge. How much you got? Thirty-one lakh 28,000. Okay, done. Then the next step we need to do is like, what is the nearest surcharge limit to 1 crore? Nearest surcharge limit to 1 crore is how much, sir? Because we are having 50, 1 crore, 2 crore, 5 crore. For it, the nearest surcharge limit is what? 1 crore. So what we should do? Calculate tax plus surcharge on 1 crore. Calculate tax plus surcharge on 1 crore. if you calculate tax plus surcharge on 1 crore now, how much sir tax? Tax plus surcharge on 1 crore. Sir, surcharge will not be 15 now. The surcharge on 1 crore is only 10 percentage. So you should calculate 15 lakhs, 1 lakh 40 plus 85 lakhs into 30%, plus you should add what? 10 percentage surcharge. How much you got? Yes. 29 lakh 59,000. Sir, don't just watch the lecture, sir. You do with the calculator, then only you will get. Okay. Fine. First step and second step we got right. What is the first step we did? We calculate tax on given total income. Second step, what we are doing? We are calculating tax on nearest the surcharge limit. Third step is like the difference between given total income. How much, sir? Here we took total income 1.1 crore. Whereas second step, what is the income we took to calculate tax? Surcharge limit, how much? 1 crore. So what is the difference between 1 crore and 1.1 crore? 1 lakh. Take it as the third step. Now what is marginal relief? Step 1 minus step 2 minus step 3. You will get this 69,000 as the marginal relief. Marginal relief. So again repeating, sir. How to compute marginal relief? Step 1. Compute tax plus surcharge on given total income. Step 2. Compute tax plus surcharge on nearest surcharge limit. Step 3. Identify the difference between given total income and the nearest surcharge limit which we have considered. Fourth step. Step 1 minus step 2 minus step 3, you will get marginal relief, 69,000. Then, what is the tax liability, sir? Tax liability is simple, sir. Here, marginal, sir, understand. If step 1 minus step 2 minus step 3, here if you get something in negative figures, then understand there is no marginal relief. Only if the value is positive, there is marginal relief. That marginal relief, you should subtract from the tax payable. What is the total income? 1 crore 1 lakh. On that, what is the amount, tax amount? 31 lakh 28,000. From there, you should subtract marginal relief 69,000. Then you will get the tax payable as 30 lakh 59,000. Understand, sir, everyone? Okay. Sir, understand marginal relief concept applicable to all the persons. Even though here we took example considering individual, but understand marginal relief concepts are applicable to every person. Old regime, new regime. In any case, when surcharge is there and the given total income is nearer to the surcharge limits, then marginal relief concept is applicable. Can we proceed? All the people who are in live, just say a hi, good morning or something, so that I can understand how many of you are actively listening and how many of you are sleeping. Okay. What about the others? Sakshi, Vishwanath, Radhakrishnan, Mastering Minds, Harsh, Aishwarya, Monica, Preet. Meenakshi, Swati, Srihari, Vishwanath. Okay, thank you all. Then we'll discuss about what tax rates applicable to. We'll discuss about tax rates. Tax rates applicable to individual, HUF, AOP, BOI, AJP under old regime. Individual, HUF, AOP, BOI, AJP under old regime. Okay, sir, under old regime, there are separate rates for senior citizen, super senior citizen. Okay, individual, HUF, this is AOP, BOI, AJP. This is the first level basic rate, sir. First we'll discuss tax rates and I'll tell again which is for senior citizen, which is for normal. Okay. What are the base rates, sir, for individual HUF, AOP, BOI, AJP? When their total, this is under old regime, sir. When the total income is up to 2.5 lakhs, nil. 2.5 lakhs to 5 lakhs, 5 percentage. 5 lakhs to 10 lakhs, 20 percentage. Above 10 lakhs, na, then you should take 30 percentage. Up to 2.5, nil. 2.5 to 5 lakhs, 5 percentage. 5 lakhs to 10 lakhs, 20 percentage. Above 10 lakhs, 30 percentage. So, if at all a person is having exactly the total income as 10 lakhs, 10 lakhs. What is the tax liability, sir? Everybody respond. Okay, what is the tax liability if a person is having 10 lakhs? Under which regime? Old regime. What is the tax liability? First to 2.5, nil. 2.5 to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20. Above 10 lakhs, 30. But here only till 10 lakhs. Yes. Here also, sir. What is the tax liability? 1,12,500. Sir, what I want you to remember is like under default regime, you should default na new regime. You should remember tax at what level? 15 lakhs total income. How much? 1.4 lakhs is the tax. Whereas under the old regime, you will be remembering at what point, sir? 10 lakhs total income. What is the tax? 1,12,500. Okay. Individual. This is like. Whereas, second point, sir. If individual is resident plus age greater than 60 but less than 80, greater than or equal to, sir, greater than or equal to 60 but less than 80, then he is called as what? Senior citizen. Okay, to be a senior citizen, when the age has to be checked, let's say, sir, on first day of assessment year, his birthday is 1st April, his birthday is on 1st April, and on 1st April of assessment year, he attains the age of 60, then also he is called as what? Senior citizen. Sir, for us, the applicable previous year is 24-25 now. Assessment year is like what? 25-26. That means overall it starts from 1st April 2024, previous year. Whereas assessment year ends by 31st March 2026. Question is, a person is called as senior citizen when he is of a age of 60 or more. Now, on when we need to check whether he has 60 or not? 1st April, 31st March. Because here itself there is a 2 years time. What the provision says, you need to check it on first day of assessment year. First day of assessment year. That means on 1st April 2025 for our relevant exams. On 1st April 2025, if he is already having age of 60 or attained age of 60 and he is resident, then only he will get the senior citizen benefit. Or what if he is non-resident? If he is non-resident, then the base slab rates only applicable. Up to 2.5 nil, 2.5 to 5 lakhs, 5%, 5 lakhs to 10 lakhs, 20, above 10 lakhs, 30. Okay? Understand, sir? So, what is the senior citizen slab rate, sir? Up to 3 lakhs, nil. 3 lakhs to 5 lakhs, 5 percentage. 5 lakhs to 10 lakhs, then the tax rate is 20 percentage. Above 10 lakhs, the tax rate is like 30 percentage. Above 10 lakhs, the tax rate is 30 percentage. Okay. If he is a super senior citizen, when can we call an individual as super senior citizen, sir? Individual, resident, plus age greater than or equal to 80 years. Or equal to 80 years. When this has to be checked? This has to be again checked on first day of assessment year. What are the tax rates? Up to 5 lakhs, nil. 5 lakhs to 10 lakhs, 20 percentage. Above 10 lakhs, then the tax rate is 30 percentage. Then the tax rate is how much? 30 percentage. First 5 lakhs, nil. 5 lakhs to 10 lakhs, 20 percentage. Above 10 lakhs, 30 percentage. Okay, sir? Now, surcharge rates under old regime. Surcharge rates under old regime. Where the total income is up to 50 lakhs, nil. 50 lakhs to 1 crore, 10 percentage. 1 crore to 2 crore, 15 percentage. 2 crore to 5 crores, 25%. Above 5 crores, 37%. Sir, what if in the default regime, once again I am discussing about default regime, up to 50 lakhs, nil only, even in default regime. Okay, 50 lakhs to 1 crore total income, 10%. 1 crore to 2 crores, 15%. Above 2 crores, na, then always it's like 25% only. But whereas under old regime, there is again 2 to 5, 25, above 5, na, 37%. Again, sir, this star marks related, I'll be discussing once we'll complete this here, the basic part from here, then again we'll go to the that restriction part. Okay. So now, once again, we'll solve an example on marginal relief, sir. But this time we'll consider what? Okay, under the old regime. Okay. See, compute marginal relief and tax total income of individual age 40 years where the total income is how much? 5 crore 3 lakhs. So what are the steps again? First, we should calculate tax on given total income. That means on 5 crore 3 lakhs. What we should do? Tax plus surcharge. Tax plus surcharge. So everybody, quickly tell. What is the tax plus surcharge on 5 crore 3 lakhs? First 10 lakhs, 1 lakh 12,500. Then balance 4 crore 93 lakhs into 30%. Add these two. Plus, what is the surcharge rate, sir? 37% surcharge you apply. Then you will get tax amount. Tell me, what is the tax amount? Okay, 2 crore 4 lakh 16,425. Done. Then step 2. Step 2, what we should do, sir? Step 2, we should calculate on the nearest surcharge limit. For 5 crore 3 lakhs, what is the nearest surcharge limit? 5 crores. The nearest surcharge limit is like 5 crores. On 5 crores, we should do what? Tax plus surcharge. We should do tax plus surcharge. How much? 5 crores. Again, first 10 lakhs, 1 lakh 12,500. 4 crore 90 lakhs into 30%. Add these two. Plus surcharge now at a rate of 25% only. Why? Only when it exceeds 5 crores, 37. Otherwise, 25 only. How much? One crore 85 lakh 15,625. Done. Then next step, what we should do? We should find out the difference between given total income and the nearest surcharge limit we have considered. I mean, here we took 5 crore 3, here we took 5 crores, not difference. How much? 3 lakhs. Then what is marginal relief? Step 1 minus step 2 minus step 3 is marginal relief, provided it is a positive number. Positive number. So how much it is like? 16 lakh 800. What is the tax liability? Step 1 minus step 4. Step 1 minus step 4. How much, sir? 1 crore 88 lakh. Okay. Tax liability is like how much? Ultimately 1 crore 88 lakh 15,652. Hope everybody understanding, sir. Then we are moving on to special tax rates. What are special tax rates, sir? Understand, sir. These special tax rates are same irrespective of whether such person is under default regime or under old regime. Default regime or old regime, these remain same. Okay. Special tax rates. First, what are these? 112A. So let me write down much more clearly for you this point. First, we'll take capital gains. Capital gains. Okay. Capital gains again of two types. What are those? Long-term capital gain, short-term capital gain. How do we decide long-term or short-term? Based on how much period they have been held, we'll decide whether they are like long-term or short-term. Let's say they are like long-term only. They are like long-term only. So within long-term also again two sections will come. 112A and 112. Within short term also two sections will come, 111A and 111. Okay, so you should be clear, sir, which comes under 112, which comes under 112A, which comes under 111A, which comes under 111A. So under 112A, the capital gains being locked term arising on listed equity shares. Listed equity shares. Let's say you invest in Reliance, Tata Motors, Infosys, TCS, any of these listed company equity shares, and then you are selling those shares and raising capital gains. Then, if it is long term, then covered under 112A, listed equity shares. Same under 111A also this is covered, listed equity shares. If they are long term, 112A, short term, 111A. Then, second one, units of equity oriented mutual fund. Equity oriented mutual fund. Units of, I mean, you invest in a mutual fund. That mutual fund will invest all that money again in equity shares only. If they are long term, such unit is long term, then again 112A. If it is short term, 111A. 111A. Third one, sir, units of business trust. Units of business trust. So what are called units of business trust? Here also units of business trust. So first, okay, let me give you the general conceptual knowledge about what is called business trust or what to be treated as business trust. See, sir, here, just like as mutual fund, okay, a trust will be formed and it pools money. It pools money. Okay, so with the common objective, everybody join and form as a trust. Now, to the ones who given money to the trust will allocate units. Till then it is clear. Now, what they will do? Sir, through this trust, ultimately what they wanted to do now, they wanted to invest in some real estate project or high infrastructure oriented projects. Okay, see, this trust will create a separate company. This company will call it as a special purpose vehicle. Sir, understand? It doesn't mean trust create only one company. They may create number of companies like this called as special purpose vehicles. Okay. Now, this trust will give certain money to this company. Okay. Since it got money, it will again create a company. The trust will allocate some money to that company. Now, with that money, what this company or special purpose vehicle will do? It will lay roads, construct a port, or construct a commercial complex. Okay. What company will get in return for doing this? When they lay road, from laying road, this company will get toll. For construction of these commercial complexes and all, they'll get again on this rentals and all. Okay. From these rentals and all, company declares dividend to trust and trust again will declare dividend to the unit holders. So this is the mode of operation of a business trust. What is the difference between mutual fund? Sir, mutual funds, the money pooled, with the money pooled, fund will not float a separate company to do business. Okay, they'll invest that money in companies which were already doing business with their names. Okay, whereas here in business trust, they will actually use that money to form a company which is into the real time business. Okay, it's not again they investing in the companies which will do business. Okay, so this company is completely under the control of what? Trust only now. Okay, like that they do. Okay, these are called what? Units of business trust. Okay, remember this, sir. 112A, 111A, same assets. Long term na 112A, short term na 111A. What are those? Listed equity shares, units of equity oriented fund, units of business trust. Then other long term capital gains na 112, whereas other short term capital gains na then 111. What are the tax rates on them, sir? 112A, the tax rate is 12.5% in excess of 1,25,000. Whereas on other long term capital gains, it is like 12.5% without indexation. Without indexation. Then 111A. with respect to 111A listed equity shares on them, the tax rate is like 20%. Whereas on other short-term capital gains, these are like normal rates only. This is very important, sir. Everybody think like this also has like special rate only. But 111 is about what? Other short-term capital gains. Other short-term capital gains na, except these three, every other short-term capital gain is other short-term capital gain, which are taxable at what? Normal rates. Normal rates na, the slab rates only. Old regime na, old regime slab rates. New regime na, new regime slab rates. Okay. All these tax rates which I referred are like post amendment. Before amendment, sir, you know already, right? Finance Act 2 2024 was introduced on 23rd July 2024. Sir, why 23rd July? Usually it comes on 1st April. No? Sir, yes, correct only. But when there is a legislative, okay, when there is an election happened, that government will pass, okay, the government will pass an act. Before election, they'll introduce one budget, okay, interim budget. Then the newly elected government will make certain reforms and introduce a fresh budget, which is called the Finance Act 2, which was introduced on 23rd July 2024. Consequent to 23rd July, these tax rates are applicable. Before 23rd July, here under 112A, what is the tax rate? 10% in excess of 1 lakh. Here it is like 20%, but with indexation benefit. 20% but with indexation benefit. Whereas 111A, the tax rate used to be 15%. Whereas others, it remains to be normal rates only. It remains to be normal rates only. Sir, understand, sir, this part? Long term and short term tax rates, everybody. Sir, if you want, you could write here only. Before 23rd July. How much here? 10% in excess of 1 lakh. Here 20% with indexation. Here 15%. Sir, everybody understood now this four? Sir, they will be coming so many times. You should be very clear about what is 112A, what is 111A, what is 112, what is others. Hello. Then on casual incomes, the tax rate is like flat 30. On online game winnings, again the tax rate is like flat 30%. Then on undisclosed incomes, we'll discuss, sir, again what is called undisclosed income also. Okay, so I'm not discussing now. Undisclosed income we'll again discuss separately. Then tax on virtual digital assets. Virtual digital assets. What are called virtual digital assets? Virtual digital assets na something like cryptocurrencies, bitcoins and all. Flat how much, sir? Tax rate 30%. Casual income 30. Online games 30. And on virtual digital assets like crypto also the tax rate is like 30%. Then rebate. Sir, here it's a mistake, sir. It is what? 20,000. Correct it. If you are following my book, correct it like 20,000. Okay. So rebate. Again, rebate under old regime. Old regime, rebate will come when? Only when the total income now always it is about what? Net total income is less than or equal to 5 lakhs. Then rebate will come. How much, sir? Okay, 12,500 or tax payable, whichever is lower is the rebate. 12,500 or tax payable, whichever is lower is the rebate. Then, where under default raising, rebate will come when the total income is less than or equal to 7 lakhs. When the total income is less than or equal to how much? 7 lakhs. What is the tax, sir? Then the tax is like, okay, the rebate amount is like 20,000 or tax payable, whichever is lower. Rebate amount is how much? 20,000 tax payable, whichever is lower. Okay, this is done. But they introduced a marginal relief concept, sir, even for rebate also. It is an amendment point, sir. Marginal relief under rebate. What does the concept mean? Let me explain you. So there is a person who is having 7 lakhs income, net total income. Then his tax payable is how much excluding cess? This is which regime, sir? I am talking about default regime. We are talking about default regime. Okay. Tax payable is how much, sir? 20,000. Because up to 3 lakhs nil, 3 lakhs to 7 lakhs, 20 percentage. 4 lakhs into 20 percentage, na, it is like how much? Sorry, 4 lakhs into 5 percentage, na, how much? 20,000. Okay. And again, rebate is also there. How much is the rebate? 20,000. Then ultimately tax payable is how much? Nil. But if a person is having 7 lakh 1,000, if a person is having just 7 lakh 1,000, if a person is having just how much? 7 lakh 1,000, then what is the tax payable, sir? Since it exceeded 7 lakhs, on the excess amount it is like 10%. So the tax is like 4 lakh, okay, up to 3 to 7 lakhs. In between 3 to 7 lakhs, 4 lakhs into 5%, 20,000. Above 7 lakhs, 7 lakhs to 10 lakhs, how much is there, sir? 1,000. 1,000 into 10 percentage, na, 100. So it is how much, sir? 20,000. 100 is the tax payable. Is there any rebate? No, right? Now the tax payable is how much? 20,100. Sir, between these two, what is the income? The increase is there 1,000 only. But for 1,000 rupees income difference, how much tax is increasing, sir? 20,100. So the marginal revenue is only 1,000, whereas the marginal tax is how much? 20,100. So to correct this practice, what they are saying, sir? To correct this practice, what they are saying? Okay, they are saying like to the this tax, on this tax, okay, only to the extent of marginal revenue you should pay. Balance given as rebate. I mean, sir, above 7 lakhs, you earned 1,000. They can take the total 1,000 as tax, no problem. But if they take more than 1,000, then that is a injustice thing. Okay, what they are saying, that's why up to 1,000 fine. The balance, I mean, if you subtract here 1,000, how much will be there, sir? 19,100. They are gonna give it as what? Rebate. 19,100. They are gonna give it as like rebate. Okay, the balance 1,000 only is the tax payable. 1,000 is only the tax payable. This is an amended point, sir. I think everybody understand. Let me take another example. 7 lakhs and then 7 lakh 20,000. 7 lakhs and then 7 lakh 20,000. What is the tax here? Again 20,000. Whereas rebate 20,000. So what is here? Nil. Whereas here, what is the tax, sir? 22,000. How it came 20,000, sir? Up to 7 lakhs 20. On about 20,000, 10%. 20,000 into 10%, 2,000. So it is like 22,000. Rebate nil. How much is the tax extra they are paying, sir? 22,000. So for 20,000 income increase, how much tax they are paying, sir? 22,000 tax they are paying. So the tax payable is restricted to the extent of income and over and above 7 lakhs. So how much is the rebate, sir? Rebate equals to 22,000 minus 20,000. That equals to how much, sir? 2,000. In this case, 2,000. Okay. Let us solve one more example also. The total income is 7 lakhs. Whereas here the tax payable is like here, I mean, the other one is like how much? 7 lakh 25,000. Here tax is 20,000. Rebate 20,000. Tax payable is how much? Nil. Whereas here, how much is the tax, sir? On 7 lakhs. On 7 lakhs, 20,000. On the extra 25,000, 2,500. So the tax is 22,500. Whereas rebate, nothing. So how much is the tax payable? 22,500. What is the excess income here? 25,000. So here, the marginal revenue is more than the marginal tax. So here rebate is not applicable. Rebate not applicable. Why? The marginal tax, sorry, here it is how much? 22,500. The marginal revenue is only higher than that of tax. So rebate is not applicable. Here the marginal revenue is lesser than that of marginal tax. That's why the difference between them is given as what? Rebate. Here also the marginal revenue, the marginal tax is higher than that of marginal revenue. So the difference is given as what? Rebate. Sir, able to understand, sir, everybody? Sir, able to understand rebate concept? Sir, it's up to you, Vedastri, how well you could revise, how well you could use this revision series effectively. Okay, it's not like with the revision series alone you can clear. I'll be discussing here like important questions, important concepts, examples. If you could put some extra effort and solve the other questions also, okay, then it's completely possible. Never ever you need not to demotivate, sir. This 30 days time which we are having is like clearly sufficient for group 3. The only thing is like what? You should be studying at least 10 to 12 hours a day without failure in this 30 days. 10 to 12 hours. Okay, that also effective study, sir. It's not just you sitting before the books and you doing some kind of time pass on time. Effectively every day 10 to 12 hours you do. Then with this revision afterwards, within 24 hours you can revise the whole DT. Let's say with revision series you are following DT with me one time. Second revision if you want, within 24 hours, I mean like 2 days, you can clear, I mean you can revise the whole subject we discussed once again. Okay. Then tax rates applicable to companies. What are the tax rates applicable to companies, sir? Where the turnover is in previous year 22-23 is like less than 400 crores. The tax rate is 25%. Previous year turnover is more than 400 crores, then the tax rate is 30%. If it is a foreign company, then the tax rate is 35%. Sir, understand, domestic companies, turnover in previous year 22-23 less than 400 crores or equal to 400 crores, 25%. Others, 30%. Surcharge for companies, sir, domestic companies. Total income up to 1 crore, nil. 1 crore to 10 crores, 7%. Above 10 crores, 12%. Up to 1 crore, nil. 1 crore to 10 crores, 7. Above 10 crores, 12. Foreign company, up to 1 crore, nil. 1 crore to 10 crores, 2%. Above 10 crores, 5%. Sir, optional rates, sir. Just you remember the section numbers as of now. There are optional rates like 115 BA, BAA, BAB. There are optional rates like what? 115 BA, BAA, BAB. 25%, 22%, 50. But we'll be discussing them in detail, sir, in assessment of companies chapter. We'll be discussing them in detail where in assessment of companies chapter, we'll discuss them again in detail. So this is an example regarding marginal relief for company also, but not required for us. No. Then tax rates applicable to cooperative societies. For cooperative societies, what are the tax rates? Up to 10,000, tax rate 10%. 10,000 to 20,000, tax rate 20%. Above 20,000, then the tax rate is like what? 30%. Up to 10,000, nil. 10,000 to 20,000, sorry, up to 10,000, 10%, 10,000 to 20,000, 20%, above 20,000, 30%. Surcharge rates. Same as like domestic companies. Surcharge rates to cooperative societies is like same as domestic companies. What? Up to 1 crore nil. 1 crore to 10 crores, 7%. Above 10 crores, 12%. Even for cooperative societies also they are optional regimes. 115 BAD, BAE, BAD, BAE. For companies, what are the optional regimes, sir? 115 BA, BAA, BAB. Sir, nothing to done. We need to remember these sections only, sir. We have companies related optional regimes. What? 115 BA, 115 BAA, and 115 BAB. These are companies related. What? New regime here. Okay, this is companies. Then what is the cooperative societies related, sir? Then for cooperative societies, sir, we have another two sections, 115 BAD, 115 BAE. These are for what? Cooperative society. Again, this is what? New regime. For individuals, it is like what? 115 BSC is for what? Individual, HUF, AOP, BOI, AJP. These are again what? New regime. New regime. Okay. Sir, now, does all the new regimes are default regime? No. This 115 BAC is what? Default regime. For individuals, HUF, AOP, BOI. Whereas for cooperative societies, new regime is not the default regime. New regime is what? Optional regime. Even for companies also, new regime is not default. It's the optional regime. Okay. For companies, the default tax rate is 30%. If the turnover is within 400 crores in previous year 22-23, then it is like 25%. Understand? These are optional for companies and cooperative societies. Whereas for individuals, HUF, AOP, BOI only, the default rates are like new regime rates, new regime. Okay, then for firm. For firm, what are the tax rates, sir? For firm, the tax rate is like 30%. Whereas the surcharge rates are like up to 1 crore nil, above 1 crore 12%. For firm and local authority, the tax rates are like 30% normally. If it is more than 1 crore, then the tax surcharge rate is like up to 1 crore nil, above 1 crore 12%. Then maximum amounts not chargeable to tax, basic exemption limit. For individual, HUF, AOP, BOI, AJP, new, old. New regime na, it's like 3 lakhs only, irrespective of senior citizen, super senior citizen. Whereas under old regime, for normal 2 lakh 50, senior citizen 3 lakhs, super senior citizen na 5 lakhs. Then health and education cess. Sir, health and education cess has to be levied at what rate? 4%. When? First, we should calculate tax. I am writing, sir. First, we should calculate tax. Calculate tax. But while calculating tax also, special rates there, normal rates there. First, normal rates, normal tax rates into that normal taxable income. Okay, then tax on special rate incomes. Tax on what? Special rate incomes. First normal rates, then special rates. We'll get what? Tax. Then if surcharge is there na, add. Rebate is there na, subtract. But understand, sir, surcharge and rebate will not come same time. Surcharge is only up to, starts only when the total income is above 50 lakhs. Rebate ends when the total income crosses 5 lakhs or 7 lakhs. Okay. So this you need to do. But under surcharge, sir, if marginal relief is applicable, na, again here, marginal relief point will also come. Minus marginal relief from surcharge. Surcharge and marginal relief will come same time. Rebate and marginal relief will also, okay, will not come. Okay, this also. Then we'll get what? tax plus surcharge. On this tax plus surcharge, we need to levy HEC at a rate of 4%. 4%. Now, if you register this format, then you will not get a question. At the time of marginal relief, do we need to calculate cess or not? No. Why? Because after marginal relief step only cess will come. So first we should adjust what? Marginal relief. Then rounding off. Rounding off. So what is rounding off, sir? Total income or tax payable shall be rounded off to nearest multiples of rupees 10. That means what? 6,75,433 rounded off to 430. 6,75,435 5 and above rounded off to next multiples of 10. 6,75,437 rounded off to 6,75,440. Next, for us, where else the rounding off concept is important? In 234 ABC interest calculation under advanced tax. Important. So write down, sir. If you are following my book, write down. Even any other book also, write down the point here. For the purpose of computation of 234 ABC interest, the tax liability, we'll be calculating interest now. That liability, tax liability only will calculate interest. Tax liability has to be taken only in multiples of 100. Has to be taken only in multiples of 100. Fractions has to be ignored. Tax liability for 234 ABC interest calculation has to be taken only in multiples of what? 100. Fractions has to be ignored. What does it mean by fractions has to be ignored? 2,35,440 is there. Should take what? 2,35,400. Then 2,35,470 is there. Then also 70 rupees fraction you ignore. You should take what? 2,35,400 only. Fractions you should ignore. You will not be rounding off to next 100. The point to be remembered. You will not be rounding off to next 100. You will just ignore fractions and take it only in multiples of 100. Clear? Everybody. Okay, then we'll discuss about average rate of tax. What is average rate of tax? Average rate of tax is like tax payable divided by total income into 100. Average rate of tax is like, sir, now anyone tell me, where will be using mostly average rate of tax? In which chapter average rate of tax is important? In which chapter average rate of tax is important? Someone is saying like TP, transfer pricing. Rethink once and tell. Transfer pricing only, na? Is it really important in transfer pricing average rate of tax? Or DTA? In which chapter it is relevant? Transfer pricing or DTA? DTA. DTA chapter it is relevant. Okay. Average rate of tax. How to calculate, sir? Tax payable divided by total income into 100. Tax payable divided by total income into 100. Here tax payable includes tax plus surcharge plus cess. Let us take an example, sir. Income from house property 7 lakhs. Interest 25 lakhs. Long term capital gain under section 112A, sir. If you are following my book, correct it. 16,25,000 take it. Not 15 lakhs, take 16,25,000. Dividend 10 lakhs. Then what is the gross total income or net total income, sir? 58,25,000. Sir, one point. The point is like, in the example, the mistake also I'll see. On 112A, on 112A assets, what is the tax rate? 12.5 percentage in excess of 1,25,000. That means first 1,25,000 is not taxable now. So if it is not taxable, I'm having long-term capital gain under 112A 16,25,000. If first 1,25,000 is not taxable, can I take straight away 15 lakhs, assuming treating it as an exemption? No, that is wrong. We cannot straight away give the exemption, sir, that 1,25,000. The meaning to be understand is like first 1,25,000 zero rate. Above 1,25,000 it is like 12.5% tax rate. So it's not an exemption. It's the rate itself. It has to be assumed as like zero. That's why we should not straight away take 15 lakhs here. We should take what? Gross figure 16,25,000 only. I too know in that only 15 lakhs is taxable. I mean tax rate 12.5. The other 1,25,000 not taxable. But still that amount should form part of what? Gross total income. So we should not take 15 here, 16,25,000. Then what is the total income? 58,25,000. On this we should calculate tax. We should calculate what? Tax. Sir, tax. How to calculate tax, sir? First, we should calculate tax on income other than special rates. Other than special rates, how much is there? This 7 lakhs, 25 and 10. 42 lakhs is there. On 42 lakhs, we should calculate tax under which regime, sir? Default regime. Default regime, na? First 15 lakhs, 1,40,000. Balance, how much, sir, we are having? 27 lakhs. 27 lakhs into how much, sir? 30%. How much? 7 lakh. Sorry. 8 lakh 10,000. So total if you take how much it is like 9 lakh 50,000. 9 lakh 50. Lavanya, it's not about rounding off. The provision there said like is what? 234 ABC. There it is clearly said like fractions has to be ignored. You should take it only in multiples of 100. Fine. But if any fractions are there, ignore. That means irrespective of how much, you should take only the previous 100. Whether it is 2,35,499 also, you should take how much? 2,35,400. Okay. Then tax is how much? 9,50,000. Then long-term capital gain, how much is there, sir? 15 lakhs. What we should do? 15 lakhs into 12.5 percentage. How much? 1,87,500. What is the total tax? Sir, why only 15 lakhs taken here? Out of 16 lakh 25, first 1,25,000 exclude. Balance only taxable. That's why it is 1,87,500. The tax is 11,37,500. On that surcharge at a rate of 10. Why 10%? Because the total income exceeded 50 lakhs, assuming he is an individual. Okay. So then what? 1,13,750 is the surcharge. Then cess. The tax liability is how much? 13 lakh 1,300. You should divide it by 58 lakh 25,000. Then you will get the tax rates are how much? 22.34. Correct it. 22.34% is the average rate of tax. Then maximum marginal relief, MMR. Sir, this MMR tax rate will be applicable in case of, like let's say in some provisions, if the person on whom if we need to deduct TDS, then we should collect PAN and all. If such person is not giving PAN and all, then we need to levy or deduct TDS at marginal tax rate, maximum marginal tax rate. So how to calculate? New regime or default regime, take the highest tax rate applicable 30%, highest surcharge that is there 25%, and cess. Then on 30% you levy surcharge 25 plus cess, it will be 39. Old regime, highest tax rate 30 plus highest surcharge applicable 37% plus cess at a rate of 4%, it comes to 42.5. 744 percentage. Then revenue receipts versus capital receipts. Sir, from a house property, rent if it is there na, which comes regularly, revenue receipt. When you sold house and you get any income and any profit, that is usually what? Capital receipt. Capital receipts are what? Taxable. Okay, sir, here it was given mostly exempted, but now not, that is not the case. Previously, long back, they used to be exempted. But then after income tax changed so many times, and currently, even though capital receipts also mostly taxable only, if any loan taken, loan repaid, those may not be taxed. But capital asset like buildings, plant machineries, land, if you sell, on that if you get any capital gains, those are mostly taxable only. Okay, but still in our inter-level institute books and all, they mention it as mostly exempted only. That's what I kept. But you should remember, sir, now that is not the case. Even indexation benefit is also not there to exempt them now. Okay, everything is taxable only. Then exceptions to the general rule. Sir, usually the income earned in previous year is taxable in assessment year. Why? Sir, assessment year, many remember like the year in which we pay tax is assessment year. No, that is wrong. Because sometimes in previous year only we pay tax. Like what? Advance tax we pay. In the form of advance tax, we'll pay tax in previous year itself. Or in the form of TDS and TCS, will pay tax in the previous year itself. So assessment year, it's wrong to refer it as the year we pay tax. The year in which we compute tax. Year in which we compute our tax liability. We compute our tax liability is called as what? Assessment year. Okay, it's not the year we pay tax, we compute tax liability. Maybe some tax you pay even in assessment year also, but usually the year in which we assess the tax is called as assessment year. Okay, for these 5 people, sir, instead of previous year income assessed in assessment year, that would be assessed in the previous year itself. Why? Non-resident shipping business, sir. This fellow, non-resident person, came to India with a ship. We don't know whether he'll come back or not. If you leave him, next time he may not come. On his income, we will not be collecting or will not be in a position to collect tax. That's why if he has income now, in the previous year itself, it will be assessed to tax. But since he cannot, he will not be preparing P&L by that time. That's why 7.5 percentage of right will be considered as deemed income. Okay, deemed profit. On that, they'll be calculating tax. Then, persons leaving India for employment outside India. Sir, here employment, na, it doesn't mean only job. It could be a employment, na, he went on for doing a carrying out a job, or for business, or it could be even profession. He left India, but he doesn't have any present intention to come back. How do assessing officer knows? By checking visa, passport, he'll understand for how much period the visa is granted and all. Based on that, he'll understand. Okay, when a person is leaving outside India and he has no intention to come back, so if you leave him, next year he'll not pay you tax. He'll simply block your number. That's why persons leaving India for employment outside India also has to assess their incomes in the previous year itself. Then third one, AOP, BOI, AJP formed for a purpose. But there, okay, AOP, BOI, AJP group formed for a purpose. And such purpose is already achieved. Then they'll dissolve. Once they dissolve, you can't collect taxes. Why? If you go and ask X, he'll say Y name, Y say Z name, Z say A name. So they'll be saying like the other one is responsible, other one is responsible. Ultimately, government cannot recover taxes. That's why in this case also, before dissolving only, okay, when they know that, when the ITO, income tax officer, knows the purpose, okay, AOP, BOI, AJP formed for a purpose and it's accomplished. Then persons trying to dispose or pledge property to avoid tax. Sir, to avoid tax, this person is doing what? He's selling away his property or pledging the property to avoid tax. In that case also what? Person trying to dispose or pledge property to avoid tax. In that case also what is applicable, sir? Okay, previous year is assessed in the previous year itself. Why? Sir, he is ready to go to jail also, but he don't want to pay tax. That's why, sir, let's say income tax people came and asked like, I need to pay 1 crore as tax. If I don't have anything, if I already transferred my properties on someone else, okay, let's say I don't want to pay that 1 crore, what I'll do? I'll transfer all the properties to someone else. Then the income tax people comes also, I'll say like, I don't have any money. If you want to take me to jail, now take me. Okay, there might be people who will do such way also. That's why if a person is willing to dispose or pledge property, then previous year income can be assessed in the previous year itself. In the case of discontinued businesses also, the previous year income can be disposed. Okay, the previous year income can be, okay, assessed in the previous year itself. Then it's about undisclosed source of income. What are called undisclosed source of income, sir? Sir, it's not cash. It's not. Cash credits. Sir, yes. Let me correct it, sir, here. The rebate is like 25,000 only. Sorry. It's like 25,000 only, sir. I said wrongly. See, previously it was circulated like as 20,000. So I remembered like vaguely some 20,000, but actually it's like 25,000. Correct only. Okay. Sir, even when they are checking marginal leaf also, you should check the same way. Okay. Then the marginal leaf example, sir. Here in this case also marginal leaf will not come. Yes, here marginal leaf. Yes, the rebate amount is like 25,000. Then in this case also, sir, actually why it was like, I remembered as like 20,000, because up to 3 to 7 lakhs, usually the rebate, the tax amount remains as like 20,000. Okay, rebate. I usually don't remember it like a number and all. So how do we remember like the first slab? Up to first slab is the rebate. 3 to 7 lakhs, the tax is 20,000, na. So that's why I remember like that rebate has 20 only. But yes, on record it is like 25,000 only. Okay, correct only. Thanks for the correction, man. Then come back to the undisclosed source of incomes. What is undisclosed source of incomes are here? If any unexplained sum is created in the assessee's book, for all these points. You have some credits in your bank account. You have some investments. You have some money, bullion, jewelry with you. Okay, you have, okay, first 3 points. In your books, there are some credits or in your bank account. You have some investments made. Or when they came for search, you have some money, bullion, jewelry. And they asked you explanation for it. Either you fail to give explanation, nor the explanation provided to you is not satisfactory. Then they will treat it as undisclosed source of income. Then you incurred certain expenditure. Let's say, okay, a person got married and he spent so much on his marriage, lavishly spent. Let's say he spent 5 crores on his marriage. Till then he didn't even file income tax return also, but he spent 5 crores on marriage. Now the IT people came and asked, what is the source for you to spend this 5 crores? This person couldn't give the source, nor the source is not. Okay, either he cannot give the source, nor the source given is not satisfactory. Okay, then in that case, all these 5 crores which is spent will be treated as what? Undisclosed source of income. Then amount of investments not fully disclosed. Sir, you purchased for 20 lakhs, sir. Sorry, you bought a land for 1 crore, but in books you are showing it as like 20 lakhs. I mean 80 lakhs underestimation you did. Now again they are asking for 80 lakhs. What is the source? You can't give the source, nor the source is not satisfactory. Then again this will also be treated as what? Undisclosed source of income. Then amount borrowed or repaid on hundi. Hundi na, it's like something like a letter, a paper kind of document where you will write like X person has taken from me 30 lakhs as loan. Like that, it's a normal paper note on which they'll say or they'll record in writing that someone has given you loan. But if you borrow any money based on the document and you say, so let's say income tax people came to you, they found out like you have 1 crore. They asked you how you got this 1 crore. You said like I borrowed from my friends and showing this hundi letter. Still they'll not consider it as a loan. That will also be treated as what? Undisclosed source of income. If they are undisclosed source of income, what is the tax rate? 60%. Surcharge 25%. Society rate of 4%. Effectively tax rate is how much? 78%. Then the next 2 pages are very important. Okay, I'm not giving breaks, sir. This is the last time one. Okay, see the next 2 pages, sir, like salaries, house property, majorly. What are the difference under old regime and new regime? HRA exemption is allowed under old regime, but such exemption is not available if you choose new regime. Leave travel concession. What is leave travel concession? In a block of 4 years, 2 times you can avail leave travel concession. Like if the travel is through flight na, airways na, economy class fare up to for employees, spouse and 2 children allowed. Railways na first class AC, and then roadways na deluxe class bus fare. Till that extent, leave travel concession is exempted old regime, but new regime such exemption is not available. Children education allowance 100 per month is given as exemption in old regime, new regime not available. Hostel fee allowance 200 per month allowed in new regime, exemption, whereas old regime not available. Travel allowance for disabled, up to 3,200 per month is eligible for exemption even in old regime, and it is available even in new regime also. This is very important. Travel allowance for disabled up to 3,200 per month is available as exemption even in old regime as well as under new regime. Then travel allowance on transfer, daily allowance, uniform allowance, it is what? Exempted. Okay, travel allowance, transfer, daily allowance, uniform allowance, these are like, sir, on duty related. Okay, the difference for these exemptions are like, these exemptions, let's say for uniforms are 10,000 given as allowance. It doesn't mean whole 10,000 is exempt. Out of 10,000 uniform allowance, you spent only 6,000, then the exemption is available only to the extent of 6,000. So these exemptions like transfer, on duty related transfer, Any daily allowance paid, uniform allowance paid, those are exempted under old regime. New regime also they are exempted. Like how much? To the extent of actual, to the extent of actual expense, sorry, to the extent of actual expense incurred, it is exempted. Then all the retirement related under salary, gratuity exemption, pension exemption, leave encashment, voluntary retirement, retrenchment, PF, all those exemptions are available in both old regime and new regime. Then perquisites, monetary or non-monetary, treatment is same in both the regimes. Standard deductions are again important. Old regime standard deduction is only 50,000. New regime the standard deduction is how much? 75,000. Entertainment allowance for government employees up to 5,000 can be allowed as deduction in old regime. New regime not available. Professional tax up to 2,500 allowable under old regime, not available in new regime. Okay, then income from house property. Income from house property. Okay, under income from house property, sir, how do we calculate income from house property, sir? We'll have GAV. Okay, sir, need not to remember all that like fair rent or municipal rent, whichever is higher, restricted to standard rent, which we call it as expected rent. Again, comparing with actual rent, all that not required. Straight away, they'll give you the rent in the question. That will take it as what? GAV. From GAV, first what we'll do? Standard deduction at a rate of 30%. Sorry. From GAV, first we'll subtract what? Municipal taxes paid. Municipal taxes paid. Okay. So subtracting this municipal taxes paid is allowed under both old regime, new regime. Then you will get what? NAV. From NAV, what you should subtract, sir? First, 30% standard deduction. This is also allowed under both old regime, new. Old, new. Both places it is allowed. This is also old allowed, new regime also it is allowed. Then 24B interest. Any interest incurred, that is also allowed as deduction. But for this interest, there are changes. What are those? Okay, again, for interest under section 24B, there are two, old, new. Again, under old, self-occupied property, let out property. New also, self-occupied property, let out property with respect to interest under 24B. Self-occupied property under old regime, maximum interest is how much, sir? Max 2 lakhs. Let out now, no limit. Self-occupied again under new regime, not even allowed also interest. For let out, again no limit. For let out, again no limit. For let out, no limit. Then from self-occupied, if there is loss, from self-occupied, if there is loss, can be set off with other heads. Set off with other heads. Okay, whether it is let out or self-occupied, sir. The loss from house property can be set off with other heads. Max 2 lakhs. Maximum 2 lakhs you can set off with other heads. Whereas here under new regime, no set off with other heads. Only within the head. If you have one house property loss, other house property gain, those two you can set off. With other heads, no set off with other heads. No set off possible with other heads. Understand, sir? See. Write down, sir. Here. Maximum 2 lakhs na intra head. No limit. How much ever loss you can set off if it is within the head. But inter head, if you are doing, how much, sir? 2 lakhs. Even new regime also same point. Intra head, no limit. With other heads, not at all possible to adjust. Then carry forward of loss. The old regime, the loss can be carried forward for 8 assessment years. Whereas under new regime also 8 assessment years. Then PGBP will discuss separately. Capital gains, no difference in both the regimes. Then IFOS. With respect to IFOS, sir, old regime, the family pension allowed is like, if family pension now what? Usually pension has to be paid to employee, but employee expired, his wife, widow taking the pension, then that is called as what? Family pension. For family pension, how much is allowed, sir? 15,000 or actual, whichever is lower. Whereas under new regime, 25,000 is the difference. Okay, 25,000 or actual. Other incomes, no difference. Then this is about the first chapter, sir. Okay, but there are some basic related points only, sir, which were linked with capital gains. Let me cover them also. Usually, whenever we say first chapter, we'll close here. But there are certain points linked to capital gains also. That also I wanted to cover now only. Basics only, sir. Those also linked to basics only. See, what are those? Sir, we already discussed like what are 111A assets, 112A assets. Everybody are able to recall, right? What are 112A assets? Listed equity shares, units of equity oriented fund, units of business trust. On them, what is the tax rate, sir? Long term na 12.5% in excess of 1.25 lakhs. Short term na the tax rate is like how much? 20%. Okay. Now on them. Assets covered under section 111 and 112. See, 111A assets, 112A assets. Listed equity shares, units of EOF, units of business trust. Here also, listed equity shares, units of EOF, units of business trust. Okay. And STT have been paid. One more point, sir. They should be listed in India. If they listed outside India, then they won't be considered as listed equity shares. They should be listed where? Listed in India. They should be listed in India. One only will treat them as what? Listed equity shares. And STT also should be paid in India. Then understand, sir. Under capital gains, how many sections we have? 111A, 112A, 112, and then 111. These three only called as special rate incomes. Whereas this 111 is what? Normal rate only. Right? On these three, Chapter 6A deductions can't be availed. On these three, Chapter 6A deductions can't be availed. I mean, if you have any deduction available also, then from 111A incomes, 112A incomes, 112 incomes, to that extent, you can't avail Chapter 6A 80 series deductions. Normal rates. What is the normal rate? 111. On these Chapter 6A deductions are available. Okay. Then on 112A assets, 112 now what? Long term listed equity shares, units of EOF, units of business trust. Rebate under section 87A is not available. Whereas on 111A short term rebate is available. So specifically, sir, rebate point, rebate not available on 112A income. It is not on special rate, only not available on 112A. Whereas it is available even on casual income. Whereas it is available even on what? Casual incomes. I mean, even on betting, gambling, lottery also rebate available, but not available on 112A. Okay, then 112. Other short term capital assets. Rebate available, Chapter 6A deductions available. Whereas section 112, it's not other short term, sir, correct it, other long term. Rebate available, Chapter 6A deductions not available. Not available. Sir, in simple, on special rate incomes, you can't avail Chapter 6A deductions. If you have special rate incomes, you can't avail Chapter 6A deductions. Additionally, rebate can be claimed even on special rate incomes also, except on 112A, except on 112A. Okay. Then capital gain tax rates also we remember, right? So the point I wanted to tell you is about unexhausted basic exemption limit. Unexhausted basic exemption limit, sir. For normal people, what is the basic exemption limit, sir? Default regime 3 lakhs. But let's say this person has salary only to the extent of 2 lakhs. Then what you will do this 2 lakhs? This 2 lakhs you will adjust with this basic exemption limit now. After adjusting with this basic exemption limit 3 lakhs, still you have basic exemption limit to the extent of how much? 1 lakh. But you don't have any salary or income to adjust here. That balance basic exemption limit, which you can't adjust with normal rate incomes, is called as what? Unexhausted basic exemption limit. Okay. So now what is the point? With this unexhausted basic exemption limit, you can adjust the special rate incomes also. Sir, what we discussed first, special rate incomes are taxable at flat rate. Now what I am saying, if it is, okay, now what I am saying, like, if you have any unexhausted basic exemption limit, with that you can even adjust 111A, 112A, 112 incomes also. Let us go with an example. See. Salary what rate? Slab rates. House property, slab rates. PGBP, slab rates. But capital gains, 112 na 12.5 percentage, 112 na 12.5 without indexation, 111 na 20%, whereas the normal 111 again taxable at what? Slab rates. Then IFOS, casual incomes taxable at 30%, others taxable at again what? Slab rates. Now see, sir, we have salary, how much? 2 lakhs. 112A income, 111A income, lottery income, all these are there, right? Salary taxable at what? Slab rate. Long-term capital gain, special rate. 112 long-term capital gain, special rate. 112A short-term capital gain, this is also what? Special rate. Lottery income also what? Special rate. What is the gross total income, sir? 6 lakhs. Okay, if we add all that, gross total income is how much? 6 lakhs. First, on what we should calculate tax? Normal income. Sir, here normal income is how much, sir? Only 2 lakhs. Because this salary is only the normal rate income 2 lakhs. That, whereas the basic exemption limit is how much? 3 lakhs. So, with the basic exemption limit, if you adjust 3 lakhs, okay, how much still the basic exemption limit is there? 1 lakh is there, na? This 1 lakh is called as what? Unexhausted basic exemption limit. How much is there, sir? Unexhausted basic exemption limit 1 lakh. Sir, everybody respond. Are you able to get this point? Yes, right? Okay. Now, what this provision saying, like, unexhausted basic exemption limit can be adjusted with 112 and 112A and 111A. See, here what are the special rate incomes we are having? 112A. And here we are having what? Long-term capital gain 112, 111A. These three incomes are there, na? These three key can be adjusted even with this unexhausted basic exemption limit 1 lakh. Okay. Now, out of this, which has to be adjusted? Sir, for 112A, the tax rate is how much? 12.5. 112 also tax rate is how much? 12.5. Whereas 112A, the tax rate is how much? 20. So, the unexhausted basic exemption limit 1 lakh is there, na? It is better if you adjust with this 20% one, so that our tax will be less. That's why I adjusted 111A short-term capital gain with what? Unexhausted basic exemption limit. Okay. Then 112A. How much is there? 2 lakhs. Out of 2 lakhs, 1,25,000 is not taxable. If 1,25,000 is not taxable, how much is their balance? 75,000 into 12.5%. Then balance 112 long-term capital gain 50,000 into 12.5. And we have even lottery income 50,000 into 30%. We got total tax how much? 31,375. Understand, sir? Understand? Okay. Sir, this unexhausted basic exemption limit adjustment concept is available only to resident, individual and HUF. And someone might be saying like, sir, can we adjust this with casual income? No. This unexhausted basic exemption limit, if any is there, can be adjusted only with 112, 112A and 111A incomes only, not with any special rate income. Only with these three, you can adjust unexhausted basic exemption limit. That is also available for what? Whom? Individual and HUF only. Available for individual and HUF only. Then, surcharge rates. Old regime as well as new regime. Here total income. What are the surcharge rates, sir? Up to 50 lakhs. Less than or equal to 50 lakhs, nil. Here also nil. Greater than 50 lakhs to less than or equal to 1 crore. How much, sir? 10%, 10%. Greater than 1 crore to less than or equal to 2 crores. How much? 15%, 15%. But here there is a change. Greater than 2 crores to less than or equal to 5 crores here, whereas here just greater than 2 crores. How much? 25%, 25%. Again, greater than 5 crores. How much? 37%, whereas here it remains like 25%. Clear na, sir? Now there are certain star marks kept here. What is this star mark says? On dividend income, then 112A income, 112 income, and on 111A income. On these four incomes, the surcharge rate is restricted to 15% only. I mean, if you are having dividend income 112A, 112, 111A incomes, on them the maximum surcharge that could be levied is how much, sir? 15% only. 15% only. Now let me give you an example. Sir, be ready, sir. Calculate and quickly tell the tax rate. Okay, quickly tell the tax rate, tax amounts. I'll just tell the amounts. You need to calculate the taxes quickly. Let's say a person is having PGBP income to the extent of 75 lakhs. Sir, we are taking example under default regime. And he is having long-term capital gain under section 112. Another 1 crore 50 lakhs. Now, what is the total income, sir? 2 crore 25 lakhs. 2 crore 25 lakhs. Yes or no? Okay. The gross total income. Assuming no deductions, chapter 6A nil, the net total income is also how much? 2 crore 25 lakhs. Sir, under default regime, where the total income exceeds 2 crores, what is the surcharge rate? 25% na? 25% na? But what the above provision said, like on dividend, you can't levy surcharge in excess of 15%. Okay. So first what we'll do, we'll calculate tax. How to calculate tax? 75 lakhs slab rates. Whereas on this 1.5 crores, 1.5 crores into 12.5% you'll get tax. Yes or no? On this surcharge normal case na you levy flat 25%. But in this case what you should do? On this 75 lakhs tax you should apply 25% surcharge. On this 1.5 crores related tax you should apply 15% surcharge. Yes or no? Okay. So now quickly tell, sir. On 75 lakhs, what is the tax? Default regime. On 75 lakhs, what is the tax? How to calculate, sir? First 15 lakhs, 1 lakh 40. 60 lakhs into 30% na? 18 lakhs. So it will be 19 lakh 40,000. Yes or no? On 75 lakhs, slab rates 19 lakh 40,000. Hello? You guys are there or not? Sleeping, huh? Then balance 1.5 crores into 12.5 percentage. How much? 1 crore 15 lakhs into 12.5%. 1 crore 50 lakhs into 12.5%. How much? Correct only, yeah. Okay. Now, what is the total? 38 lakh 15,000. This is the tax. Now, usually what we did do, sir, surcharge. Now, surcharge, what is the point? 19 lakh 40,000 into, you should do 25 percentage, whereas 18 lakh 75,000 into, how much you do? 15 percentage. Yes or no? Surcharge rate. Why here 15 percentage? Because this provision says like the surcharge has to be restricted only to 15 percentage. Now for this also there is an amendment. Okay, this is the usual rule. For this there is an amendment, sir. What does the amendment means? Are able to understand everybody? Yes, yes, yes. The point amendments are very important. See, sir, here if there is no capital gain income, there is no capital gain income, what is the surcharge rate that might have been applicable on PGBP? 15 or 10 percentage only na. That means because of long term capital gain only it was pushed to 25% surcharge rate. Otherwise, business income alone would have been only in the 15, I mean 10 percentage category only. Sir, you and your friend, sir, your friend always like he goes to movies, he'll not be studying at all, he'll do all the time waste things and all. Okay, ultimately he wasted so much of time. Along with him, you also wasted time. But in exams, he wrote well and he cleared. So how bad you will feel? See, same situation here also. Long-term capital gain tax rate surcharge is 15 only. But if there is no this long-term capital gain, then on PGBP also there won't be 25 percentage. Because of long-term capital gain here only, it was pushed to 25%. But the pushed one is again taxed at 15% surcharge only. But the other one is being under the 25% surcharge. So the government also felt it like it's an injustice. So even on PGBP, if at all, only because of these four incomes, the other income is pushed to higher slabs, then the higher surcharge rate is not applicable. Even on them also the surcharge rate is restricted to 15%. So on this also it is how much? Not 25. It is also restricted to what? 15 percentage only. 15 percentage only. See, business income 75 lakhs. LTCG how much? 1.5 crores. Total 2.25 crores. Okay. If total income is about 2 crores, now surcharge rate is how much? 25%. But on long-term capital gains, whatever is the relevant tax, on that what we are saying like surcharge is restricted to how much? 15 percentage. Sir, because of long-term capital gain only, sir, this business income was exceeded 2 crores and it was affecting a surcharge rate of 25 percentage. If there is no long-term capital gain, then it never exceeded 2 crores. So there is no 25% at all. Because of long-term only, it was exceeded 2 crores and the 25% is coming into picture. But, sir, understand? Okay, taking 25 is no problem. But long-term has a benefit. Whatever is the benefit here, sir? The benefit is like on them the surcharge rate is restricted to 15. Because of this fellow, this person is getting pushed to 25 percentage, and whereas long term is in enjoying 15% benefit only or 15% tax rate only. Everybody, are you able to understand, sir? The reason for here 25% surcharge is because of long term only. If there is no long term, it would have remained within 25% only. Because of this long term gains only, here in this example, the total income is pushed to 25% slab. Okay, and again the one which pushed actually getting 15% only. Sir, actually for you 15% should only be applicable, but your friend came. Because of your friend joined you, the surcharge rate becomes 25%. But your friend already had some benefit with him. So because of some benefit available to him, for him surcharge rate is only 15. But why you got 25? Because he is there with you. If he is not there, for you 15% only now. Because your total income didn't exceeded the 2 crores. Hello, everyone, please respond. Sir, you should understand. On PGBP, if at all there is only 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 PGBP, then the total income never exceeded 2 crores. Then it is not 25%. But just because long term capital gains also there, it exceeded 2 crores. Okay. Once it exceeded 2 crores, surcharge came to 25. But the one which pushed it to 25% is enjoying 15%. Okay. Now to correct this, what the Finance Act 2 is saying, like, if at all you exclude long-term capital gain or these incomes like dividend 112A, 112 and 111A, if the other incomes alone, if you consider the surcharge rate, then 25% is not applicable now. Then don't take. Okay. So here, other than these incomes, other than these incomes, you will consider the rest all as what? Other incomes. Okay. Let me give you one more example, sir, for my satisfaction. A person is having PGBP income 60 lakhs. A person is having then salary also there for 20 lakhs. And then he has long-term capital gain under section 112A, 1 crore 40 lakhs. Now what is the total income, sir? 2 crore 20 lakhs. Okay. What is the surcharge rate applicable? 25%. But on long-term capital gain, it is restricted to what? 15% only surcharge. But because of this long-term only, the total income exceeded 2 crores and was pushed to 25. But this fellow enjoying benefit of 50. Okay. How injustice to PGBP and salary incomes? That's why even though on PGBP, if at all there is only PGBP and salary, the other incomes, then the surcharge wouldn't be 25% now. Only because of long term only it was 25 now. Otherwise it wouldn't be 25 now. So since this long term is enjoying benefit of 15, even on this also you give the benefit of 15%. Okay. Then let me change the example little bit. PGBP, a person is having 2 crore 10 lakhs. Salary also is having another 20 lakhs. Whereas long term capital gain under 112 he is having another 1 crore. Now what is the total income, sir? 3 crore 30 lakhs. Total income more than 2 crores. What is the surcharge rate applicable? 25%. But understand, sir, it's not because of long term capital gain the surcharge rate is 25. If there is no long term capital gain also on them individually also they exceeded 2 crores, the surcharge rate will become how much here? On this 25 only. On this it is restricted to how much? 15%. On this it is restricted to 15%. So you should check. Because of what? Because of long term capital gains, the others were pushed to 25. Or else Individually also they are 25. If at all because of these incomes only they are pushed to 25, then on them also it is restricted to 15 percentage. Hello, everybody, are you able to understand now? Okay. Then you guys can take a break, sir. Well, audible. Sir, now we'll be starting with the chapter deductions. Sir, in deductions, see, The aggregate of all the deductions shall not exceed gross total income. I mean, the total deductions you took shall not exceed gross total income. So your deduction should be more than what? Gross shall not exceed gross total income. Let's say, for example, your gross total income of 6 lakhs. Then your total chapter 6A deductions can't be more than 6 lakhs. It is restricted to what? 6 lakhs only. Then no deduction under chapter 6A is allowed from gross total income to the extent it includes capital gains under 112A, 111A and casual income. If you have incomes like 112A, 111A and casual incomes and even 112 also, sir. Even 112 also. So on these you can't avail what? Chapter 6A deductions. Let's say for example, long term capital gain 3 lakhs, salary 2 lakh 50, lottery income 1 lakh. So this person gross total income is how much, sir? 6 lakh 50. Out of this, what are the special rate income, sir? This long term capital gain is like special rate, and this lottery income is also special rate. So you can't, even though it is part of gross total income, those two are also, but to the extent of these two, we can't avail chapter 6A deductions. Okay, so only on 2 lakh 50 we can avail chapter 6A deductions. So here, if you look at chapter 6A deductions, he has 80C 1 lakh 50, 80D 1 lakh, 80 EAA 1 lakh. So total he is having 3 lakh 50,000. But the deduction is restricted only to the extent of 2 lakh 50,000 only. Why na? The normal rate income is only to the extent of 2 lakh 50. Only to that extent deductions are available. Okay, then deductions can be classified into two types. Deductions can be, one second, sir. Deductions can be classified into two types. One is like expense linked deductions. The second one is like income and savings linked deduction. Expense linked, and the second one is like what? Income and savings linked. If it is something like expense linked, that means what? First, it is a payment to us or it is an expense to us. Example, you paid life insurance premium. Sir, if you paid life insurance premium, current year you have a payment only, but still you can avail deduction. Those deductions straight away you will claim them as deductions. There is no income also. That the other ones are like incomes and savings linked deductions. Let's say for example, 80 TTA. 80 TTVA, sir, there is savings bank interest. How much is the savings bank interest? The savings bank interest allowed is to the extent of 10,000. So let's say a person is having savings bank interest to the extent of 20,000. What to do? First, that savings bank interest has to be taken as income under that IFOS. Okay, first you should take income. Then, and after calculating gross total income, again the 10,000 is allowed as deduction under 80 TT. Okay, so this difference, exemption versus deduction. Okay, let's say interest. With respect to interest, sir, post office savings bank account interest. Interest. Let's say this person is having 12,000 post office savings bank account interest. On this, there is an exemption, sir. How much? 3,500 is the exemption. If it is a joint account, 7,000 is available. So what to do first? Whatever is the exemption, that you straight away exclude. Straight away reduce exemption. How much is there? 8,500 is the net interest after exemption or the taxable interest. Taxable interest. So what you should take this interest? You take it to IFOS. Then again under IFOS, how much is allowed. Okay, so IFOS will take 8,500, then you will calculate gross total income assuming only this one 8,500. Now chapter 6A deductions you will claim 80 TTA. How much, sir? Again, up to 10,000 or interest. So 8,500 here it can be availed as deduction. Then the net total income equals to 0. So what we are doing, exemption na outrightly we are reducing that income. I mean we are ignoring that income and balance only we are taking. Deduction na will not do like that. First we'll include that one, calculate gross total income, and then under chapter 6A deductions how much ever is allowed, that you need to subtract. Okay, so 10A exemption also has to be treated as like a deduction only. You shall not outrightly exempt 10A income. Just like as chapter 6A deduction only, even 10A income also you should reduce. What is about 10A, sir? 10A na, for unit located in SEZ, 100% of their profits are what? Exempted. For units located in SEZ, 100% of their profits are what? Exempted. Okay, then following deductions can be, okay, these below deductions can be availed only when the return of income is filed on or before the due date. The following deductions can be availed only when the return is filed on or before the due date. What are those, sir? First one, 80 I series. 80 IA, IAB, IAC, IB, IBA, IE. All these are related to investment linked. Okay, investments in infrastructure related. Okay, there may be certain businesses, sir, which requires for the infrastructure development of the country. So with respect to them, if the investments are made, IA, IAB, IAC, IB, IBIE, with respect to those investments, 80 I series deductions are available. 80 JJAA with respect to biodegradable waste. It is related to biodegradable waste. 80 JJAA additional employee cost. So need not to by heart now itself. We'll discuss each section again also. 80 LA for banking offshore units. Income of offshore unit bank. 80M intercorporate dividend. Intercorporate dividend. ATP is related to cooperative societies. QQB, RRB are related to royalties. Okay. So what is the point regarding all these deductions? All these deductions like 80I, JJA, JJAA, LA, M, P, QQB, RRB. These deductions can be filed only when the return of income is filed on or before the due date. Only when the return of income is filed on or before the due date. If at all a belated audit report is filed, Sir, first, return of income, what are the due dates, sir? For a person to whom tax audit is applicable, or if it is a company, then the due date of filing return is how much? 31st October of assessment year, nothing but 2025. If at all transfer pricing provisions are applicable, then 30th November of assessment year, current na 2025. Other cases na it is what, sir? 31st July 2025. I mean assessment year for this year. Okay. Now audit is applicable na, then additional to return of income, audit report also has to be furnished. By when audit report has to be furnished? 1 month prior to the top date of filing return of income. 1 month prior. 1 month prior na how much? 1 month prior na, this is like 30th September 2025. By then audit report has to be filed. So what is the provision saying? Like these deductions can be filed only when the return of income is filed on or before due date. If return audit report is filed belatedly, I mean the audit report no condition, only return of income has to be filed by 31st October or 30th November, whatever it is. Audit report even though not filed, okay, audit report even though filed belatedly, okay, in that case also audit report, even though filed belatedly, in that case also these deductions can be claimed. Then ATCC. What does ATCC says like, sir? ATCC says like the overall deduction for ATC, ATCCC, ATCCD subsection 1. All these sections together, the maximum deduction that can be availed is how much? 1,50,000. The maximum deduction that can be availed under ATC, CCC, CCD subsection 1 together is like 1,50,000. Sir, able to understand? Sir, be attentive, be alert. If you guys are attentive, then only. Otherwise, you will catch sleep. Are you able to understand, sir? Post lunch, we are discussing. If you guys are not proactive, otherwise, you'll sleep. So, be active. Whenever I ask a question, respond quickly. Okay, be alert. ATC. Sir, these are very important, sir. If you cannot recall or you cannot link these points, the next chapters will become much more complicated or tough for us. Okay, so be very attentive. ETC deductions with respect to specified investments. Okay, so ETC consists of a set of investments which you can make to avail deduction. Okay, who are eligible here? Individual and HUF are only eligible for ATC. Individual and HUF. Okay, I am writing that summary also, sir. ATC is eligible only for whom? Individual and HUF. Okay, then maximum 1,50,000. First, we are talking about what? Life insurance premium. If any life insurance premium is paid, individual can claim deduction, HUF also can claim deduction. Individual can pay it for whom, sir? Himself, spouse, or child. Child could be major or even minor. But if any life insurance premium is paid for parents, then deduction is not available. For parents, deduction is not available. Life insurance premium related premium paid by individual for himself, spouse, child. Child could be minor or major. Deduction available. HUF can be paid to any member, deduction is available. Whereas if the life insurance premium is paid for parents, not available. Then life insurance premium. Throughout policy tenure, he pays premium every year. That is allowed as what? Deduction. On maturity, if any sum insured plus bonus and interest is received, that is an income. On other income, exemption is also available. Exemption is also available. Next one, sir. Sir, how much ever the premium paid is allowable for deduction? No. For the premium paid, there are certain restrictions. What are those? On or before 31st March 2012. From, okay, before 31st March, not on or, sir. Before 31st March 2012. What is the condition, sir? On or, okay, on or before 31st March, correct only, sir. On or before 31st March 2012. What is the condition? That time, premium paid or 20% of sum insured, whichever is lower, is only allowed as deduction. Whereas from 1st April 2012, the deduction available is premium paid or 10% of sum insured, whichever is lower. Then from 1st April 2013, if such person is a disabled person, then much more increased deduction is available. How much? Premium paid or 15% of sum insured, whichever is lower. Whichever is lower. Understand, sir? Then contributions made to unit linked insurance plan. Unit linked insurance plan eligible for deduction. Then premium paid to contract for deferred annuity of premium paid for contract of deferred annuity, sir. That itself. Okay. He is also eligible for deduction. Then employee contribution to PPF, SPF, RPF. What is PPF? Public Provident Fund. Public Provident Fund. SPF, Statutory Provident Fund. RPF, Recognized Provident Fund. RPF is about what? Recognized Provident Fund. So contribution to unit PPF, SPF, RPF both are eligible for deduction. How much? Individual, if he contributes for himself, spouse or even child, eligible for deduction. HUF na it can be contributing for any member. How much ever they contribute eligible for deduction, but overall 1,50,000. Then contribution to any approved superannuity fund. Any sum paid or deposited to Sukanya Samruddhi account for the benefit of girl child. Sukanya Samruddhi account has been started. Any amounts contributed to them also eligible for deduction. Then subscriptions to National Savings Certificate. Contributions to approved annuity plan of LIC. Contribution to notified units of mutual funds. Then this one is important, sir. What? Payments to tuition fee, university, college or school. Sir, payment of what? Tuition fee. Tuition fee na not the private tuition centers under. When, sir, these days, all these corporate schools, okay, they are charging for school, third class, fourth class also, they are charging like up to 3 lakhs, 4 lakhs as fees. Let's say school is charging 3 lakhs fees. Out of the fees, okay, out of the fees, some 40,000 may be building fund, some 50,000 may be a deposit, some 30,000 may be for books, uniform, bus, for different thing. So for education, how much ever they charge, find out. Let's say for education they charge 80. This 80,000 alone is called as what? Tuition fee. So that tuition fee, if any paid, is eligible for deduction, provided it should be a full-time education, should be in India, and the deduction is available only for maximum 2 children. Then repayment of housing loan, where any housing loan principal is repaid, then that principal repaid is also eligible for deduction. Whereas the loan should have been taken from government, bank, society, life insurance corporation, or from government employer. Okay, the repayment of housing loan, sir, the house price, okay, the principal should be repaid for what? Government, bank, society, life insurance corporation. Then it is what? Eligible for, okay, the loan should have been taken from whom, sir? Bank, society, government, or from an insurance corporation. Then it is eligible for deduction. Then subscription to equity shares and debentures, eligible for deduction. Investment in 5-year deposit of a scheduled bank, eligible for deduction. Subscription to notified bonds issued by NABARD, eligible for deduction. Contribution to National Housing Bank, eligible for deduction. Investment in 5-year post office time deposit or deposit in senior citizen savings rules, all these are eligible for deduction. Now the question is, out of all these, which were important? The important ones are, first one, under 80C, the important ones, life insurance premium can be paid for whom, sir? Individual, for himself, spouse, and then child. Child should be what, sir? Major or minor. Parents covered? No. Parents not covered. HUF na it can pay it for any member. What is the quantum of deduction available here? Actual premium paid or 10% of the sum insured. If the policy is taken after 1st April 2013. Before now it is like how much, sir? 20% of the sum insured or actual premium paid, whichever is lower, life insurance premium. Then the next important one is about contribution to PPF, SPF, RPF. Contribution to PPF, SPF, RPF. Public Provident Fund, Statutory Provident Fund, Recognized Provident Fund, eligible for deductions. Third one, what is one, sir? Tuition fee. Payment of tuition fee with respect to university, college, etc. where it should be, sir, education in India, and it should be a full time, maximum 2 children. Fourth one, sir, repayment of housing loan. Fourth one is what? Repayment of housing loan principal. Sir, interest part not. Housing loan principal. Interest part is eligible for deduction under house property chapter only. Then fifth one, subscription to equity shares and debentures, or to any 5-year time deposits or term deposits. These are the deductions which are eligible or most frequently tested under ATC. Are clear? Then 80CCC, contribution to pension fund of LIC, where any amount is contributed to pension fund of LIC, being an eligible SSC individual, then, sir, 80CCC, who is eligible, sir? The eligible SSC is only individual. 80CCC is only eligible for whom? Individual. LIC pension fund. Sir, what is the LIC pension fund here? LIC pension fund. Okay. In many questions, sir, you will see LIC. If it is LIC pension fund, then simply what you will take deduction under 80CCC. How much? 1,50,000, and available only to whom? Individuals. Available only to individuals. Then, sir, actually, if you are following our book, there is a section called 80CCD, sir, which is missing. Okay. And then I have handwritten for a few chapters, sir. This handwritten I already share in the Telegram group, BCCA, Tax Guru Telegram group. If you see, there already this PDF of handwritten has been shared. Okay, so you can find it. It was pinned also. Okay, but this is available for not all the chapters, sir. For which chapters it is available now? It is available for like basics, it is available. Deductions, PGBP, assessment of companies, it is available. DTAA, transfer pricing. For these chapters, this handwritten is available. If at all you want, you can download it, sir. It is there in the Telegram channel only, pinned there. You can download from there. See, 80CCD, sir. Deductions with respect to contribution in pension scheme, NPS. Deductions with respect to contribution in pension scheme, NPS. Under 80CCD, there are total 3 sections. 80CCD subsection 1, 80CCD 1B, 80CCD subsection 2. 80CCD subsection 1, 80CCD subsection 1B, 80CCD subsection 2. 1, 1B, 2. Sir, understand? For 1 and 1B, both will discuss about employee contribution to the NPS account. Sir, if there is a pension scheme, to the pension scheme there will be both employee contribution as well as employer contribution. With respect to employee contribution, 1 and 1B. With respect to employer contribution, 80CCD subsection 2 is there. 1 and 1B are related to what? Employee contribution. 2 is related to employer contribution. Okay, first 80CCD1 will discuss. How much 80CCD1 says, like, if a person is a salaried employee and contributed to NPS, then the deduction available is like actual contribution or 10% of salary, whichever is lower. Actual or 10% of salary, whichever is lower. Okay, whereas if it is like others, then how much, sir? Actual or 20% of gross total income. Others, na, he is self-employed. If he is self-employed, then it is how much? Actual or 20% of gross total income. Here salary means basic plus DA forming part. Sir, 80CCD subsection 1. What is eligible for deduction? Contribution by employee, if he is self-employed, such person, to his NPS. Okay, me contributing my share to my NPS, not my employer. Then how much is the deduction available, sir? Actual or 10% of salary. Actual or 10% of salary. If it is others, Actual or 20 percentage of gross total income. Actual or 20 percentage of gross total income. Okay. Now look at this example, sir. This person's salary is how much? 25 lakhs. Whereas his contribution to NPS is how much, sir? 1 lakh 80. So under 80 CCD1, how much deduction is available? Salary into 10 percentage. 10 percentage of 25 lakhs, not 2.5 lakhs or 1 lakh 80, whichever is lower. So which is lower? 1 lakh 80,000 is lower, eligible as deduction. But if you remember 80 CCE, which says like under 80C, CCD, CCC, sorry, 80C, CCC, 80CCD subsection 1. All these three sections together also you can claim deduction only to the extent of 1 lakh 50, 1 lakh 50 only. Yes or no, sir? Are you able to recall that point? See here, ADCC, C, CCC, CCD subsection 1, altogether the deduction that can be availed is how much? 1 lakh 50. So here also the deduction is restricted to how much? 1 lakh 50 only. Okay. Then next one. Salary is how much? 10 lakhs. Next example, sir. Employee contribution is how much? 1 lakh 30 only. No other ATC, ADCCC deductions are there. So now see. How much is allowed, sir? Salary into 10 percentage, na? It is how much? 1 lakh only. Whereas the amount contributed is how much? 1 lakh 30. So fully allowed as deduction, na? No. The deduction is available only to 1 lakh. Why? Because 80 CCD subsection is available only to the extent of 10 percentage of salary or actual, whichever is lower. Okay. Now, sir, I cannot see your faces. You should respond quickly because this is the complicated point. Only if you react quickly, then I can go much more faster, sir. Everybody. Till here, everybody understood now? Give me a response. Okay. Sir, here, how much is actually, sir? 1 lakh 80. But the deduction is restricted only to 1 lakh 50. Why the 30,000 can't be claimed? Because of the overall 80 CCE limit. Because of overall 80 CCE limit, 30,000 can't be claimed. Here in the next provision, next example, 1 lakh 30 actually contributed, but still deduction is availed only because of 1 lakh. I mean, because of this 10% condition, 1 lakh is only allowed. Now, what the next section means? 80 CCD 1B. What 80 CCD 1B says means, if any amount can't be availed as deduction under 80 CCD subsection 1 because of the 1.5 lakhs restriction or because of these percentages restriction, any amount that can't be claimed as deduction under 80 CCD subsection 1 can be claimed as deduction under 80 CCD 1B additionally up to 50,000. Additionally up to how much, sir? 50,000. So here in the first examples, here 1 lakh 80,000, out of that only 1 lakh 50 claimed, na? The balance 30,000 can be claimed under 80 CCD 1B. Here also, because of 10 percentage of salary restriction, only 1 lakh claimed, na? The balance 30,000 can be claimed under 80 CCD 1B. Okay. Sir, 80 CCE limit is applicable only to 80C, 80CCC, 80CCD 1. Okay, so 1B is not covered here. 1B is not covered here. So you can claim here, let's say 80C nothing is there, 80CC nothing is there. So here 1 lakh up to 1 lakh 50,000 you can claim. If anything can't be claimed here, the balance is there. That can be claimed here additionally to an extent of how much? 50,000. Sir, able to understand this point, everyone? Paka? Yes, extra 50. So now 80 CCD subsection 2. What is about 80 CCD subsection 2? Employee contribution done. Now we are talking about what? Employer contribution. Sir, for your pension scheme, if employer contributing na, ultimately the pension money will be taken by you only na. So for your pension fund, if employer contributes, first that is your income. So first take it as an income under that salaries. Then deduction can be claimed. How much? If he is a government employer na, actual or 14 percentage of salary can be claimed as deduction. Others na, actual or 10 percentage of salary can be claimed as deduction. Actual or 10 percentage. Sir, how much is available under 80 CCD subsection 2? 80 CCD subsection 2 is for whom? Employer. How much is allowed as deduction? Okay. Actual or 14 percentage of salary. When if he is a government employer. Others know how much? Actual or 10 percentage of salary is allowed. Okay. This is under what? Old regime. But 80 CCD subsection 2 deduction is available under both old and new regime. 80C only old, 80 CCC only old, 80 CCD subsection 1, 1B, all these are available only in old. But 80 CCD subsection 2 is available under both old regime as well as new regime. How much is the deduction available, sir? 80 CCD subsection 2. Government employer na same. Non-government also. Actual or 14 percentage of salary, whichever is lower. See, government employer, actual or 14%, whichever is lower. Others also. Old regime na actual or 10 percentage. New regime na actual or 14 percentage, whichever is lower. Then 80 CCH. 80 CCH is about what? Contribution to Agniveers. Agniveers na, sir, this is a deduction designed for army people, armed forces. How much, sir? Agnipit scheme. SSC, sir, under Agnipat scheme also, the defense people, either the employee contributes or the central government contributes. SSC individual enrolled in Agnipath scheme, how much ever the amount contribution to that Agniveer scheme fund, that is eligible for deduction. Even the amount contributed by central government, because the employer is central government na, that is also eligible for deduction. Okay, so employee contribution to Agniveer scheme eligible for deduction. Employer contribution to the Agniveer scheme eligible for deduction. How much is the contribution, sir? Understand here. How much ever it is eligible for deduction. But point to be remembered is like 80 CCH subsection 2 is about employer contribution. That is eligible for deduction under both old regime and new regime. 80 CCD subsection 1. It is available only to whom, sir? Individuals. All these available to individual. CCD subsection 1, 1B, 80 CCD subsection 2. And these are available only in old regime. This is also available under old regime. Whereas under new regime, not available. This is also not available. But this is like eligible. 80 ccd subsection 2 is what? Available. It is like what? Available. How much, sir? Actual or 14 percentage of salary, whichever is lower. Then 80 cch1, 80 cch subsection 2, eligible to whom? Individual. Individual. Old regime available both, whereas first one under new regime not available, whereas second one available. Then 80D. 80D. Deduction in respect of medical insurance premium paid or contribution to health insurance scheme. Or contribution paid to health insurance scheme. Okay. The next one is what, sir? 80D. 80D is available to whom? Individual and HUF. Old regime available, and 80D is not available under new regime. New regime it is not available. Now we'll discuss how much is the 80D deduction. SSC is the senior citizen. Okay, first the amount may be taken for medical insurance premium or contribution to a national health scheme for individual and his family. Family na including childs are here. Let me write down. Family includes child. Family includes what here? Child. Only if dependent. Only if what? Dependent. When they are independent, then they are not covered. Okay. For family, how much he can take? 25,000. Parents also there na. For parents additionally up to another 25,000 deduction is available. If either individual or his spouse, parents, any of the parent or senior citizen, then the limit is how much? 50,000. So for you and your wife 25, for husband 25 including children, for parents another 25, 50. But let's say your parents are senior citizens, then for you 25, parents 5 lakhs. You also senior citizen, parents also senior citizen. For you 50, parents also another 50. Okay. Then write down this point, sir. If SSC is a senior citizen and non-resident, then 50,000 benefit is not applicable. You should apply. You should consider them as normal people only. 25,000 is only the limit. Understand, sir? If SSC is a non-resident or parent is a non-resident, then 50,000 higher limit is not available. 25,000 is only available. Then amount spent on preventive health checkup. Sir, it's not 50, sir. Correct it to 5,000, everyone. Amount spent on preventive health checkup. If you any amount spent on preventive health checkup up to 5,000 is only eligible for deduction. Preventive health checkup. Sir, understand. This 5,000 is not extra. Within this 50,000, 25,000 limits only, this 5,000 is a sublimit. Okay. Let me tell you. Let's say, for example, for preventive health checkup, you sent 7K. And then for medical insurance premium, you spent another 21K. So here first 7K also has to be restricted to how much? 5K. Whereas medical insurance premium 21K. Overall 26K. But this is also restricted to how much? 25K only. Okay. Then except preventive health checkup 5,000. Rest all has to be paid in any mode other than cash. Other than cash. Only preventive health checkup can be paid in cash. Others has to be paid through other than cash. Other than cash, na it could be crossed check is also fine. Don't bring PGBP here. Crossed check, plain check, all these are also okay. It need not to be account pay check. It's just said like not to be cash. And then if SSC is a senior citizen and no one is giving him medical insurance policy, then he can claim deduction up to 50,000. For senior citizen to get medical insurance up to 50,000. Actual, he is a senior citizen and no one is providing him medical insurance policy. Then in that case, even actual medical expense also he can claim as deduction up to 50. Then where premium paid in lump sum, he paid lump sum, sir, at a time. Then the lump sum is how much? Let's say 5 lakhs he paid for 10 years. Then what you should do? 5 lakhs divided by 10. Every year you should check 50. If 50 is within the limit, avail deduction. Otherwise, to the extent of limit eligible for deduction. So let's say he paid 5 lakhs as health insurance premium for a period of 10 lakhs for 10 years. For a period of 10 years, lump sum he paid. Now, first year, if he straight away go for 5 lakhs now, only 25,000 available. Balance and all gone. That's why what the provision says, apportionate over the tenure of policy, 10 years, 50,000 for each year. Now check, out of this 50, how much ever is available that you can claim as deduction. Let's say I am not a senior citizen, sir. Then 25,000 is available out of this 50. Sir, able to understand everybody? Okay, then ATDD. What is ATDD? Medical treatment of disabled person. ATD is available only to whom, sir? Resident individual. Resident individual. In old regime, available. New regime, not available. How much, sir? Sir, here the point is, individual is healthy only, but his spouse, child, parents, brothers and sisters, any of these persons are suffering with disability. They are having disability. If it is HUF, na any member is suffering from disability. Now, individual either incurs money for medical treatment of the disabled person, or for maintenance of such disabled any insurance premium is paid. Both are eligible for deduction. The amount spent on medical treatment or the premium paid for insurance also eligible for deduction. How much? If the disability is a severe disability, then 1,25,000 is the deduction. Other than severe disability, then 75,000 is the deduction available. And this is a flat deduction, sir. Flat deduction. What does it mean by flat deduction? Irrespective of amount spent, how much ever is the amount spent, they are eligible for this amount as deduction. 75,000 and 1,25,000. Irrespective of the amount spent, they are eligible for what? Deduction. Medical treatment of what? Disabled dependent. Okay. So who has to incur? The resident individual for his spouse, child, parents, brothers and sisters. HUF na for any family member eligible for deduction. How much? 75,000, 1,25,000. Then ATU. ATU is also similar one, sir. This is a deduction available for resident individual. ATU is also for whom, sir? Resident individual only. And it is also available only under what regime, sir? Old regime only. New regime it is not available. Okay. How much is the deduction available? Let us see that one also. Sir, if the dependent of SSC is suffering from disability, ATDD. If SSC himself suffering with disability, ATU. How much? Disability normal na 75,000. severe disability na 1,25,000. Along with return of income, they should file a copy of medical certificate also to get the deduction. 80DD is for the dependent of SSC. 80U is for the SSC himself. X is claiming deduction under 80DD for his brother Y. Now, can brother Y also can claim 80U deduction in his personal capacity? No. You can't claim both. For a person, either he can claim deduction under 80U or considering him as dependents, okay, his guardian or the one caretaker can claim deduction under 80DD. Only one thing. Then 80DDB. 80DDB. What is 80DDB, sir? Deduction in respect of medical treatment for specified diseases. For what? Specified diseases. How much is the deduction available, sir? 80DDB. Okay, the next point is about what? 80DDB. For whom, sir? 80DDB is for, again, resident individual only. It is available only in old regime, not available in new regime. Available only in old regime, not available where? In new regime. How much is the deduction, sir? If he is, sir, for what year? Treatment of specified diseases. What are specified diseases? Which are of chronic nature. If the disease is of chronic nature, like paralysis, cancer, those kind of things. The one suffering with disease could be SSC himself, spouse, child, parents, brothers and sisters. Okay, sir, for disabled na dependent 80DD, SSC 80U. Whereas specified disease na for SSC and even for disabled also same section only 80DDB. Same section 80DDB only. Resident HUF, any member. Sir, what is the quantum of deduction? Correct it, sir, here. Other than senior citizen, senior citizen. For other than senior citizen, the deduction available is like 40,000 or actual expenditure, whichever is lower. Whereas for senior citizen, the deduction available is like 1 lakh or actual expenditure, whichever is lower. Then 80E, deduction for higher studies. Deduction for higher studies. Again, eligible SSC is whom, sir? Individual. 80E. Eligible SSC is only whom? Individual. Available under both old regime, not available under new regime. What the provision says? Individual, if he takes any educational loan for the education of himself, spouse, children, okay, and that also for what? Higher studies. If loan is taken for 5th class, 6th class, 7th class, that is not available for deduction. The loan should be taken for higher studies. If SSC is acting as guardian of any child, then also it is eligible for deduction. And the loan should be taken from charitable institution or financial institution. Then how much ever is the interest paid, that is eligible for deduction for a period of 8 assessment years, starting from the initial year in which interest will be paid. Then 80EE and 80EAA. Next, what deductions are? 80EE and 80EAA. Both are applicable only to individual. Only under old regime these two deductions are available. Under new regime these deductions are not available. These deductions are not available. What are those, sir? 80E. First, 80E. What is 80E? SSC being an individual, the maximum deduction available is like how much? 50,000. Conditions are like what? He has taken a loan for construction of house. On that interest, if any is there, that he can claim as deduction under 80E up to 50,000. Loan taken from financial institutions, sanctioned in year 16-17. Purchase price of the house is less than or equal to 50 lakhs. Sanctioned amount is also less than 35 lakhs. Sir, first of all, new regime this deduction is not available. Okay, so we'll talk about old regime. Old regimes are house property, let out property, self-occupied property. For let out property, GAV is nil. For for let out property, GAV will be there, some amount. For self-occupied property, GAV will be what? Nil. From there, municipal taxes will subtract. You will get NAV. From there, standard deduction at 30% you will subtract. Then interest you will be subtracting. For let out properties are to deduct interest, no limit. But whereas for self-occupied property, maximum limit is how much? 2 lakhs. So you have interest on let out property, self-occupied property, which is more than 2 lakhs. Then such amount can be claimed as deduction. More than 2 lakhs. Then that amount can be claimed as deduction under 80E. Provided the loan should have been taken in year 16-17 from a bank, purchase price less than 15 lakhs, sanction amount less than 35 lakhs. Then the extra interest over and above 2 lakhs can be claimed as deduction here. 80 EAA. What is EAA? Same kind of stuff. If any interest which can't be claimed as deduction here in excess of 2 lakhs, such excess interest can be claimed as deduction here. How much? 1 lakh 50. The loan should be taken between 1st April 2019 to 31st March 2022. Loan from bank, SGV should be within 45 lakhs. Then 80 EEV. For whom 80 EEV available, sir? Again, that is also to individuals. Old regime not available. New regime not available. Okay. What is 80 EEV, sir? EEV is like loan taken for purchase of electronic vehicle, EV vehicle. On that, if any interest is paid, that is eligible for to a deduction to a maximum of how much? 1 lakh 50. The conditions are like loan should be taken from a financial institution. Loan is sanctioned between 1st April 19 to 31st March 2023, and the benefit of deductions continues till the loan is repaid. Then 80G. 80G. Sir, after 80 CCD, 80G is little complicated, sir. You should apply your brain. Under 80 CCD, there are 4 categories. Category 1, Category 2, Category 3, Category 4. Category 1, Category 2, Category 3, Category 4. If any amount is covered, 80G is for what? If you have made any contributions for charitable institutions and all, then you are eligible for deduction under 80G. Okay, charitable or any relief funds and all, if you made contributions, then they are eligible for 80G deduction. Under 80G, there are 4 categories. Category 1, 2, 3, 4. How much deduction available, sir? If any amount is contributed under category 1, 100% deduction available. Category 2, 50% of the amount contributed can be claimed as deduction. But under category 2, only one fund is there. What is that one fund? PM Drought Relief Fund. So, if any amount is contributed to PM Drought Relief Fund, covered under category 2. 50% of the amount contributed is eligible for deduction. Category 3. Category 3. If any amount is contributed to a fund covered under category 3, 100% eligible for deduction, but subject to qualifying limit. What are those here, sir? Government, CNA charitable association, either government or charitable institution association promoting family planning, then they are eligible for category 3. Donation made to a Olympic association or sports authority, covered under category 3. How much? 100% subject to qualifying limit. Category 4. 50% only, but subject to qualifying limit. What are the category 4 related? Charity, temples, housing accommodation, and projects to minority interest. Okay, housing projects, sir, it is like housing project to minority interest. Okay, let me tell you. Category 2 na PM Drought Relief Fund. Category 3 na what? Family planning related one, government or charitable association. And the next one is like Olympics association or sports association. Then category 4, like for charity, temples, renovation and repairs, for housing accommodation, for upliftment of minorities. Okay, if any, sir, housing, this is also. Any are provided, then these are eligible for how much? 50% subject to qualifying. Sir, category 1 we didn't mention. If any point not covered under 2, 3, 4, then it is covered under what? Category 1. So what is covered under category 2? Everybody be attentive. PM dot relief fund. 3. Government or charitable associations for promotion of family planning. The next one, sir. Olympic Association or Sports Association. Category 4. Charity, temples related, housing accommodation related, minority development related. Okay, category 4. But if you see here, sir, they said like 100% subject to qualifying limit. Now the question is, what is this qualifying limit? Sir, qualifying limit is nothing but 10% of adjusted gross total income. 10% of what? Adjusted gross total income. What is adjusted gross total income? You take gross total income. From there subtract capital gains under 112, 112A, 111A. Then all the other deductions except ATG. If any exempt income is there, that also subtract. Then you will get what? Adjusted gross total income. Let's say a person gross total income is like 50 lakhs. Gross total income is like 50 lakhs. From their capital gains to be subtracted, let's say some 15 lakhs. Then all other deductions together 5 lakhs. Exempted income nothing. Then the adjusted total income is how much, sir? 30 lakhs. Into 10% if you take na, 3 lakhs is what? The qualifying limit. 3 lakhs is the qualifying limit. Okay. So under category 3, you can claim 100%, but to a maximum of 3 lakhs. Category 4, you can claim 50%, but only to the extent of balance in category 4. Sir, follow this example, sir. Qualifying limit is how much? 3 lakhs. And then this person actually contributed for promotion of family planning, 2 lakhs. So this is what? Category 3. Okay, how much deduction can be availed with respect to category 3? 100% subject to 100%. Okay, 100%. So if you qualifying limit. So if 2 lakhs is adjusted, then balance how much, sir? Contribution, and then contribution to temple for renovation is there. It covers under what, sir? Category 4. It covers under what? Category 4. How much is the deduction available? 50% subject to qualifying limit. Now see. First category 3. 100%. 2 lakhs. Done. Now what is the balance in qualifying limit, sir? From 3 lakhs. First you adjusted category 3. 2 lakhs. How much is the balance in qualifying limit? 1 lakh. And the category 4 related is 2 lakhs na into 50%, which equals to 1 lakh. So usually what you think means, here also 1 lakh, here qualifying limit also 1 lakh. So you think like 1 lakh can be claimed as deduction. No. Category 4C. Amount contributed into 50%. Amount contributed into 50%. That means 2 lakhs into 50%, or qualifying limit minus category 3 deductions into 50. Qualifying limit is how much, sir? Here 3 lakhs. Minus category 3 deduction is how much? 2 lakhs. Into 50% na 50 only. So the deduction is here restricted only to 50, not 1 lakh. Sir, got this point, everybody? ATG deduction is available to every SSE. Which regime? Old regime. So Pakka, can we proceed? You guys are sleeping, huh? Hello. Then 80GJ, sorry, next 80GG, sir. 80GG is for with respect to what? Deduction with respect to rent paid. 80GG is about deduction with respect to rent paid. Where any rent is paid, then deduction is available. 80GG with respect to rent paid eligible for deduction. Okay, when if he is an individual and not claimed HRA exemption, if he already has HRA exemption, then not eligible for deduction. If he doesn't have HRA deduction, then he is eligible for deduction under 80GG. Okay, so eligible SSC being individual and not receiving HRA. How much is the deduction, sir? Actual rent minus 10% of total income, 25% of total income, or 5,000 per month, whichever is lower. Whichever is lower. So 80GG applicable to whom, sir? 80GG individual. See, individual. How much is the deduction available, sir? Conditions are what? He shouldn't be receiving HRA. Then, what is the quantum of deduction, sir? Actual minus 10% of total income, 25% of total income, or 5,000 per month, whichever is lower. Okay, and this is also available only in which regime, sir? Old regime, not available in new regime. Not available in which regime? New regime. Then 80GJ. 80GJ is for what? Any SSE who has contributed for what? Scientific research and rural development. For scientific research, carrying out scientific research, or for carrying out rural development, if any amount is contributed, then 100% is eligible for deduction for every SSE. However, more than 2000, it should be paid in any mode other than cash. Sir, even for 80G also, 80G donations also, donation in kind not allowed as deduction. If in cash more than 2000 should be paid through other than cash. Should be paid through other than cash. So 80GJA is available to every SSE who is not having PGBP. Sir, what happens if he has PGBP income? If he has PGBP income, then 35 CCC, CCD, there only sections are there. There itself will avail deduction. He will not come to 80G series. Old available, new not available. Then 80GGB deduction with respect to contribution given by companies to political parties. Okay, any contribution made by company to political parties. If it is an Indian company, then 100% of the amount contributed is eligible for deduction and should be paid through any mode other than cash. Okay, it could be directly to the political party or electoral trust, or they could have spent some expenditure with respect to advertisement of political party. With respect to political party. So 80GGB is available only to whom? Indian company. And it is available only under which regime, sir? Old regime. Under new regime, it is not available. New regime, it is not available. Then 80GGC, deduction in respect of contribution given by any person to political party or electoral trust. 80GGC. Sir, I mean for companies specifically 80GGB is there. For individuals HUF there is no separate section. That's why AGGC is for every SSE. And the deduction is available under only old regime, not under the new regime. 80GGC. Then 80JJA. 80JJA. Deduction with respect of profit and gains from business of collecting biodegradable waste. Biodegradable waste. Sir, SSE could be any person, any SSE. But in the business of what? Collecting and processing biodegradable waste. They should collect the waste and from that they generate power, fertilizers or biogas. Then how much deduction? 100% of their profits are eligible for deduction, and this deduction is eligible for 5 assessment years to encourage this kind of businesses, okay, which will process biodegradable waste. The deduction is available under 80JJAA. How many years, sir? 5 years for every SSE. 80JJA. Every SSE should be engaged in what? Treatment of biodegradable waste. Okay, and it is available only under which regime, sir? Old regime. New regime, it is not available. New regime, it is not available. How much is the deduction? 100% of profits. For how many years? 5 years. Then 80JJA. Important one only, sir. 80JJA. What is about 80JJA? First, to be under 80JJA, SSE should be any person engaged in business. SSE should be any person engaged in business and to whom tax audit is applicable. Sir, 80JJ deduction is given to encourage companies or businesses to provide much more employment opportunities. Okay, for them, anyhow salary they'll claim as an expense in PGBP. Sir, I paid 40 lakhs as salary. 40 lakhs I'll claim as expense in PGBP. Okay, but additional to that, 30% of employee cost, additional employee cost, I can claim as deduction here. Why? So that means 40 lakhs, 100% expense I'll claim in what? PGBP. Extra 40 lakhs into 30%, 12 lakhs also I can claim expense. For 40 lakhs actually spent, I can claim expense of how much? 52 lakhs. Why they are doing that one? Because if they do like that, my profit will be reduced, tax will be reduced. It's an incentive to me for recruiting more employees. Okay. So on what they'll give deduction? Employee cost 30%. That also additional employee cost. Additional employee cost, na? The cost incurred on recruiting new employees. I mean, the salary I paid to the newly recruited employees. That is called additional employee cost. How long this deduction is given? Let's say previous year 24-25 new employee joined. With respect to that employee, previous year 24-25, 25-26 and even in 26-27. All the 3 years we can claim deduction with respect to that employee. Additional employee. Additional employee cost. See, the total emoluments paid exclusively to additional employees, the total emoluments paid, emoluments na, salary plus all perquisites, all the benefits together to employees more than 25,000, then they are not eligible for. Okay, when the total emoluments is like more than 25,000, they are not eligible for C. The total emoluments paid are more than 25,000 per month, then they won't be treated as additional employees. When they are not participating in PF, not eligible for additional employee cost. When they worked for less than 240 days, not eligible for additional employee cost. However, for footwear, apparel and leather industries, instead of 240 days, we'll check only 150 days. We'll check only how much, sir? 150 days. See. Sir, on 1st April 2024, 400 employees are there. In between 80 joined, but 90 left. On 31st March 2025, how many employees are there, sir? 390 employees are there. So during the year we hired 80 employees now. On this 80 JJ is available? No. Why? Because there is no overall increase. From opening to closing there should be an increase. So here that is not there, so not available. Okay. Let me change. There are like 120 employees joined and left 20 employees left. So on 31st March 2025, what is the closing balance, sir? 500 employees. So even though we recruited 120 employees, how many are eligible for additional employee costs, sir? Only 100, because opening to closing 100 only now. Out of this 100, 10 employees salary is greater than 25,000, whereas 90 employees salary is like less than 25,000. So then this 10 employees not eligible. Out of this 90, 30, for 30 PF is not there, for 60 PF is also there. Okay, so these are eligible. Out of this 60, again we should check what, how many days they worked. Okay, 50 worked for more than 240 days, whereas 10 employees worked for less than 240. These are not available, only 50. And for this 50 also, the salary should have been paid in any mode other than cash. I mean through account paycheck, account pay draft, electronic clearing system only. Okay, now these 50 employees are treated as what? Additional employees. For them, you should find out how much salary paid into number of months they worked. Okay, this is the additional employee cost. On this 30% is allowed as deduction. Okay, so to consider as additional employee, what are the conditions? From opening to closing, there should be overall increase. Emoluments paid should be less than 25,000. Should be participating in PF. Employed for more than 240 days. In case of footwear, apparel and leather industries, 150 days is also enough. Are able to understand, everybody? Okay. And the one more thing, sir, this is available as deduction in only both old regime as well as new regime also. 80JJ is available even in both old regime as well as new regime. 80JJ deduction is available in both old regime as well as what? New regime. Then 80LA, not a much important section, sir, for us. Deduction in respect of income of offshore banking units in deduction in respect of income of offshore banking units in IFSC, International Finance Service Centers. And sir, just like as how the normal companies are encouraged to do exports by creating SEZs, even for banks also, IFSC, International Finance Service Centers are there, which are like SEZs only, but for financial institutions. Now banks, if they earn any income from offshore units, the banking units which were located outside India, okay, and then units which are located in IFSC, their profits are eligible for 100% deduction, sir, for a period of 10 years. Then ATM, offshore means outside India. ATM, deduction in respect to intercorporate dividend. What is intercorporate dividend, sir? Intercorporate dividends, sir, these are like group companies. One company gets dividend and again it pays the dividend. It receives dividend and again it pays dividend. Then they are eligible for deduction under ATM. Okay, ATM. Okay, let me write down, sir. ATLA. Especially for banks, financial institutions, Old regime, it is available. New regime also for companies only, sir. Even under 115 BAA also it is eligible. Under 115 BAA, they can avail deduction under 80 LA. Then 80M. 80M. What is the condition under 80M, sir? It should receive dividend and it should pay dividend. Dividend will be paid only by whom? Companies. That also which companies, sir? Domestic companies. Okay, 80M deduction is available only to what? Domestic companies. C. Domestic companies. Domestic companies. So it is available only under which regime, sir? Old regime. But under new regime also, companies under 115 BAA, 115 BAB are eligible for this deduction. 80M. 115 BAA or 115 BAB, they are chosen companies. Then also 80M deduction is available. Yes. Anyhow, LA and M are not applicable to individuals, na? Simply. But Lavanya, we can't say like straight away new, because for companies under new regime, 3 sections are there: 115 BA, BAA, BAB. Okay, but it's not available in all the 3 sections in new regime, only in certain cases. Okay, that you will understand more deeply when we go to assessment of companies topic. Then 80P, not a much important section, sir. 80P, deduction with respect of income from cooperative societies. 80P is with respect to what? Cooperative societies. Cooperative societies. Old regime na available, and even in new regime for societies also it is allowed. How much, sir? It is like 80P, 100% deductions available on their income, sir. Like when they provide credit, cottage industry, agri industry, when they purchase seeds within the cooperative society to their members, if they are providing any services and earn income, 100%. When they get any interest or dividend, 100%. When they have any warehouse income, 100% deduction available. In any other consumer cooperative society, na maximum deduction 1 lakh, others 50. Not an important section for us. Then 80QQB. 80QQB is about what, sir? Royalty income. 80QQB is about what? Royalty income. And 80QQB deduction is available only to whom? Individual plus resident. Resident plus individual. And then again, it is available only under old regime. New regime, it is not available. So what is 80QQB? Where a person earns royalty because of his work of literature, artistic nature or scientific nature, not being textbook. Sir, I wrote a DT book. On that, if I get any royalty, I will not get any 80QQB deduction. You should write a book or artistic or scientific nature, then you will get deduction under 80QQB. How much, sir? The maximum amount deduction is like 3 lakhs if the consideration is received like lump sum. I given the rights of my book and I got lump sum amount, then 3 lakhs can be claimed as deduction. Whereas I will get yearly some income as royalty. Yearly some amount as what? Royalty, based on the number of copies they publish and so. Then in that case, gross royalty receipt or 15% of sale value, whichever is lower. But for us, sir, maximum lump sum point only asked. Maximum deduction is how much? 3 lakhs. Then 80 RRB, deductions with respect to patent. Eligible SSE. SSE being resident individual plus true and first investor. 80 RRB. SSE should be what, sir? He should be a inventor. He should be the inventor of that particular technology. And then he should be a resident individual. How much is the maximum deduction available? 3 lakhs. Yes, old only. Then QQB and RRB, sir, both. If the income, the royalty income is earned from outside India, if SSE is resident, available for deduction only. Sir, SSE should be resident. The royalty income may be from India or even from outside India, still eligible for deduction. If it is from outside India, that amount should be repatriated to India within 6 months to claim deduction. Repatriated within how many months, sir? 6 months to claim deduction. And then it also has to be convertible in, it has to be received in convertible foreign exchange. Only when these conditions are satisfied, then eligible for 80 RRB deduction. Okay, then 80 RRB resident plus individual only available in what? Old regime. New regime not available. Then 80 TTA and 80 TTB. 80 TTA, 80 TTB. 80 TTA, sir, available to whom? Individual and HF. What is available, sir? Interest on savings bank account deposit is eligible for deduction from bank, cooperative society, post office. How much? 10,000. 80 TTA. 80 TTB is available for resident individual who is a senior citizen. Then the deduction is available not only on savings bank interest, even on FD interest also. How much, sir? That also maximum of 50,000. So 80 TTA is for individual and HF, whereas 80 TTB is only for resident individual. Okay. And both these are available only under what regime, sir? Old regime only. New regime, both these are not available. So once again, TTA, how much? 10,000. Savings bank interest. It could be from bank or cooperative society or post office. Then TTB, resident individual plus what? Senior citizen. Then how much, sir? 50,000. It could be savings bank interest or even FD interest. Then the last sections are here. 80 IA. Deduction in respect of PGBP from an undertaking enterprise engaged in infrastructure, road, sports. Sir, 80 IA itself, the series 80 IA itself is for what? For companies which are making so much of investments which are related to Indian infrastructure related, roads, bridges, rails, highways, projects, water supply projects. How much is the deduction available, sir? 100% of profit and gains for 10 out of 20 years. Whereas they are into any other project other than road, bridges, rail, highway projects, water supply projects, then 100% is eligible, but only for 10 years out of 50. Here 10 out of 20. Then 80 IAC. Deduction with respect of PGBNP income derived by an eligible startup. Which is eligible startup, sir? 80 IAC. 100% of their PGBP income is eligible for deduction for consecutive 3 assessment years out of 10 assessment years. If they are like eligible startups, they should have been incorporated between 1st April 16 to 31st March 2025. Their turnover should be less than or equal to 100 crores to claim this deduction. Then 100% of their profits are eligible for deduction for a period of 3 years consecutively out of first 10 years. Sir, if you see, out of all these for individuals and HF, which sections are available under new regime, sir? CCD subsection 2, CCH subsection 2, JJA. Only these are available for individual and HF under new regime. See, under new regime, what is available, sir? 80 CCH subsection 2, individual. 80 CCD subsection 2, eligible for individual, new regime. Then 80 JJAA is eligible for all under new regime. Then 80 LA for companies only, banks only, eligible under new regime. 80 M again related to domestic companies, related to what? Intercorporate dividend, that is also eligible under what? 80 new regime. With this, we completed what deductions. Next chapter, sir, we'll take a break. Okay. Sir, in return of income chapter also, basics and deductions, we didn't solve any questions. And questions are not to be solved also. Why? Because basics and deductions will not come as a separate question. They'll form part of some other full-fledged questions only. They'll become part of some other full-fledged questions. So that's why you need not to solve the questions from there. Then return of income chapter also. From this chapter also, there won't be a 7 marks question. Maximum there will be MCQs only. So I will focus much on what? The concept alone now. Okay. See. 139 subsection 1. 139 subsection 1 talks about what? The persons who has to file the return of income. A company and partnership firm including LLP has to file return of income mandatorily. Company, a partnership firm including LLP shall file the return of income mandatorily. Then other assessees, who are called other assessees like individual, HUF, AOP, BOI, local authority, AJP, these kind of people. They have to file when their gross total income exceeds, not net total income, sir. Gross total income exceeds basic exemption limit before providing 54 series exemptions. Before providing what? 54 series exemption. What are 54 series exemptions? Under the capital gains chapter, there are like 54 series exemptions. So before claiming those exemptions, if the gross total income of an assessee exceeds basic exemption limit, then the return of income has to be filed. Then he does not fit into any of those two. I mean, he is a R&O, resident and ordinary resident individual. His gross total income exceeds basic exemption limit. Now, obviously, he'll file return of income from second category only. So his gross total income is within basic exemption limit, but he is acting as a beneficial owner of any asset located outside India. He is a beneficial owner. What does it mean by beneficial owner? He is not the legal owner, but the benefit will comes to him only. He is not the legal owner. On record, someone else is there, but he is acting as a what? Beneficial owner and as signing authority in any bank account outside India. Then even though his gross total income is within basic exemption limit, he has to file the return of income. Then he is acting as a beneficiary of any asset. He is not the beneficial owner, but beneficiary. What is the difference between beneficial owner and beneficiary? Sir, beneficial owner, he only given the money to buy that asset. But legally it is on someone else's name. Then he is called beneficial owner. Beneficiary, let's say father formed a trust. Okay, and donated money to trust. And the trust with that money purchased a building. And to this trust, the beneficiary is like son. Okay, now this son also has to file return because he is acting as what? Beneficiary. He is acting as what? Beneficiary of any asset including financial interest which is located outside India. So when you need to file return of income, company firm mandatory. Others if your gross total income exceeds basic exemption limit before giving 54 series exemptions. If you are a resident and ordinary resident, if you are having beneficial owner, if you are acting as a beneficial owner of any asset which is located outside India and has signing authority in any bank located outside India, and you are acting as a beneficiary of any asset located outside India, then you are a person who entered into these kind of special transactions, then also you need to file return of income. What are those? You deposited more than 1 crore in current account you have more than 1 crore deposits in current account, then you have to file return of income. Your total foreign travel expenditure is greater than 2 lakhs. Your total electricity expenditure is greater than 1 lakh. Your total deposits are more than 1 crore. Your total foreign travel expenditure is like more than 2 lakhs. Your electricity expenditure is more than 1 lakh. Whereas your sales turnover from the business is more than 60 lakhs. But the gross receipts from profession is more than 10 lakhs. Understand? Aggregate deposits in current account in a previous year is more than 1 crore. The foreign travel expenditure is greater than 2 lakhs. Electricity expenditure is more than 2 lakhs. Sorry, 1 lakh. The total sales and turnovers in business is more than 60 lakhs. The total gross receipts of profession is more than 10 lakhs. And then the aggregate of TDS and TCS during the previous year. The aggregate of what? TDS and TCS during the previous year in case of the person is greater than or equal to 25,000. Whereas for senior citizen now more than 50. For you, the aggregate TDS or TCS deducted or collected is more than 25,000 or equal to 25,000. You should file what? Return of income. Whereas if you are a senior citizen and the TDS or TCS collected or deducted is more than 50,000, then also you should file what? Return of income. Then the deposits you made in one or more savings account of the person in aggregate is greater than or equal to 50 lakhs. The total deposits you made is more than 50 lakhs. Then also you should file what? Return of income. Savings bank accounts are this is like more than or equal to 50 lakhs. Okay, what are the reasons, sir? When you have foreign travel expenditure greater than 2 lakhs, deposits in current account greater than 1 crore, electricity expenditure more than 1 lakh, TDS or TCS more than 25,000, deposits in savings bank account more than 50 lakhs. Okay, where okay, then turnover greater than 60 lakhs in case of business or profession. Sorry, business. In case of profession greater than 10 lakhs, in all these cases also return has to be filed mandatorily. Then if it is a trust, if SSC is a trust, then also return has to be filed where the total income before the exemption under section 11 exceeds basic exemption limit. If it is a political party under 139 subsection 4b and the total income before exemption under 13a exceeds basic exemption limit. If it is a university, college, association or business trust or investment fund under 139 4d, mandatorily they should file. So trust na total income exceeds basic exemption limit before giving exemption under section 11. Political party, again before giving exemption under section 13a has to file return of income if it exceeds basic exemption limit. If it is a university, college, association, business trust, investment fund, then also it should file return of income mandatorily, okay, irrespective of basic exemption limit. Then if it is a research association or news agency or any institution where the total income exceeds basic exemption limit, then due date of filing return of income. What are the due dates of filing return of income, sir? If transfer pricing provisions are applicable, 30th November of assessment year. If at all it is a company or there is a requirement of audit under income tax or any other law, or if it is a partner of firm, sorry, is this point important, sir? He is a partner of a firm and to the firm audit is applicable. To him audit is not applicable. To the firm audit is applicable. Is a partner of a firm to which audit is applicable. And his SSC himself audit is applicable or company, then 31st October. In any other case, 31st July. In any other case, what? 31st July. So, transfer pricing applicable na 30th November. Company or any other person to whom audit applicable 31st October. Even to a partner of a firm, if audit is applicable to firm, then also 31st October. In any other case, 31st July. What happens if written is not filed, sir? If written is not filed, fees under section 234F is applicable. 234F. How much is the fees under 234F? If the total income is within 5 lakhs, then the fees is like 1000. Otherwise, the fees, I mean, if the total income is more than 5 lakhs and he has furnished return delayedly, then the fees is how much, sir? 5000. Consequences. If at all he didn't file return of income, what happens, sir, within the due date? Best judgment assessment can be initiated. Interest under 234A interest will come. Penalty under 271F will come. Certain losses can't be carried forward. Which losses, sir? That we'll discuss again. Chapter 6A deductions also cannot be claimed. Certain losses can be carried forwarded, and chapter 6A deductions also can't be claimed, and even 10A exemption also can't be claimed. Okay, then various forms of ITRs. ITR 1. ITR 1 is applicable to a person for whom there is only salaries income, one house property income, and IFOS except casual income. He should have salaries income, house property income, IFOS except casual income, and the total income is up to 50 lakhs and agriculture income is up to 5000. Total income is within 50 lakhs and agriculture income also within 5000. ITR 1. ITR 2 for individuals and HUF who are not having PGBP income. Individual and HUF, if they are having PGBP income, then ITR 2. ITR 3 is applicable for individual HUF and partnership firm having income under the PGBP head. Having income under the PGBP head. Individual HUF partnership firm having income under the PGBP head. Then ITR 4. ITR 4 is applicable to individuals only if they are residents, HUF partnership firm having income under the head PGBP and declared what? Presumptive taxation. What are called presumptive taxation provisions? 44 AD, 44 ADA and 44 AE. Okay, and their agriculture income is up to how much? 5000. Agriculture income is up to 5000. Then these are the other points, sir, when ITR 4 is not applicable, because usually if you are a person having PGBP income, then for you what? ITR 4 is applicable. Then for you ITR 4 is applicable. So individual HUF and partnership firm having PGBP head income and declared under presumptive taxation scheme, then then ITR 4 is applicable. However, sir, the ITR 4 form is not applicable in case of the following points. Not only this, sir, even ITR 1 also they can't file if these points are there. What are those points, sir? If they have any assets located outside India, if they have signing authority in any account located outside India, if they have any income from any source outside India, if they are acting as a director of a company, or if they have held any unlisted equity shares at any time during the previous year, owns more than one house property, has brought forward loss or loss to be carried forwarded under any head of income, or accessible to tax, any part of that in on which TDS is not deducted, is eligible for relief under 90 or 91 DTA, has income under 115 BBE casual incomes, or has income of nature specified in 17 subsection 6 on which tax payable or deductible as the case may be. Okay, if these are the cases, ITR 4 is not applicable. Then ITR 5. Who has to file ITR 5, sir? For a person other than individual HUF company, person who are filing ITR 7. Okay, that means firm can file under. Okay, sorry, firm will be filing under ITR 3, sir, other than firm also. Okay, AOP, BOI will be filing under ITR 5. ITR 6 is for companies, other than companies claiming exemption under section 11. ITR 7 is for person including companies who required to file return under 139 4A, 4B, 4C, 4D, 4F. Who are 139 4A, 4B, 4C, sir? These companies like trust, political party, university, college, association or business trust, research association or news agencies. These people has to file return under ITR. And the last one, ITRV. What is ITRV, sir? If a person filed return, then an acknowledgement will be given, okay, as a proof that the return has been filed. Such ITRV will be given in income tax return verification form. Hello all. Are you there? Good evening. Sir, I am just not explaining in depth return of income also, because I think most of you know this chapter, return of income, right? I'm justly, it's like more of like me reading only. So thinking like a revision for you. Mode of furnishing income tax return. Sir, how the return has to be furnished? Paper return, sir, but physically through paper furnishing is mostly not allowed now. Only in a specific case, that also for senior citizens, okay, that also for senior citizens. See, individual whose age is 80 years or more and furnishes either ITR 1 or ITR 4, for them only any mode allowed. I mean including paper mode. Rest all, you cannot file return through paper mode. Okay, mode of filing, paper return, electronic return with digital signature. I mean, you will file the return online and you will put your DSC attached. Or then through transmitting the data in the return electronically and thereafter submitting the verification of the return in form ITRV. This is like first you will file return online, plus this acknowledgement copy ITRV will be there, na? That you will sign and post it again to the CPC, Central Processing Center. Okay. Then the last one, sir, you will provide everything, you will submit everything online only, and you will verify it through EVC code. I mean, you will get a OTP to your Aadhaar linked mobile number, or if you have mobile and internet banking, then with the bank you are linked, there will be a code given, sir. With that, you will be verifying your return. So, what are the modes of filing returns? Are paper return or electronic return with digital signature. Electronic return, but the ITRV will be again sent physically with a sign, and transmitting the data electronically, again electronic filing only with a OTP verification. These are the modes of filing. For companies, sir, they should only file electronically with a digital signature attached. Companies and political parties. Other three modes are not allowed. For companies and political parties, they should file the return electronically and they should attach DSC. For firm, LLP, individual and HUF, if audit is required, then also, sir, audit required, company, political party, they should file the return online and verify it through DSC, digital signature. Then individual whose age is greater than 80 years, either he is filing ITR 1 or ITR 4. In that case also, any mode, I mean online filing with DSC allowed, paper return allowed, online filing with physically sending ITRV to CPC, or online filing plus OTP verification, that is also okay. Any other persons, then any mode is allowed other than prescribed paper mode, Then 26A statement. Sir, very important, sir, 26A statement. Okay, not for exams, this 26A statement, but for our practical life, 26A statement is very much important. Any income on which if TDS is deducted, if any advance tax is there, sir, with respect to you, if any TDS deducted, TCS collected, advance tax any paid, already if any tax is paid, either self-assessed tax, all those parts will be reflecting to you in where 26AS. And even from GSTR 3B, the details also will be reflected in 26AS. Even certain specified financial transactions from your credit card payments will be reflecting in 26AS. and refund issued by the department will also be reflecting in 26 years. So 26 years is a format where you could see the advance tax you paid, TDS, TCS collected. If already any self-assessed tax paid, that one also you could see in 26 years. If any refund issued, that also will be reflected in 26 years. Turnover reported in GST, in GSTR 3Bs, that also will be reflected in 26 years. And the details of specified financial transactions will also be reflected in 26 years. Then, what are the functionalities available at e-filing portal? So through e-filing portal, you could view 26 years. If any return is filed, you could file that return, and you could even view that return also or download that return also afterwards. Pre-filled JS1. What is pre-filled JS1? Sir? Usually in this CMS tax consultancy offices, they use a software to file return. How it works now? They'll use a software. First, they'll ask some article student to prepare in Excel format. Then from the details of this Excel format will be updated into this software. What this software will do, it verifies and checks for error. Okay, if after rectification, after rectifying everything, through software only, we will connect to what? Connect to e-filing portal. So this software will generate a file in JSON format. It's a system readable format that will be uploaded in the e-filing portal. Then return is done. Sir, but I don't have this software. Then how to do? In income tax websites, sir, there are certain utilities. They could be Excel utilities, kind of utilities. You'll download this utility, fill that. I mean, whatever you prepared in Excel format, that you'll fill into this Excel utility. Check errors, rectify them. Then finally, this would be converted into a JSON format file. This file, you log into e-filing portal and you update there. Nothing but what is JSON? Nothing but it's a file which could be read by the system. Not like a normal file. This is file which could be read by the system. Download pre-filled JSON. Then e-verify the return. Okay, return has to be e-verified. Then generate EVC to verify return OTP. Then add or disengage any CA. Add or register as representative any person. Sir, if audit applicable now, you should add CA or disengage CA. You could add any register of representatives. Then file of returns. Filing of returns in response to notice under 139 subsection 9. Linking of Aadhaar, e-proceedings. Filing of appeal to Commissioner of Income Tax if any appeal has to be filed. Updation of digital signature, refund issue, validation of bank accounts, if any profile updations, all these can be done through what? E-filing portal. Okay. Then 139 subsection 1C. Central government may exempt class of persons to file return of income. Who can be exempted, sir? Central government by notification can specify such kind class of persons to be exempted. Who are those? If he is a specified senior citizen, resident having 75 years or more, and he should have only pension income and interest income. And the pension also should be created to the same bank account, interest also in the same bank account. Pension income and interest created into single bank account of a specified bank. Then senior citizen files a declaration And to the senior citizen, whatever is the tax payable that would be declared as TDS by the bank under 194P, then he need not to file return of income. He is exempt. What are the conditions? Resident, senior citizen, age 75 or more, having only pension income and interest income, that also from the pension credits into the same bank and the interest also in the same scheduled bank. Then he has to file a declaration stating like he is not filing a return of income. Then the bank will deduct TDS on all his incomes, including the pension credited and the interest. Okay, under 194P, then such senior citizen is exempted from filing return of income. Then loss return. When a loss return has to be filed, sir, return of income is required to be filed up to due date given under section 139 subsection 1 to carry forward following losses. Okay, only when the return of income is filed, the following losses can be carried forward. What are those? Specified business loss, loss from activity of owning and maintaining race horses. So you will just grow horses, you will not conduct horse races. Capital loss, I mean capital gains head loss, if any PGBP loss, these losses can be, sir, IFOS loss, anyhow not carry forward, not eligible for carry forward. So we have house salary said no loss, house property not mentioned here, PGBP covered, capital gains covered, IFOS anyhow can't be carried forward. Okay, so these losses can be carried forwarded only if return is filed within the due date. Even return filed after due date, so this point you have to remember. If return is filed after due date, then set off is possible, but carry forward alone is not possible. Okay, if return is filed after due date, it's not both set off and carry forward is not possible. Only carry forward is not possible. Set off is possible. Set off is possible. Then, if any house property loss and unabsorbed depreciation is there, they can be carried forwarded even return of income is filed lately. Even though return is not filed within the due date, house property loss and unabsorbed depreciation. And not only unabsorbed depreciations are along with it, unabsorbed expenditure on scientific research and capital expenditure on promotion of family planning. These three and house property loss can be carried forwarded even the return is filed on or after the due date. Okay, loss can be carried forwarded even if return is filed after due date if it is there is a genuine reason and delay is condoned by, sir, I plan to file return at due date 11 p.m. I started filing, but system server issue is there. So even though I tried multiple times, it couldn't be filed. I could file only at 2 a.m. next day. But 2 a.m. next day, already return date has been expired now. So usually I can't carry forward my losses, right? But if at all, it is a genuine reason. Yes, genuine reason. And I'll apply to the following people. Principal Commissioner of Income Tax or Commissioner of Income Tax. PCAT na Chief Commissioner of Income Tax. PCCAT na Principal Chief Commissioner of Income Tax. CBDT na Central Board of Indirect Taxes. So if I apply to PCAT or CAT, where the loss I wanted to carry forward is up to 1 crore. So this point I am saying because after 1st October, where the loss to be carried forward is more than up to 1 crore, I should get the permission from whom? PCAT or CAT for condonation of delay. If the loss is above 1 crore but up to 3 crores, then I should get the approval from CCAT. Above 3 crores, I should get from what? Principal Chief Commissioner of Income Tax. CBDT in no case needed. Then, belated return. What is belated return, sir? If return is filed after due date, then that is called as belated return. Simple, sir, to remember also. Sir, today your birthday, tomorrow your birthday. If today if we want to wish, we'll wish advance happy birthday. Tomorrow, normal happy birthday. What if I remember it on day after tomorrow? Then I'll be wishing you with belated happy birthday. That means after that birthday, if we wish, belated happy birthday. Same way, after the date of filing return, if return is filed, it's called as what? Belated return. Belated return means, can I file it after 5 years, 10 years? No. The return has to be filed within a specific time. What is that? 3 months prior to the end of relevant assessment year or before completion of assessment, whichever is earlier. Whichever is what? Earlier. 3 months prior. So when assessment year completes? 31st March of 2026 for the current assessment year. Further, 3 months prior. 3 months prior, it is how much? 31st December 2025 or the assessment completion date, whichever is earlier. By then I need to file what? Belated return. Then revised return. When a revised return has to be filed, sir, if there is any omission or wrong statement in return filed under 139 subsection 1, 3, 4, then SSC can go for what, sir? Revised return. Okay, by when revised return has to be filed? 3 months prior to the date of completion of assessment year. 3 months prior to the completion of assessment year. That is like 31st March of assessment year, 3 months prior. That means 31st December 2025, considering the current pre-assessment year. Or completion of assessment. Before this, I should file what? Revised return. When I'll go for revised return, sir, if there is any error or omission in the original return, loss return, or even in the belated return, if there is any mistake, I could file a revised return. Once revised return is filed, then original return will get nullified, sir. Okay, the revised return filed itself will have validity. The first filed returns and all will not be considered. And revision can be made for any number of times. But understand, sir, if at all you filed return consequent to notice under 142 subsection 1, it can't be revised. Okay. Then the concept of defective returns. What is called defective return, sir? Defective return, it has some problem. What is the problem? It was not filed in prescribed form. That means for you ITR 3 is applicable. You filed in 4. For you, you should file return in ITR 7, but you filed in different form. Then defective return. Second one, there are certain annexure statements and columns which has to be filled, but you didn't fill. The annexure statements and columns in the return has not been filled. Then proof of tax payment is not attached with the return of income. The proof of tax payment, if you paid any tax, proof of tax payment is not attached. Or tax audit report under 44AB is not submitted. If any of this done is not carried out, then it is what? Defective return. Return not filed in prescribed form, annexures not filled, tax payment proof not attached, or 44AB tax audit is not conducted. Then return is defective. If it is a defective return, what to be done? AO shall intimate the defect to the SSC. AO shall be intimating such defect to the SSC. And SSC has to reply to that within 50 days. 15 or extended time. If it does not rectify, then the return file will be considered as what? Invalid, void ab initio. Invalid, void ab initio. So then the next one, sir, PAN. Requirement of PAN. Every person who is accessible to tax, if at all for you tax has to be computed, then you need to apply for PAN before 31st May. If you think you have tax liability, for you tax computation has to be made, then you should apply for PAN by 31st May. Then every person carrying on business and profession whose total turnover or gross receipts exceeds or likely to exceed 5 lakhs. Every person carrying on business or profession, turnover exceeds or likely to exceed 5 lakhs. Then also before the end of financial year, before the end of that financial year, return has to be furnished. Then resident person Who enters into financial transactions of aggregate 2,50,000 or more, being a director, partner, principal officer of such person, on or before 31st May of the immediately following financial year. So first, for you, tax is assessable. You should apply for PAN before 31st May of the assessment year. If you are carrying on business or profession and you believe like your turnover is going to exceed 5 lakhs, then also you should apply for PAN by 31st March. Let's say any other person, okay, if it enters into financial transactions more than 2,50,000, then that person should apply PAN, and that person related director, partner or principal officer shall also apply for PAN. By when? By 31st May. Okay, applied PAN. Where the PAN should be mentioned, sir? The PAN should be mentioned in all the returns. If you file any income tax return, PAN has to be mentioned. In all challans of payment of tax, in challans, it has to be mentioned. In all documents related to specified transactions, PAN has to be mentioned. Where there is a sale or purchase of motor vehicle other than two-wheelers, when you purchase motor vehicle other than two-wheelers, PAN has to be mentioned. Returns, challans, documents related to specified transactions. When you are opening a current account, PAN is required. When you want to apply for credit and debit card, PAN is required. When you want to open a demat account, PAN is required. Then, when you are making any cash payment to hotel or restaurant, which is greater than 50,000, PAN is must and should. You should give PAN details. When you are incurring cash for payment of foreign travel or purchase of foreign currency in a day more than 50,000, PAN is needed. The cash purchase of bank drafts, pay orders and bankers checks is more than 50,000. Then also cash purchase of bank drafts, pay orders and bankers check is more than 50,000. Then also PAN has to be quoted. Where the deposit with bank, post office or NBFC, in a single time it is more than 50,000. Aggregately if it is more than 5 lakhs, then also PAN has to be quoted. Then prepaid instruments. I mean, if you are buying any stamp papers, stamps, and the amount you paid is more than 50,000 in a day, PAN has to be provided. For payment of mutual funds and units, more than 50,000, PAN needed. For payment of debentures and bonds, more than 50,000, PAN is needed. For RBI, payment to RBI for bonds, more than 50,000, PAN is needed. Cash deposit in bank, cooperative bank, post office in a day, more than 50,000, PAN is required. Where there is a contract for purchase or sale of securities, contract for purchase or sale of securities, and it is greater than 1 lakh per transaction, then also PAN is required. Purchase and sale of unlisted shares more than 1 lakh, PAN is required. Life insurance premium, more than 50,000 paid, PAN is required. Purchase and sale of immovable property more than 10 lakhs or stamp duty value more than 10 lakhs, PAN has to be quoted. Understand? Let me tell you once again. When you are filing returns, when you are paying taxes, when you are buying a motor vehicle other than two-wheelers, when you are opening a current account with a bank or cooperative bank, when you are applying for credit and debit cards, when you are opening a demat account, when the cash payment is more than 50,000 in a hotel, foreign currency you purchased for more than 50,000 in a day, deposits in bank more than 50,000 in a day, then are aggregately more than 5 lakhs in a year. Prepaid instruments, na stamps, papers and all, you are purchasing for more than 50,000. Then also PAN is needed. Payment to mutual funds for units more than 50,000, PAN is needed. Payment for debentures and bonds of company more than 50,000, PAN is needed. Payment to RBI for bonds more than 50,000, PAN is needed. Cash deposit in bank, cooperative bank and post office more than 50,000, PAN is needed. Contract for purchase or sale of securities more than 1 lakh, PAN is needed. Purchase or sale of unlisted shares and securities per transaction more than 1 lakh, PAN is needed. Life insurance premium more than 50,000, PAN required. Purchase and sale of immovable property more than 10 lakhs, stamp duty value more than 10 lakhs, PAN is required. Purchase and sale of goods and services more than 2 lakhs, PAN required. Where any cash deposits and cash withdrawals more than 20 lakhs in a financial year, then also PAN is required. Are you able to understand, everyone? Hello all. What happened to all the other people? Then quoting of Aadhaar number. Whether Aadhaar number has to be quoted mandatorily or not. Yes. Aadhaar number has to be quoted mandatorily in application form for allotment of PAN and even in return of income. Aadhaar number has to be quoted mandatorily. Then every person who has been allocated PAN before 1st July 2017 shall intimate his Aadhaar number to such authority on or before specified date. Okay, sir, if he has already has PAN before 1st July 2017, what they are saying, they are saying like to link PAN with Aadhaar. In case failure to link Aadhaar with PAN, then the PAN will be made inoperative. And there is a fees also. Where a person fails to intimate Aadhaar number before prescribed date, he shall liable to pay fee up to 1,000. So what is the fee, sir? If we links PAN with Aadhaar by 2022 1st April, sorry, from 1st April 2022 30th June 2022, then the fee is like 500. After that it is like 1,000. However, linking of Aadhaar is not mandatory. If you are a person residing in Assam, Jammu and Kashmir, Meghalaya, if you are a non-resident, if your age is 80 years or more at any time during the previous year, and you are not a citizen of India, you are residing in Assam, Jammu and Kashmir and Meghalaya. Yes, I'll discuss now. Non-resident, age 80 years or more at any time during previous year, are not a citizen of India. Then tax return preparer. So tax return preparer na, sir, everybody can't file their return. So obviously they'll come to the tax consultant. We being a CS or CMA will file without being the tax return preparer also. But some graduation students who have did their graduation will also be running tax practice. So to have their recognition, they'll register themselves as tax return preparers. Even in income tax also such kind of scheme is there. GST return preparers. Okay, so who can be a tax practitioner, return preparer? Specified class of people can file their return through tax return preparers only. Okay, who are specified class of people? It means any person, company, other than company. Why? Company has to file the return on its own. Because an auditor is there, it can take help of auditor and it should file on its own. And any person to whom audit requirement is there, they should not file the return through TRP. Others can file the return through TRP. Who can be TRP? Any individual who is authorized to act as TRP by CBDT other than the following cannot be tax return preparers. Who? A CA can't be tax return preparer. A lawyer, legal practitioner can't be tax return preparer. Officer of a bank or any employee of specified class, these people can't become the tax return preparer. Then verification of return. Who has to verify the return? Very simple concepts of this also. Who has to verify the return? If it is individual, he himself. But he is like incompetent, mentally incompetent or not available. Then power of attorney, person competent to verify on his behalf. HF, any Karta usually. If Karta is not available, then any adult member of HF, need not to be co-partner, sir. Any adult member of HF. Parna usually managing partner. If managing partner not available, then any other adult partner. LLP na usually designated partner. If designated partner is not available, then any other partner. Company usually managing director. If managing director is not available, any other director. If company is taken up for liquidation, liquidator. If company is in for insolvency, then insolvency professional. Where the company management has been taken over by central or state government, then the principal officer of central and state governments. If it is a non-resident company, any person having a power of attorney. Political party na usually CEO. Local authority means principal officer. Any other person na person competent to verify. For 1 second, who has to file the return, sir? Individual himself has to file. If individual not present in India, any person on behalf of individual. HUF na Karta. If Karta not available, any other adult member of HUF. Partnership firm na usually it is managing partner. If no managing partner is available, any adult partner. LLP designated partner. If he is not available, any other partner. Company usually managing director. If he is not available, any other director. Company is into liquidation, liquidator. Company is into insolvency, insolvency professional. But the company has been taken over by central and state government. There may be a fraud or something in the company. Government taken over. Then principal officer. Non-resident company, the power of attorney. Political party, CEO. Local authority, principal officer. Any other person, a person competent to verify. Then section 140A, it is about for self-assessment. What is self-assessment? SSC is required to pay tax before filing return of income along with interest and fee. What is called self-assessment? SSC himself or with the help of tax consultant will compute his tax payable, compute his tax interest and files the return along with the tax payment. That is called self-assessment usually. But let's say if the tax paid at the time of self-assessment is not sufficient. Example, 234F fees payable is like 5,000. And then 234A, B, C interest payable is like 22,000. And the ultimate tax payable is like including surcharge plus cess is like some 1 lakh. Okay. Whereas the total tax paid is like 1,05,000. Tax paid is only 1,05,000. But the total payable is like how much? 1,27,000. How to adjust this? The tax paid first should be considered as adjusted for what? Fees. Then to interest. First, second. That means out of 1,05,000, 27,000 adjusted for fees and 234 ABC interest. The balance will be adjusted here. How much is there, sir? 88,000 will be, sorry, not 88, 78,000 will be adjusted towards tax. That means still 22,000 tax payable is there in the case of self-assessment. Hello? Done? This order important, sir. First you should adjust with what? 234F fees. Then 234A, B, C interest. Then with tax, including surcharge and cess. Okay, now we'll discuss about the concept of updated returns. Concept of what? Updated return. What is updated return, sir? See, you are a person, irrespective of whether you filed normal return or not, whether you filed the normal return 139.1, belated return or revised return, whether you filed or not, you can furnish what? Updated return. So updated return can be furnished irrespective of whether the original normal return is filed or not. Okay, done. First point, done. Updated return can be filed by any person, whether he filed the original return or not, within the due date, belated return or a lost return, whether he filed or revised return, whether he filed or not, he can file what? Updated return. Updated return filing time is like 24 months from the end of assessment year. You have time limit for filing updated return for how much, sir? 2 years, up to 24 months from the end of assessment year. Let's say assessment year ends on 31st March 26. From there 2 years, that means you have time till 31st March 28. Okay, when you are filing updated return, okay, you should definitely attach the tax payment, and you can file it only if the updated return leads to increase the tax liability. Sir, originally you shown your tax as 1,12,500 plus cess. Now if you wanted to file updated return, this tax should have been increased. Only if there is an impact of tax increase and you are paying that tax, then you can file updated return. If you wanted to remain the income same, if you want to reduce your income, or if you want to increase your losses, in those cases you don't have the option to file updated return. To understand, updated return can be filed irrespective of the normal returns filed or not. The time limit is like 24 months from end of assessment year, but it can be filed only when the impact is like there is an increased tax liability. Okay, then in these cases updated return is not allowed. When? If it is a loss return, if it impacts the reduction in tax liability, or it results refund of tax or increase in refund due, in those cases updated return is not applicable. And then when else updated return can be filed? In case of SSE himself, sir, for SSE, search under 132 or requisition under 132 has been initiated. Sir, what is search? If the ITO has reasons to believe that you are having in possession of certain undisclosed incomes, they believe that you are having some undisclosed incomes, then they'll come and do search. Requisition. What is requisition? Sir, you wanted to go for search, but nothing is there with SSE. Why? Sir, before you start searching itself, ED Directorate, Enforcement Directorate, FEMA, GST, those people already searched his premises, and whatever they found, they already seized. Now if you go for search also, nothing will found, because they already seized and those are available with the authorities. Now again you will not carry out search, you will request the other authorities to transfer those assets or to transfer those seized assets and records to you. That is called as what? Requisition. Understand, sir? My premises has to be searched. Then ITO comes, gives me a notice and searches all my personal places or professional related, then that is search. Second option, sir, to search, already 2 months back only GST people came, they searched everything, whatever the documents, goods, everything they seized and taken away. Now even if income tax person comes, there's nothing to seize here. So in that case it will be taken up, called as what, requisition. Okay, or survey under 133A. If these three, requisition or survey under section 133A is initiated, survey under section 133A is initiated, then there won't be an option to file updated return. Then, sir, search not carried out to me, example, search carried out to, example, Rajesh sir premises, or SCM faculty is there, na? Let's say search carried out at Rajesh sir premises. But okay, at Rajesh sir premises, they found certain gold, bullion, jewelry, something they found. But ITO, income tax officer, even found out that Rajesh sir is not the owner of those gold jewelry. Me is the owner of those gold jewelry. But search is initiated to whom? Rajesh sir. But the jewelry found is belonging to me. In that case, also I cannot go for updated return. Either for me, such survey requisition initiated, I can't go for updated return, or else someone else related search initiated, but that time they found assets which belongs to me, and also I can't file updated return. Okay, and then sir, what is the concept, sir? Updated return. Whether you filed the original return or not, you can file updated return. What is the time limit? Within 24 months from assessment year. What are the conditions? It should be accompanied by the payment of tax, and it can be filed only when the impact is there of increased tax liability. Updated return not allowed. If it is a loss return, or if there is a results into reduction of tax liability, or if it results into refund or increase in refund due. When not eligible, if such requisition or survey initiated, even if such requisition is made to some other person, but during the case of such, if any money, jewelry, bullion is found, and me being the owner, then I can't file updated return. Okay, then ITBA found out like that I am the owner of those assets, even though such is not initiated at my place. Then, no updated return shall be furnished by any person for the relevant assessment year. There already an updated return is filed. Once you filed an updated return, you can't again update the updated return, or else assessment, reassessment, or recomputation has been completed or pending. Then also updated return. Already assessment is pending, sir. You can't file updated return. Okay, or else if he ever has some information related to smugglers, Prevention of Money Laundering Act or Black Money Act, then also he can't file updated return. Then any info received with respect to such person under the DTA agreements, then also he can't file what? Updated return. Okay, now see the last part. What? Compute tax on income as per updated return. First, sir, whatever the income you wanted to show now, first compute tax on it. Updated return. Compute tax as per updated return. On that subtract advance tax. Already TDS and TCS is there. Sir, initially you didn't file return here. First time you are filing return. So, whatever the income you are reporting now, on that compute tax. Plus minus if any advance tax, TDS, TCS, EMT, MAT credit is there, na, subtract. Then interest 234A, 234B, 234C and 5,000 rupees penalty. Then you will get total tax before additional tax. Then where SSC has already furnished the return, then what you should do? Simple, sir. Again you will compute tax as per updated return. From there you will subtract advance tax, TDS, TCS. previously paid self-assessment tax subtract, then 234B and 234C. Why not 234A, sir? Because return already filed, na? Then 234A interest paid that time itself. Now again you need not to pay 234A interest now, so only 234BC and interest 5,000 if you add, then you will get total tax before additional tax. Simple, sir. If return is not filed, na, calculate tax normally. Adjust if any advance tax, TDS, TCS is there, adjust. Then 234A, B, C interest plus 234F fees, add. Then that is the total liability. Return is already filed before. Then also, whatever you are updating the return based on that income, calculate tax. From the advance tax, TDS, TCS, subtract, AMT, MAT, credit, all those. Then self-assessed tax at the time of filing return, if any is there, that also subtract. Then interest under 234BC also you should subtract. Then you will get the total tax before additional tax. Okay. Now just because you are paying additional updated return, you have to pay additional tax. Let's say on 10 lakhs, usually what is the tax, sir? 1,12,500 plus cess at a rate of 4%. Okay. $4,500. So total is how much? 1,17,000. On this 234 A, B, C plus 5,000 penalty. Let's say 234 ABC interest together another 30,000. If you add all this, how much you need to pay, sir? 1,52,000 you should pay. This is normal liability. If at all you filed return other than updated return also, how much you will pay? 1,52,000. But since you are filing updated return, you have to pay extra tax. This 1,52,000 plus extra tax. How much? The extra tax is dependent on when you filed updated return. If you filed within 12 months from completion of assessment year, one route, 24 months from completion of assessment year, after 12 but before 24, na, then another. Sir, how much is the excess one, sir? 1,52,000 na, excluding fees, 1,47,000. Okay, tax plus surcharge plus cess plus interest, 1,47,000. On this extra 25% you should pay. If at all the return is filed after due date but within 12 months from end of relevant assessment year. After due date also, which due dates are? 139, 4 and 5. That means 31st December of assessment year to within 12 months from end of relevant assessment year. If within this period the return is filed, then additional income tax to be paid is how much? 25% of the tax which we computed. If it is after 12 months from assessment year but before 24 months, that is like 50% of tax plus surcharge plus cess. So 1,47,000 plus 25%. If after 31st December of assessment year but within 12 months from end of assessment year. If it is after 12 months now, instead of 25, you should add how much? 50%. Are you able to understand everyone? Any doubt is there now? Updated return? Okay. So with this we completed even the returns chapter also, sir. Sir, before going into this chapter, let me tell you certain basic things. So, return is furnished. When the return is filed, Under 143 subsection 1, the system will do processing. 143 subsection 1 processing will be carried out. Under 143 subsection 1 processing will be carried out. If there is any defect or if there is any mistake identified during this processing, a notice will be sent. A notice will be sent. So here also they are checking, right? So at the time of return filing, there is what? Self-assessment. At the time of return filing, there is self-assessment. Then again, consequent to filing the return under 143 subsection 1, processing will be carried out. After processing, if any mistake is there, then a notice will be sent, and consequent to that reply, again there will be done. So here under 143 subsection 1, here there is one assessment is done. One assessment is done. Irrespective of, okay, 143 subsection 1 will be carried out mandatory. Then there may be scrutiny assessment under 143 subsection 3. There could be scrutiny assessment. Scrutiny assessment na AO will pick an assessee and do detailed verification. Scrutiny assessment. If assessee didn't cooperate for scrutiny, then there will be 144. Under section 144, there will be best judgment assessment. Under 144, there will be best judgment assessment. Where assessee didn't cooperated for scrutiny assessment, then what? Best judgment assessment. Okay, so self-assessment, 143 subsection 1, usually we call it as intimation. That time also the tax will be recomputed there. So that is also an assessment. Then scrutiny assessment or best judgment assessment. This many are there. Understand, sir? Here the system will check for any mistakes. Like let's say for example, ETC deduction you claimed 1,80,000. Sir, is it correct? No, right? Maximum ETC deduction you can claim up to how much? 1,50,000 only. If you claimed more than 1,50,000, then it is not valid. So such kind of mistakes will be identified and notice will be sent under 143 subsection 1 only. Okay, so this is one level of assessment. Then there is something scrutiny assessment and there is best judgment assessment also. This 4. Okay, so what you should understand, sir, there is self-assessment, there is 143 subsection 1 intimation, and there is even scrutiny assessment under 143 subsection 3 also. 3 are there mostly. If SSC didn't cooperated for scrutiny or didn't file return of income, then there may be even best judgment assessment under section 144. Now, advance tax means what? Advance tax means the tax paid in the financial year immediately preceding the assessment year. Let's say the assessment year is like 25-26. Previous year 24-25. If the tax is paid in previous year 24-25 itself, then that is called as what? Advance tax. Done. SSC is required to pay advance tax. When advance tax is applicable, sir, when the liability for advance tax is 10,000 or more. When the liability for advance tax is how much, sir? 10,000 or more. Sir, how do we check the advance tax? Whether it is 10,000 or more. First, there are steps. How we will check? First, we will estimate the current income and calculate the tax payable. And on that, we'll find out the tax, surcharge and cess. If any TDS, TCS is there, if any relief is there, all this will provide. Then the balance amount is what? The advance tax liability. If it is 10,000 or more, then advance tax provisions are applicable. SSC is required to pay advance tax if his liability for advance tax is more than 10,000. Greater than or equal to, SSC is required to pay advance tax if his liability for advance tax is like 10,000 or more. Exception: if SSC is a resident senior citizen and not having income under the PGBP, shall not be liable to pay advance tax. So usually advance tax is applicable where the advance tax liability is more than 10,000 or equal to 10,000. If he is a resident senior citizen and does not have PGBP income, irrespective of how much is his tax liability, he need not to pay advance tax. Then manner and computation of advance tax liability. Manner and computation of what? Advance tax liability. How do we compute advance tax? This is already discussed now. Then advance tax, sir, everything you, whatever you pay as tax in the previous year itself will be counted as what? Advance tax till 31st March. But for payment of advance tax, there are certain installments. What are those installments, sir? 4 installments are there, irrespective of whether they are companies or non-companies. What are those, sir? 15th June, 15th September, 15th December, 15th March. For April, May, June quarter by 15th June, 15th September, 15th December, 15th March. These are the 4 installments. By each installment, you should pay certain amount as advance tax. How much? By 15th June, you should pay 15% of total advance tax liability. Let's say advance tax liability is 1 lakh. Then by 15th June, 15%, that means 15,000 should have been paid. Then by 15th September, cumulatively now, whatever you paid here and what you paid afterwards, together by 15th September, it should be 45,000. Together by 15th December, it should be 75,000. And by 15th March, it should be 100%. 15, 45, 75, 100. These are the installments. Okay, then before going further, under PGBP, sir, there are something called presumptive taxation schemes. Under PGBP, there is something called presumptive taxation schemes. What does it mean by presumptive taxation schemes, sir? Okay, and sir, I am not explaining everything in detail, but just I want to give you the overview because now it's needed. 44 AD, 44 ADA, 44 AE. These are the 3 presumptive taxation schemes available. 44 AD is applicable to individual, HUF, and even for a firm, which is resident individual. 44 ADA is only for individuals, AE for any SSC. Here, they should carry out any business under 44 AD business except commission and brokerage business. Any business they can do except commission and brokerage. Under 44 ADA, they are professionals, notified professionals. 44 AE, they are into hiring, leasing of goods transport vehicles. Then presumptive income. Okay, sir, these are actually designed for small and medium sized business people. Small and medium sized business people. So to be under 44 AB, turnover should be less than or equal to 2 crores. Yes, there are exceptions, other points also there. Base person. 44 ADA, the turnover should be less than or equal to 50 lakhs. Whereas 44 AE, sir, the turnover is not the criteria, number of vehicles. Number of vehicles should be less than or equal to 10 in any day. Any day. So then, presumptive taxation scheme is like applicable. Okay, see 44 AD turnover less than or equal to 2 crores. 40 for AD, turnover less than or equal to 50 lakhs. 40 for AE, the number of vehicles is like less than or equal to 10 on any day. Okay, then presumptive taxation scheme is like what? Applicable. Understand? Okay. Sir, if presumptive scheme opted under 40 for AD, 8 percentage of turnover, in sometimes 6 percentage of turnover will be taken as the deemed profit. Will be considered as what, sir? Deemed profit. Whereas under 40 for ADA, 50 percentage will be treated as what? Deemed profit. 50 percentage will be treated as what? Deemed profit. Whereas under 44 AE, sir, per vehicle, for normal vehicles, 7,500 per month per each vehicle. Whereas heavy goods vehicle, na 1,000 per ton per month into number of tons of the gross unladen weight of the vehicle. That would be taken as the base. Based on that, the presumptive profit will be calculated. 40 for AD na 8 percentage or 6 percentage of turnover. ADA na 50 percentage. AE na 7,500 per month or 1,000 per month. 1,000 per ton will be considered as what? Presumptive income. Okay. Now what they are saying, sir, if SS, sir, will be discussing much more clearly tomorrow also. Okay. What is the point here? If SSE opts for 44 AD and ADA, then the due date of advance tax is 15th March. That means only one installment is applicable, 4 installments not applicable. 4 installments not applicable. Whereas if the due date of advance tax is like 15th, okay. If SSE has opted for 44 AD and 44 ADA, then the presumptive tax has to be paid only, sorry, the advance tax has to be paid only under the last installment. First 3 installments are not applicable. Where whom, sir? 44 AD and 44 ADA opted people, for them first 3 installments, 15th June, 15th September, 15th December are not applicable. Only 4th installment. If he opted for 44 AE, this one, then 4 installments are applicable. For 44 AD and ADA, only last 4th installment is only applicable. Understand, sir? Okay. So what are the installments are again? 15%, 45%, 75%, and then 100%. By 15th June, 15 percentage has to be paid. By 15th September, 45 percentage has to be paid. By 15th December, 75 percentage has to be paid. And by 15th March, 100 percentage has to be paid advance tax. Then any advance tax paid can be taken as credit, sir, and it could be adjusted with, okay, the credit of advance tax. Any amount already paid as advance tax can be adjusted with what? Tax payable. Can be adjusted with tax payable. Any sum other than interest and penalty paid by or recovered from an SSE as advance tax is treated as payment of tax in respect of the income of previous year, and rate will be given at the time of regular assessment. One second, sir. Advance tax. Advance tax. What the point we discussed? What are the points we discussed? Advance tax means what? The tax paid till 31st March of previous year. The tax paid till 31st March of previous year is called as what? Advance tax. Advance tax liability is how much? When applicable, when the advance tax liability is greater than or equal to 10,000, then advance tax is applicable. Then third one. What is the exception? If he is a senior citizen, resident senior citizen, and not having PGBP income, then advance tax provisions are not applicable. How to calculate advance tax liability? Based on estimate, calculate the tax liability, subtract TDS, TCS, and any relief is there, subtract, then you will get the advance tax liability. Then advance tax has to be paid in 4 installments. What are those? 15th June, 15th September, 15th December, and then 15th March. How much should be paid by 15th June? By 15th June, 15% of total liability. 15th September, 45%. 15th December, 75%. And by 15th March, 100%. This we need to check cumulatively, sir. And these 4 installments, only 4th installment is applicable where SC has opted 44 AD or ADA. And 4th installment only this 15th March installment only we should check in case of 44 AD and 44 AD. For others, okay, for 44 AE person, 4 installments are applicable. This is what we discussed until now. Now, interest under section 234A, B, C. When 234 will come? 234 will come where there is an interest for delay in filing or non-filing of return of income. 234B will come in case of non-payment or short payment of advance tax. 234C will come where interest is not paid within the specified installments. What are those installments, sir? 15th June, 15th September, 15th December, 15th March. Okay. Now, first we'll talk about 234A. Now, 234A interest. 234A interest. Sir, tell me, everybody, the basic formula for computation of simple interest. For calculating interest, what we need? Yes, this 234A, 234B, 234C, whatever it is. First, in 4th class, if I remember, if I am not wrong, in our school they teach us how to calculate simple interest in 4th or 5th class. There's a formula for it. What is that formula? Tell me that formula. The base formula for computation of interest. We learnt in childhood, sir. Simple interest formula, sir. Yes, PTR by 100. PTR by 100. P means what, sir? The amount on which we should calculate interest. T means what? Time. R means what? Rate. Okay. So P into T into R divided by 100. Okay. So rate, since it is given as percentage, we don't divide it by 100 straight away. P means what? Amount on which we should calculate interest. Time, for what time we should calculate interest, and rate. So rate under 234A is like 1% per month or part month also. Even for part of the month also, how much is the interest rate, sir? 1%. Then time and amount is needed. Okay, let me take it. So follow my example, sir. Very important these are. Sir, the due date of filing return is like due date equals to 31st October 2025. Okay. SSE filed return on 10th November and tax reported, tax return or shown in the return is like 4,30,000. 4,30,000. So at the time of filing return, he's shown his tax based on his self-assessment is how much? 4,30,000. Then under 143 subsection 1 or under 143 subsection 3, assessment is carried out. Assessment is carried. In the assessment carried, there is a assessed tax. I mean, the tax which is decided by the assessing officer is like 5,50,000. Now we should calculate 234A interest on what? On the tax amount. Tax amount. What tax we should take? Whether the tax which we have shown in the return or the tax which is assessed by the A owner. Sir, 234A interest has to be calculated based on assessed tax only. Based on what? Assessed tax only. It has to be calculated based on assessed tax. I mean on 5,50,000 only you should calculate what? Interest. But practical question. Sir, at the time of filing return, it is already delayed na. How much? 1 month delayed na. I mean part month, 1 month. So here you should calculate interest under 234A, right? But when you are filing return, do you know that your return will be taken for assessment, and in assessment they will be increasing your tax liability? Will you be expecting all this? No, right? So you don't know that 5,50,000 will come as your assessed income also, or assessed tax also. So as of now, you think only your liability is 4,30,000. So at the time of filing return, you will calculate interest under 234A only on this 4,30,000. But understand, the final 234A liability is on 5,50,000. So what you will do at the time of after assessment, again you will calculate 234A on this 5,50,000. Whatever you paid at the time of return, 234A will be subtracted. Sir, able to get my point, sir? 234A interest has to be computed on assessed tax or returned tax. It has to be computed on assessed tax or returned tax. Everybody, respond. Sir, your brain not able to process it. Assessed tax, right? Okay. But understand, at the time of filing of return of income, we don't know about assessed one. That's why we'll compute based on returned tax only. But ultimately, it has to be paid based on what? Assessed tax only. So, principal. What is the principal will take for computation of interest? Assessed tax. Assessed tax. But understand. But at the time of filing return, we don't know assessed tax. So we'll be computing based on self-assessed tax. For prima facie, when you are filing return, your self-assessed tax itself you assume like it will be the assessed tax also. If at all there is a deviation, then again you should calculate based on assessed tax. Whatever you already paid, that would be subtracted. Principal is what? Assessed tax. Then rate. Rate already said, sir. How much is the rate? 1% per month or per month. Then what is pending, sir? Time. Time. What is the time? See. Period for which interest has to be calculated. Period for which interest has to be calculated. From date after due date under section 139 subsection 1 to date of completion of assessment under 144. 144 na best judgment assessment. When can best judgment assessment be initiated? Where assessee didn't file return of income. Where assessee didn't file return of income. Then timing has two paras, sir. Return filed, return not filed. If return is filed, then what is the time limit, sir? The time is from next day of due date to date of filing return. To date of filing. If return is filed. If return is not filed, then next day to due date to Date of completion of assessment. Till what, sir? Date of completion of assessment. Date of completion of assessment. Sir, assessed tax time. Two scenarios. Whether return filed or not filed. The return filed after due date is one scenario. Return not yet filed is another scenario. If at least after due date return is filed, then next day of due date to date of filing. If return is not at all filed, then next day of due date to date of completion of assessment. The rate of interest will be 1% per month or part of the month. Okay. But for this assessed tax, sir, okay, see, for this assessed tax, if any TDS, TCS, MAT, AMT, DTA credit is there, subtract. If any advance tax paid, subtract. Relief is there, subtract. Then on the shortfall only, assessed tax minus TDS, TCS, MAT, AMT, advance tax. You subtract all this. On the balance only, you will be calculating 234A interest. Sir, everybody understood now? On what we should calculate 234A interest, sir? Assessed tax. But in questions, remember, at the time of filing return, we don't know assessed tax. So we'll be computing on returned tax only. But subsequently, when assessed tax is known, you should compute based on assessed tax only. So from the assessed tax or returned tax, you should subtract TDS, TCS if any is there, AMT, MAT credit if any is there, DTA credit if any is there, advance tax if any is paid, any relief is there, all those you should subtract. Then you will get the net tax payable, either from assessed tax or from return tax into time. What is the time? Next day of due date to date of filing return, if return is filed. If return is not at all filed, next day of due date to the date of completion of assessment into 1% per month or part of the month. See the point, sir. When SSC does self-assessment, you compute tax on your own and pay 234A interest. At this stage, interest is calculated on self-assessment basis only on declared income. When AO makes assessment under 143 subsection 1, 143 subsection 2 and all, then AO may determine a higher income. Now final 234A interest is recomputed based on what? Assessed income, based on assessed income. But the interest you already paid during self-assessment has to be reduced or adjusted. Okay, then rounding off, I already said the shortfall of tax. Sir, here we are finding out the assessed tax now. This has to be taken in multiples of what? 100 only. This amount on which we are calculating interest now, that we should take only in multiples of 100. The fractions has to be what? Ignored. Fractions has to be ignored. The shortfall of tax on which interest has to be calculated under 234A, B, C shall be rounded off to 100. Shall be rounded off to 100. Sir, everybody understood 234A na? Shall we go and solve a question, right? Question number 4. It's a study material question only, sir. If at all you are not having books, it's a study material question, but important, sir. Conceptually understand properly 234A. See, SSC A Limited B. Due date also they given 31st July, 31st October, 31st July. Date of filing return 4th December, 28th December not filed. Completion of assessment 1st March, 15th April, 15th February. Income which they shown as per return is 8,80,000. Assessed income is 9,10,000. Advance tax paid is 5,000. TDS 10,000 and tax paid along with return is another 6,000. Sir, here this fellow has returned income different. Assessed income is also different. So first we'll do return assessment. Ultimately 234A interest has to be calculated based on assessed income only. But first what we will do? We'll file return, then assessment, then there will be assessed income. So first thing we should compute based on what? Returned income. Based on what? Returned income. See, what is the returned income, sir? Returned income is how much? 8,80,000. That's what, right? Returned income is how much? 8,80,000. Okay. I'm not able to calculate tax, sir, because I don't have calculator now. That's why I'm taking directly from here. What is the tax liability before surcharge and cess? 38,000. What is the tax liability including cess, sir, on this 8,80,000? Tax including cess on returned income? How much? Tax including cess on returned income is how much? 39,520. 39,520 is the tax total. Yes, sir. From there, we should subtract what? If any TDS is there, advance tax paid is there, that we should do what? Subtract. Minus. Sorry, this is the tax that is done, sir. One second, sir. Pen is getting charged. Sir, are you able to clear till now? On assessed tax only we should calculate interest. But at the time of filing return, we don't know assessed tax. We'll only know self-assessed or the returned tax. On the returned tax, we'll be calculating 234A interest first. Okay. The returned tax is how much? 39,520. Now we should calculate what? 234A interest. How we'll calculate? From this 39,520, we should subtract what and all? They have TDS and advance tax. 15,000 subtract. How much it is like? 24,520. So on this 24,520, we should calculate what? Interest. How many months we should calculate interest? Sir, when here in this case return filed or not filed? Return filed, the given date of filing return. Then the timing is what? From next day to due date, I mean 1st August, till the date of filing return of income. So August, September, October, November, December. For 5 months we should calculate interest. 24,520 into 5 months into 1%. How much? You could see here also. 24,520 into 5 months into 1%. It is how much? 1,225 is the 234A interest here based on returned income. Then this is 140A, which we call it as like self-assessment. At the time of self-assessment, this is what you paid. Tax 39,520, 234A interest 1,225. Then 143 subsection 3 assessment. How much is the assessed tax? Assessed income. First we want what? Assessed income. How much is the assessed income, sir? 9,10,000 is the assessed income. So we'll take that one. 9,10,000. On this again we'll calculate tax including cess. If you can do tax on 9,10,000, sir. But since I don't have much time, I'm calculating, taking from it here. How much is the tax plus cess together, sir? 42,640 is the tax including cess. Now again 234A interest. What I should do? From 42,640, I should subtract what? Advance tax 5,000, TDS 10,000. How much it is like? 27,640 into. What is the delay? Sir, delay, the time remains always same. Return filed or not filed? Return filed. When return filed, what is the time period you should take? From the next day of furnishing the return till the date of furnishing return. Next day of due date to the date of furnishing return. So again 5 months. August, September, October, November, December. into 5 months into 1%. How much? 27,640 into 5. Sorry, sir, one mistake I did, sir, in both the questions. What is the mistake I did, sir? Here 39,520 I shouldn't, 24,520 I shouldn't take. Rounding of concept. What should I take? 24,500. Fractions has to be ignored. Here also, I shouldn't take 27,640. I should take what? 27,600 into 5 months into 1%. How much will be the interest, sir? 1,380. If at the time of self-assessment already if this 1220 1,225 is paid, then extra 1380 you need not to pay. From 1380 you will adjust 1225, balance only you will be paying. Balance only you will be paying. Clear, sir? Everybody, is it clear? What about the others? Others are not responding, sir. Very important points are easy pickings for us. So if you are having any doubt now, ask me now itself. Respond quickly, everyone. The same way we should do for what, sir? A limited also. The same way we should do for what? A limited also. Sir, for A limited, if you see, due date of furnishing return is what? 31st October. When they filed 28 December. How many days is the delay? 2 months. And then returned income is 5 lakhs, assessed income is 5,50,000. So there is a difference here. And advance tax paid 25, TDS is like 15,000. Then even for them also, you should calculate what? Separately. Okay, I am calculating for company also separately, sir. First, self-assessment under section 140A. For whom it is like company. What is the returned income? 5 lakhs. Returned income is how much, sir? 5 lakhs. What is the tax plus cess on this 5 lakhs, sir? Returned income is 5 lakhs only, na? Yes. Tax plus cess. Assuming 30% as tax, sir. So tax plus cess equals to 1,50,000 is the tax plus cess at a rate of 4% if you take. Total it comes to how much, sir? 1,56,000 is the total tax. Then 234A interest. On what we should calculate? 1,56,000 is the returned tax minus advance tax and TDS if any is there, 25 and 15, 40,000 if you subtract. How much? 1,16,000 into 1% into 2 months. That's what, right? 2 months. Why 2 months? From the next day of filing the return to the due date, 2 months. Okay. So how the interests are? 1,16,000 into 1% into 2 months. It is like how much? 2,320. 2,320. This is what self-assessed. Then based on 143 subsection 3 assessment. What is the assessed income? Assessed income. Assessed income is how much, sir? 5,50,000. Now again on 5,50,000. For 5,50,000 again we should calculate what? Tax plus cess. 30% tax plus cess. 30% tax plus cess. How much is the tax plus cess? 5,50,000. It is like 1,71,600. It's like how much? 1,71,600. Okay. From there again, 234A, now what we should do? 1,71,600 minus 40,000. How much it is like? 1,31,600 into 1% into 2 months. If you do, you will get again the interest. How much? 2632. 2632. So actually you should pay this, but initially you paid this na. Now you pay the difference. Enough. So are able to get this point, everybody? Yes or no? Okay. Then I'll do for the last person also. B. B, what he did, sir? What is the difference for these two? B. B, sir. The due date of furnishing the return is 31st July. But this fellow not yet filed return. Directly, best judgment 144 is only done on 15th February. As per assessment, 12 lakhs is his income, and on that 10,000 is the advance tax paid and TDS is the 3,200. So for B, we need not to compute twice because no return is filed. So straight away at the time of assessment only he will be paying interest under 234A. Okay, so for B also let me compute now. What is the assessed income? So straight away we can go to what? Assessed income, 12 lakhs. Assessed income is how much? 12 lakhs. On 12 lakhs, we should calculate what? Tax plus cess. What is the tax plus cess on 12 lakhs? Default regime. 83,200 is the tax plus cess. You can check also. 83,200 is the tax plus cess. Okay. Then we should calculate what? 234A interest. So you take 83,200 minus any TDS and advance tax is there na? Yes, advance tax 10,000, TDS 3,200. So how much? 13,200. 13,200. That means how much? 70,000 into how many months we should calculate? Sir, whether this fellow filed return or not filed or not filed. So not filed means what is the time we should take? From the next day of due date till the date of completion of assessment. Till the date of completion of assessment. So how many days? How many months? August, September, October, November, December, January, February. August, September, October, November, December, Jan, Feb. 7 months. So for 7 months interest at a rate of 1%, if you do, you will get the 234A interest. See, 70,000 into 7 months into 1%. So it is like how much, sir? 4,900 is the liability. Sir, are you able to get this point now? Only Swati is replying, the others are not. I don't understand whether you guys didn't understand the question or what's happening to you. Then we'll move on to 234B. So concept, if you understand clearly, then you will not do mistake in 234A, BC. Then 234B, interest for non-payment or short payment of advance tax. Interest for what? Non-payment or short payment of advance tax. 234B. Okay, advance tax is applicable. Any tax paid before the end of previous year is what? Less than 90% of assessed tax. Okay, so now for 234B also, sir, same concept. What is the interest formula, sir? PTR. So again, what is the principal? The principal is nothing but assessed tax. Here also assessed tax. Yes, at the time of filing return, we may compute based on self-assessed, but ultimately the tax has to be, the interest has to be computed on what? Assessed tax. It is ultimately to be payable on what? Assessed tax minus TDS, TCS, advance tax, relief, MAT, AMT. All these you will be subtracting. You will get the deficit. This into what is the rate? Again 1% per month or part of the month. The rate is again 1% per month or part of the month. This is also clear. Now what is pending? Time. Time. Again two cases. Two cases. Return filed one case. Return not filed but 144 done. Then another case. Third case, return filed and then 143 subsection 3 is also done plus. Then how to do? Sir, if return is filed, at the time of filing return, you will calculate interest from 1st April of assessment year to date of return. 1st April of assessment year to date of return. If return not filed, straight away assessment, then also 1st April of assessment year to date of completion of assessment. First April of assessment year to date of return. Why? 234B interest starts from 1st April itself, not from next day to due date. 1st April itself. Till when? Date of return, if return is filed. If a return not filed, then 1st April of assessment year to date of completion of assessment. If return is filed, then first calculate. Step 1, you will calculate like what? Assessed deficit. Okay, above we calculated deficit na. Deficit into 1% into 1st April of assessment year to date of return. We will calculate till what, sir? 1st April of assessment year to what? Date of return. First April of assessment year to what? Date of return. Then step 2. Sir, at the time of filing return, what you will do? You will pay self-assessed tax. I mean, out of total tax, in certain part is paid. Then what you will do? Step 2. Deficit. But this time you already paid certain amount now. So deficit minus. Sir, this you will understand only by solving a problem, sir. I don't want to confuse this step for you. Okay. So usually 234B interest has to be calculated from what? 1st April of assessment year till the date of filing return. If at all at the time of assessment, you should calculate from 1st April to the date of completion of assessment. Date of completion of assessment. Okay, let me take an example and explain you, sir. Or else let me take a question, sir. In workbook itself, I'll take a question. Question number 5, 6. Both are related to 234B only. Question number 5 and 6. Sorry, 5 we already did, na? No, right? 4 we did. 5. What is 5? A firm furnished its return of income on 30th June 2025, showing income 1 lakh. The return shows other particulars as follows: advance tax 20, TDS 1000. AO passed assessment order enhancing income by 5000 on 29th March 26. Compute interest under 234B. Sir, first this fellow will compute based on assessed only, sir. See, assessed income is 1 lakh 5000 because assuming he didn't file return, straight away we are calculating based on what assessed income only. 1 lakh 5 on the tax liability 31,500, cess 4% is 1260, total 32,760 is the liability. From there TDS already paid how much? 1000, and then you check 31,760 is there now. One more point I didn't say. 234B is applicable only when the advance tax paid is less than 90 percentage of the total tax payable, assessed tax payable. Sir, here assessed tax payable is how much? 31,760 into 90 percentage you do how much? 28,584. How much is the advance tax already paid, sir? 20,000. If the advance tax already paid is 90 percentage of assessed tax, then 234B interest will not come. If minimum 90 percentage of assessed tax also not paid as advance tax, then 234B interest will come. See here. Okay, so he checked what? So once again I am telling you, what is the assessed incomes are here? 1 lakh 5,000. If you take 1 lakh 5,000, on that what is the tax liability? 1 lakh 5,000 into 30%, 31,500. Just 4%, overall 32,760. From there, TDS. How much is the assessed tax payable? 31,760. Compare it with 90%. If on this 90%, not 28,584. If this amount is already paid as advance tax, then 234B will not come. But here it is paid, no, only 20,000 is paid. So there is a shortfall. So how much is the shortfall? 31,000. Sir, again understand. This 90% we did only for calculation purpose. Don't find out the difference between this 90% and 20,000. On that again 234B interest. Okay. So what is the difference, sir? 31,760 minus 20. How much? 11,760. You should ignore fractions. 11,000. So on 11,700 you should calculate interest under 234B. For how many months, sir? See, 30th, 1st April of assessment year till date of completion of assessment. How much, sir? When? 29th March 2026. Here 1st April 2025. How many months? 12 months. So for 12 months 234B interest has to be calculated here, which is like 11,700 into 12 into 1%, 1404. See, the same continuation question, sir. How shall your answer differ if SSE pays 10,200 as self-assessed tax along with return? Ignore 234C. See, sir, since in the next part they are talking about returned tax also, self-assessed tax also, now we'll compute separately. How much they might have paid at the time of return, how much they have to pay at the time of assessment. Originally, how much they shown as income at the time of returns are 1 lakh. How much? 1 lakh. So now we'll be computing tax on 1 lakh. So forget about assessed ones. Okay. Sir, are you able to get my point? Sir, easy questions only, sir. Small mistakes only, sir. Okay, when the students shown me the suggested answer, I mean their certified copies, I felt so bad about this question, sir, because they know everything about advanced tax. Simple, minute point mistakes only they are doing in this question. That's why I wanted to tell it so many times. Okay, are you able to clearly understand or not? Sir, forget about SSD tax for the time being. We only focus on what? Returned income. How much is the returned income, sir? 1 lakh. On returned income, what is the tax payable? Tax plus cess 31,200. 31,200. If you check here also 90 percentage, first you should deduct what? TDS 1000. How much it is? Like 30,200 into 90% you check and compare it with 20,000. No, they didn't have paid minimum 20 percentage also, minimum 90 percentage as advance tax. That means what? 234B will come. How much, sir? 234B from 31,200 subtract TDS 1000 and advance tax 20,000. How much is the difference? 10,200. On this 10,200, first we should calculate what? 234B interest. For how many months? Sir, they filed return on when? 30th June, they filed return. Firm furnished its return on 30th June. From when 234B interest starts? 1st April to 30th June. Na April, May, June. 3 months interest has to be calculated. See, 3 months means 10,200 into 3 months. How much, sir? 234B, 306. This is the interest as per what? Returned income. So total 10,200 tax they should pay and 306 234B interest also they should pay. Yes. But how much they paid, sir? Self-assessed tax 10,200 only. Now here comes another important point. Sir, how much they should have paid? 10,506. But how much they paid? Only 10,200. When only 10,200 is paid, how to adjust? When there is a deficit of tax payment, how to adjust? First, you should adjust with fees. Here, no fees is there. Second, you should adjust it with what? You should adjust it with what? The interest. So, the 10,200 paid will be first adjusted with this one. Then, out of 10,200 paid, 306 went for interest. The balance how much, sir? 9,894 will consider as paid for tax. Understand, sir? This point. This fellow paid only 10,200 as self-assessed tax. He didn't pay extra interest. So when he paid only 10,200, first adjust this for what? Interest. So adjusted for interest how much? 306. Then the balance 9,894 only he paid as tax. I mean still there is tax payable pending. Clear this point, everybody? See here also. Shortfall till June 25 is 11 days and thereafter SC has paid. Hello all. Okay, sir, I am calculating for you. First, I am calculating based on returned income. How much is the returned income? 1 lakh. Tax plus cess on it. How much? 31,200. 31,200. From there, minus TDS if you do, it is like 30,200. 90% of 30,200 is like 27,180. 90%. Did they pay 90%? No. Did they pay 90%? No. Advance tax actually paid is 20 only. So they didn't pay 90,000. So 234B applicable. So we are calculating what? 234B. How much? The difference of 30,000. Sorry, here, sir. Minus TDS 1000. Then you got 30,200. So what you should do now? 30,200 minus advance tax. How much is the difference? 10,200 into 3 months. Because they filed return in 30th June, whereas advance tax under 234B has to be calculated from 1st April. 3 months. Into 1%. 10,200 into 3 months into 1%. This is the interest. Okay, that's it now. How much for the interest we got here? 306. 306. Tax payable equals to, what is the total tax payable? 10,200 plus 234B 306. But the tax paid total is how much? 10,200. You can't adjust 10,200 to 10,200. Tax paid 10,200. First adjust to 306. Then with the tax. Then with the 10,200. So only 9,000. So only 9,894 is paid. Clear everybody? Okay. Then based on assessed income. Then based on assessed income. How much is the assessed income, sir? 1,05,000. On this again tax plus cess. How much is the tax plus cess on 1,05,000, sir? 32,760. That 90% criteria will not meet here also. So 234B interest has to be calculated. On what we should calculate 234B interest, sir? 32,760 minus TDS 1,000 minus advance tax 20,000. How much is there? 21,000. 11,760. We should calculate 234B interest. Yes or no? 11,760. Now 11,760 into 3 months into, okay, this is rounded off to how much? 11,700 into 3 months into 1% if you take. How much is the interest, sir? 351. How much? 351 is the interest here. Then how much is the tax payable, sir? As per assessment, how much is the tax payable? 32,760 minus 21,000 minus self-assessed tax we paid already some amount here, 9,894. 9,894. Okay, if you subtract this, how much is the difference, sir? 1,866. 1,866. This is still payable, sir. By the time of return, they should have paid 351. But when the assessment completed, sir, assessment completed in the month of March 2026. Now you should calculate the interest from June to March, the other 9 months. The other 9 months also you should calculate interest. Why? Because by 30th June, how much ever you paid, you calculated this interest. Post 30th June to 31st March, on this deficit 1866, again this is also 234B only. This is also 234B. Sir, many people will confuse here only. Sir, here first you should have paid on 11,760 into 3 months into 1%. 351 you should have paid beginning. Okay. This is the interest. At the time of return itself, you should have paid this, not paid now. Then, how much self-assessment is paid? From 32,760, 21,000 adjustment, 11,700. But you already paid 9,894 as self-assessment. So, how much is shortfall? 1866. Now, on this 1866, again you should calculate interest for 9 months. What 9 months? From 30th June to 31st March. 31st March. Okay, till the completion of assessment. Sir, why can't we take from 31st April? Sorry, 1st April, why we are not taking? Sir, for 1st April to June, we calculated here only. Total. From June to March, we are calculating separately. Sir, why can't we calculate everything at a stretch? Because out of this 11,760, 9,894 is paid on 30th June. So on this 9,894, you should calculate interest only for 3 months. Whereas for the balance 1866, you will calculate for the other 9 months also, because not paid till then. So 9 percentage into 1 percentage, how much it is, sir? This has to be rounded off. 1860 into 9 months into 1 percentage. How much? 162. So total 234B interest payable is how much? 351 plus 162. How much? 513. 513 should be paid. But already paid here how much? 306. From 513, if you adjust 306, the balance 207 is the payable. Balance 307 is the 207 is the payable. So are able to get my point, sir? Everyone? If you have any doubt, ask now itself. Then, sir, we are moving on to the other concepts here. 234C. 234C is for what? Sir, here, correct it, sir. 234C. 234C is for what? That's what. If you don't ask questions only, I'll doubt why there is a problem. Okay, if you ask questions now. See, Lavanya, clear. Returned income 1 lakh. On this tax is how much? I mean, the shortfall of tax is like, after calculating everything, we got some 10,200. 10,200. Spend charging is also getting over now actually. Tax here is like 10,200. Done. And 234B also we calculated how much? Some 302 na 306. Okay, this is done right till here. How much is payable? 10,506. Okay, but you paid 10,200. 10,200 adjusted here first, and balance 9,860 got adjusted here, 866. This is done right till here. No questions now, everyone? Till here any question or no questions? Sorry, okay, 9894. Till here no questions, right? Okay, done. The next point is what? Whether 234A, 234B has to be calculated on returned income or assessed income. Ultimately, it should has to be calculated on returned income or assessed income. Ultimately, the 234B has to be calculated on what? Returned income. Sorry, assessed income, not on assessed income. Ultimately, it has to be calculated on what? Assessed income. Okay. So if at all they have to calculate on assessed income from 1st April 24, a return filed on 31st, okay, 30th June 2024. Whereas assessment completed on when 31st March 25. This is what, right? Now, on that, by the time of return filing, you paid some amount as self-assessed tax. How much? 9,894 paid as self-assessed tax. Paid as self-assessed tax. Whereas ultimately it has to be paid on what? Assessed tax. Assessed income is how much? 1,05,000. On this tax plus cess comes to how much, sir? On this tax plus cess comes to how much? 11,760 after adjusting shortfall, after adjusting TDS, TCS, advanced tax already paid. How much here? 11,700. Okay. For all this year, how much is the shortfall? 11,700 into 3 months into 1% you did for this period. But on this day 9894 paid na. So for this period, why you again calculate interest on 9894? So you are subtracting 9894 from 11,700. So when you subtract 9894, then how much is the balancer here? How much is the balance? 1866. 1866. That also rounded off to how much? 1860 into 9 months into 1%. Got it, everyone? Still not able to process it, huh? Then you should solve 2 or 3 questions again, sir. Oh, that's what you are asking. Okay, okay. It will be 1800 only. Sorry. I'm wrongly taking as 1800, 1860. It is like 1800. We should ignore fractions of 100. Correct only. That is correct. 1800. Oh, Lavanya, your question is also same. Okay, sorry. It should be taken as 1800 only, not 1860. Clear now, everybody, this concept? Whole 234A, 234B, everything. Then 234C. Interest for deferment of advance tax installments. 234C. Interest rate is like for what, sir? What are the installments, sir? 15th June, you should pay 15%. 15th September, 45%. 15th December. So now I'm moving on to 234C. What is 234C? 15th June is one installment. 15th September, another installment. 15th December, another installment. And then 15th March, another installment. Okay. Then what are the percentages, sir? 15 percentage, 45 percentage, 75 percentage, 100 percentage. For 234A, if you remember, we are calculating based on assessed tax. 234B also we are calculating based on what? Assessed tax. Whereas 234C need not to be calculated based on assessed tax. It has to be calculated based on returned tax. 234C This 10%, 15%, 45%, 75%, 100%, all this will be checked based on what? Returned tax, not on assessed tax. Has to be calculated based on what? Returned tax. Returned tax. Okay, so if there is like assessed tax 1,20,000 and returned tax 1,05,000, you should calculate these amounts based on what? Returned tax. For AB, you should take the base as assessed tax. For 234C, you should take the base only as returned tax. 15 percentage, 45, 75, 100. If that amount is paid by that installments, then no 234C interest. Okay, this is not paid. Then you should check for minimum. Minimum na 12%, 36%, 75%, and then 100. See, this is to be clear, sir. If paid minimum 15%, let's say I am giving also, sir, actuals also. Actuals are like, here they paid 13,000. By here they paid 36,000 by here. By here they paid 80,000. And by here they paid 1 lakh. These are the installments. Let's say actuals. These are like actual. Now what we should do? We should find out the deficit. How do we find out the deficit is the next question. Okay. See. Sir, what is the returned tax, sir? 1,05,000. The returned tax is how much? 1,05,000. 1,05,000 into 15% means how much? 1,05,000 into 15% means how much? 15,750 they should have paid. 15,750 they should have paid. Yes or no? $15,750 they should have paid. Okay, but how much they paid? 13,000 only. No check. Whether at least 12% paid. Check. 1,05,000 into 12%. How much? 1,05,000 into 12% now how much? 12,600. Sir, actually they should pay 15,750. But what we are saying, like minimum 12% paid also enough. They paid 13,000, which is more than 12,600 na. So no 234C will not apply for this quarter. For this quarter, 234C will not apply. Then again we'll check. Sir, by 15 September. 1,05,000 into how much they should have paid? 45%. That means how much? 47,250 they should have paid. But they paid how much? 36,000. 36,000 only they paid. Okay. If at all 36% they paid now, how much is 36%? 37,800. Sir, actually they should pay this 147,250. But if they pay 37,800 also, will relieve them. Will not charge 234C interest. But this fellow paid only 36,000. Now 234C applicable. On what amount? On the difference between this 36,000 and 47,250, we need to calculate interest. Not between 37,800 and 36,000. Okay. So the difference is like what? 47,250 plus minus 36,000. That is like 11,250 into 1% into 3 months. For under 234C, for first installment 3 months, second also 3 months, third also 3 months, whereas fourth installment you will calculate interest only for 1 month. Okay. Sir, understand my problem here. Many people may do this mistake. They'll find out difference between these two, and on that they'll calculate interest. That's wrong. You should calculate interest on what? 47,250 minus 36,000, which is 11,250 into 1% into 3 months. Then 75 percentage. 1,05,000 into 75 percentage na. How much, sir? 78,750. They paid that or not? 78,750. Yes, they paid 80. So again for this quarter 234C is not applicable. Then by 15th March, how much they should pay? 100%. That means 1,05,000. But they paid how much? 1 lakh only. So what is the difference? 5,000. 100% na 1,05,000. Now 5,000 into 1 percentage into 1 month. So this will be the 234C interest calculation. Hello all, are you able to understand? Boys and girls, respond. Sir, 30 people are there, sir, but why you guys are not responding? I don't know. You guys are sleeping or what? Okay, so what? By 15th June, 15%. If they pay minimum 12 percentage also fine, no 234C interest. If at all they falls below 12 percentage, na, then the difference is like the actual and the 15 percentage. On that difference only will be calculating 234C. Second installment by 15 September, 45 percentage of returned tax they should have paid. If not paid, at least 36% paid also, then 234C interest will be relaxed. Okay, if not paid 36 percentage also, then find out the difference between 45 percentage and the actual. On that you should apply 234C interest 1 percentage for first quarter na 3 months, first, second and third installments you will always calculate interest for 3 months, whereas for the fourth installment you will calculate interest only for 1 month. Sir, everybody got this question, sir? Okay, let me show you one question, sir. We'll see the recent June 2025 exam question, sir. This is like recent June 2025 exam question. How easy question you see. Surya Limited Bhopal has a final tax liability of 15,60,000 for the year 24-25. It has paid advance tax in the following manner during the financial year 24-25. How much it paid? 3 lakhs, 2 lakhs, 4 lakhs, 4 lakhs. So overall, how much is paid, sir? 5, 9, 13 lakhs is paid as advance tax. But whereas the tax liability is how much? 15 lakh 60. So if you take 15 lakh 60,000 into 90 percentage, 15 lakh 60,000 into 90 percentage, if you do, how much, sir? 14 lakh 4,000 they should have paid minimum. But they paid how much? 13 lakhs only. So they didn't meet 90% criteria. So 234B will come or will not come? Will come. So what is the 234B interest, sir? The difference between these two. That means 2,60,000 into 1st April to 31st October is the return income. So that means April, May, June, July, August, September, October. For 7 months into 1 percentage if you do. 2,60,000 into 7 percentage into 7 percentage. Okay, if you do, how much, sir? 18,200 is the 234B interest payable. 234B is how much? 18,200. That's what, right? See. Then we'll calculate what? 234C. How to calculate 234C, sir? What are the installments? 15th June, 15th September, 15th December, 15th March. What is the returned tax? 15,60,000. Okay. Here by 15, 45%, 75%, 100%. So now 15,60,000 into 15 percentage na, they should have paid here how much? 2,34,000. 15,60,000 into 45 percentage na, by here they should pay 7,02,000. 15,60,000 into 75 percentage na, by here they should pay 11,70,000, and by here total 15,60,000. But there is a minimum clause also. What is the minimum amount? 12%, 36 percentage, and then 7,500. 7,500 we already did, so I am writing the same 11,70,000, and here 15,60,000. What is the 12 percentage? 15,60,000 into 12 percentage. So it's like 1,87,200. Here 15,60,000 into 36 percentage na, 5,61,600. So minimum they paid this also enough. What are the actual amounts they paid, sir? 3,244. Here, by here they paid how much? 3 lakhs. By here cumulatively they paid how much? 3 plus 2 na, 5 lakhs. By here cumulatively they paid how much? 9 lakhs. By here cumulatively they paid how much? 13 lakhs. Yes sir. Now first installment, see how much they should pay. 2,34,000. How much they paid? 3. So first quarter no 234C. Then the year. How much they should pay? 7,02,000. At least minimum they should pay how much? 5,61,600. They didn't even satisfy the minimum criteria. So 234C will come on what? 7,02,000 minus 5 lakhs. So 2,02,000 into 1% into 3 months. Then here, how much they should have paid? 11,70,000. How much they paid? 9 only. So they are short for 2,70,000 into 1% into 3 months. Here they should paid how much? 15,60,000. How much paid? 13. So 2,60,000 into 1% into 3 months. So on this is the interest calculation. You could see 6,660, 8,100 and 2,600. Okay, are clear everybody? Okay, then within 234C only, sir, next concept. Sir, when we are having incomes like dividend or deemed dividend, when we have incomes like dividend and deemed dividend, or when we have incomes which are taxable under that PGBP for the first time, when you are having winnings and lotteries or capital gain, these incomes these are unexpected incomes. Okay, let me tell you, sir. So 234C, initially for 15th June, 15th September, you need to pay. That you will be paying based on what? Estimates only, right? You will make an estimate. Based on estimate, you will find out how much is the installment amount payable under. Sir, If it is your business income, salary income, rent, these are regular incomes, so you can estimate them. But you can't estimate capital gain, dividend, or lottery ticket, or if you are having any new source of business for the first time, these you can't estimate. Let's say, sir, usually your business income is like 20 lakhs. That's what you will have. Okay, so on 20 lakhs, you will calculate tax and you will pay by 15th June, 15th September, 15th December, and 15th March. But the problem is now, in February month, you sold a land, and on that you got 30 lakhs capital gain. On that you got how much? 30 lakhs capital gain. That means your total income became 50 lakhs. Okay, so you should have paid tax on what? You should calculate a tax on 50 lakhs, and then you should have checked here 15%, 45%, 75%, 100. But you occurred, this transaction came only in February. You don't know that this transaction will happen in February. So only with respect to business. Let's say 20 lakhs into 30%, 6 lakhs is the tax. So what you paid? 6 lakhs related 15%, 6 lakhs related 45, 6 lakhs related 75 only you paid. But now you got 30 lakhs extra. Okay. So since you didn't know that one, you didn't pay. Now because of 234C installments on this capital gain 30 lakhs, which you didn't estimated initially also, you should pay 234C interest. It's a hardship on the taxpayer. It's a burden or hardship on the taxpayer. So to mitigate or to control these kind of situations, okay, what does it means? These four incomes, if you are having dividend, capital gain, lottery income, or business income for the first time, then 234C for this 15%, 45% calculations, you need not to consider them. From when you should consider? You should consider only from the next installments when the transaction is happened. Let's say transaction is happened in February. So for March 100%, you should take the business related plus capital gain related tax and check 100. Let's say it is happened in November. Then for this 75%, you should consider business and capital gains also. For the first and second, since you can't expect that there will be capital gains, you will not consider capital gains here. Only on business income, 15, 45. Whereas from November, capital gains there, na? So here 75% is on business tax, business income related tax, and on capital gain related tax. Here also 100% is related to business gain and capital gain related tax. Able to understand, sir? Okay. Then look at question number 9, sir. The same kind of question. Mati is a resident individual having income from business 14 lakhs. For the year ended 31st March, okay, he sold a vacant land on 15th February and long-term capital gain amounts to 6 lakhs. TDS is there of 30,000. He has paid advance tax as follows. We wanted to calculate what 234C interest and he has opted 150 in BAC. Sir, if you see, capital gains when it came, sir, 15th February. So you will consider capital gain only for the installment which is after 15th February. That means on 15th March only you will compute. I mean for the first three installments you will not consider capital gain. Let me solve this for you once again, sir. 15th June, 15th Sept, 15th March, and then 15th December. What is the total business income? 14 lakhs. On this tax, how much, sir? Tax payable on normal income is like normal income business 14 lakhs. On this tax is like 1,20,000. Business related tax is like 1,40,000. Then long term capital gain is also there, 6 lakhs. into 12.5 percentage. How much, sir? That would be another 75,000 plus cess at a rate of 4 percentage. 1,20,000 plus 4 percentage. Now it is how much, sir? 1 lakh 24,800. So this is how much, sir? 4 percentage na. This is like 1,24,800, right? And on this 75,000 plus 4 percentage na, this is 3,078,000. So total here how much is payable, sir? 1,24,800. But on this 1,24,800, TDS is there in the question, 30,000. So this TDS 30,000 will assume like adjusted for business income only, business related only. So 1,24,800, this returned, this business related tax minus TDS 30,000, if you subtract, how much, sir? 94,800 is the business related tax paid. So for 15th June, 15th September, for 15th June, 15th September and 15th March and 15th December, here 15 percentage of what? 94,800 you should check. Here 45 percentage of what? 94,800. Here also 75 percentage of what? 94,800. Whereas here 100 percentage of what? 94,800 plus this 78,000 also. Okay, if you add that 78,000 also, then how much, sir? It would be 1,72,800. You should check. Understand, sir? 15 percentage of 94,800, 45 percentage of 94,800, 74 percentage of 94,800. Whereas here 100 percentage of both business related and long term capital gain, because by 15th December long term capital gain also came, right? That's why. So total 1,72,800. Okay. How much if they paid also enough? If they paid 12%, 36, 75%, 100 is also enough. Then you will check how much is the actual. How much they paid are actuals by 15th June. By 15th June they paid only 10,000. By 15th September, they didn't pay by 15th September or 20th. So by 15th September also they paid how much? 10,000. Whereas by 15th December they paid how much? 1 lakh they paid. Whereas by here they paid how much total? 1,30,000. Now we should compare whether they paid or not, and balance you will be calculating 234. See interest. For understand everyone, is it clear? Guys, are you able to understand how to calculate here? Respond everybody. Hello, you guys are sleeping or what? Then 234D, interest on excess refund granted. Or if at all, you should get only 50,000 as refund, but they granted 70,000. You got excess, right? When you got this excess 20,000, you should pay back on the date you got the refund itself. You should have paid back on the date you granted itself. If not, you should pay interest at a rate of 0.5%. See, 234D. Refund granted to SSC. Later at the time of regular assessment, it is found that what? No refund actually due or refund was excess than that was due. First at the time of processing, they given refund. But at the time of assessment, they thought like refund shall not be given to you. In that case, you should pay back that excess refund amount along with interest at a rate of 0.5% per month or part of the month from grant of refund to till the date of regular assessment. Then 244A, sir. Department, I paid TDS, TCS, advance tax more than that of my liability. See, sir, actually, I'm getting refund because what I paid TDS, TCS, and advance tax more than that of my liability, and I paid return also within the due date. Then the interest has to be calculated under 244A at a rate of 0.5% per month. Okay, from when? 1st April of assessment year till the date of granting refund. Sir, I paid 1,50,000, sir. But my self-assessed is like only 1 lakh. So 50,000 I'll get refund now. On that 50,000, government has to pay me interest from when to when? 1st April to date of granting of refund. If I filed return within the due date. If I didn't file the return within the due date, then they'll pay interest only from the date of filing return till the date of refund. If I file return from 1st April, not file return, then from date of filing return to the date of granting refund, interest has to be calculated on the refund amount I am getting. Let's say, next, refund is out of self-assessed tax. Refund not just because of TDS, TCS and advance tax. Self-assessed only I paid more. In that case also, the interest I'll get, sir, 0.5% from when? Date of filing of return to payment of refund. Okay, sorry, date of filing of return or payment of tax, whichever is later, from that day to date of granting of refund. Then no interest is available, sir, in both the cases. When? If the refund I am going to get, okay, no interest I am going to get if the refund is less than 10% of the tax determined under 143 subsection 1 on a regular assessment. Understand, sir? As per assessment, my tax liability is like 1,40,000 into 10% now how much? 14,000. Let's say if my refund is less than 14,000, then I will not get any interest. Okay, if I get any interest on refund, that is taxable under that IFOS. And the interest which has to be paid to me can be set off by the government against any other taxpayer. Okay. Then 234F, 234E, E is for what? Fee for default in furnishing TDS and TCS statements. For you, TDS and TCS is applicable, and there is a delay in furnishing TDS and TCS statements, then rupees 200 per day fees you need to pay till the default continues. 234F, we already discussed, sir, in return of income chapter. So the total income is above 5 lakhs, then the penalty is how much, sir? Late fee is how much? 5,000. 234G. 234G is for what, sir? For these institutions like trust institutions approved under 35 subsection 1, subsection 2, 2A, 3 and 80G. Sir, all these institutions will accept donations. When they accept donations, they need to give a counter receipt to the other party. When they give counter receipt, the other party can claim deductions. So what they are saying, like, they have to file a statement with the PDGID system and issue a donation certificate to donor. By when it has to be filed? 31st May of the following financial year. If they didn't file it, 200 per day is the fine. Okay. However, the fee cannot exceed the donation which they have received. Donation received itself is 10,000. If the fee is 15,000, it's not correct. So the fee cannot exceed the donation they receive. Then interest for failure to deduct TDS. When the TDS is not deducted, then the interest rate is 1% from the date of such a transaction, date of credit or date of payment, whichever is earlier, we'll check na TDS. From that day till the actual date of deduction of TDS, interest has to be levied at a rate of 1%. So let's say salary paid on 1st May 2024, 1 lakh without deduction of TDS. Then when TDS has to be deducted on salaries are on the date of payment. So on 1st May 2024 they didn't deduct na. So from there and till the date of deduction, let's say they deducted the TDS on this 1 lakh on 1st November 2024. So till 1st November 2024 on this 1 lakh we should calculate interest at a rate of 1%. How many months? May, June, July, August, September, October, November. Okay, 7 months you should calculate interest. This is for what? Non-deduction of TDS. Then for non-payment of TDS, the deducted TDS, if it is not paid to the government, then the interest rate is 1.5% per month. It is how much? 1% per month for non-deduction. For non-payment, it is like 1.5% per month. Then TCS. If TCS is not collected, 1% per month, and non-remitted is also 1%. For TDS, sir, non-deduction 1%, non-payment 1.5. For TCS, for both non-deduction and non-payment is also 1% only. Then, where any demand notice is issued under 220 subsection 2, where any demand notice is issued after completion of assessment, assessing officer will give you a demand notice. Then within 30 days from demand notice, the tax has to be paid. Sometimes a lesser period may also be specified. Usually 30 days. Sometimes a lesser period may also be specified. If at all the tax is not paid within 30 days from the demand notice or the period specified, then on that also interest has to be calculated at a rate of 1% per month. Okay, 1% per month. Okay, for what period, sir? From the day immediately after 30 days till the date of actual payment. Till the date of actual payment. Then, sir, when it is applied to the Chief Commissioner and the Director General, they are empowered to reduce 234B, A, B and 234C interest. They can either reduce or waive off. When, sir, there is a search and seizure happened, and in the process books and accounts are seized. Books of accounts and cash has been seized. So he cannot compute his tax. So in that case, they can reduce or waive interest 234 ABC. Then seized sets and they seized the assets also. In the seized assets, cash is also there. And he doesn't have any other money to pay tax. Only the seized amount he has. And that is seized by the government. So he don't have money to pay tax. That's why he couldn't pay within the time limits. So in that case also. And he requested to the income tax officer also to adjust for taxes from the seized money. And they didn't did. In that case also, 234A, B, C can be wiped off or reduced if applied to Chief Commissioner or DGIT. Then, any income other than capital gains which was accrued for after the date of installment, that also for the first time, and he didn't anticipate that. Suddenly, I got some gift, sir. Lottery enough, and suddenly I got some gift, 10 lakhs. Gift tax is there. But I didn't anticipate that I'll get gift. But still, these installments has to be followed now. So in that case, they can give relaxation. Then the extra tax I'm getting is because of a retrospective amendment of law. But initially, I don't know. I followed the old law. But afterwards, they changed the law with retrospective effect so that my tax liability is changed. So because of that law change, I couldn't pay the tax at first correctly. So in that case also 234 ABC can be adjusted. And then I filed return of income voluntarily. No notice is given. I only filed voluntarily. Okay. And then at that time, I can ask for 234 ABC deduction. Okay. Board can grant relief under 234A, B, C. Waiver of interest can be considered only if the return of income is filed voluntarily without deduction by assessing officer. Gautam, whichever the chapters you feel like relevant, you can follow. Okay, so there are some chapters because the BCCA old version book and this book, some chapters might be relevant, okay, might be same for some chapters, whereas some chapters it might be different, and even workbook also. It's up to you. If you could follow this marathon by following those books and all, then definitely you could follow, no problem with it, because those are also with all the amendments there. If you cannot, or if there, see, I cannot say 100%, let's say some 40%, 50%. Workbook, it will not match many places. The question order, the questions I kept, and in the what the questions which were there in the old versions, workbook will mismatch. Concept books, sir, whoever the author, it's not about our version. If you take any other book also, concept book, maybe I keep concepts at one place, they may keep at a different place. But concepts will match automatically, whichever the book you follow. Workbook only problem comes. Okay. So if you feel like workbook you can manage, then follow with that book, no problem. Okay. So okay, sir. Thank you. Thank you all for being there for this long. I should appreciate your patience levels, definitely. Without any change, many students from the morning to now, they are giving answers to my questions and made this session engaging and not boring even to me also. Okay. So you should continue the same spirit for all the revision series days. Definitely we're gonna score big this time. Trust me, trust BCCA, trust the process you are into. Okay, you continue to. So what I want you to do is like, by before attending the next session, you should remember the tax rates and deductions. You should go revise the tax rates and deductions. Okay, and whatever the chapters we did today, go and solve each and every questions by tomorrow revision session. Then by the end of these 5 days, you'll be 100% confident in the TT. So we are not aiming for an easy paper, sir. Even though it's a tough paper, we are gonna get 55 minimum. That's our target. Okay, you revise now, definitely you'll remember. Okay, thank you all. We'll meet again tomorrow. And then last one, sir, if you feel it as useful, these sessions, share it with your friends. Gautam, I already replied for your question. You can follow any source. Workbook, there will be differences. No problem. Concept book, whichever book you follow, there may be difference in like 1 or 2 pages. One concept I'll keep here, one concept there will be in a different page. Otherwise, everything will remain same. But workbook, the problems I teach here, the problems which in the workbook may not match. That will be the problem. Okay.